Very good morning. You're watching India Market Open, and we're hoping that the week goes by where you feel like Trump and not Zelensky. At the end of it, when you look at your portfolio. Guys, morning. I mean,
good morning.
We'll of course talk about the setup, etc. But that clip of the Ukrainian head of state and the American head of state in the White House, I think, has broken all records of how two heads of state ever speak.
Yeah. Unprecedented.
Unprecedented for sure. And whichever side you may be in, I mean, it was like a boxer getting cornered in multiple ways. So, yep, interesting. I mean, for people who are living under the rock, they will get to hear this.
Yeah,
on our
and
channel.
people taking a humorous view of it also, right? You're talking about holding the cards and people making parallels to Uno games.
Yeah. No, so, I mean, whatever side you are on, you're definitely going to feel bad for Mr. Zelensky. And I think the question then really is this setting back any efforts to end the Ukraine-Russia war? Because that, at the end of the day, is the big ask and expectation from Donald Trump. But let's just get you to listen in to a clip of that interaction.
Please, you think that if you will speak very loudly about the war, you
He's
can...
not speaking loudly. He's not speaking loudly. Your country is in big trouble.
Can I
Wait a
answer?
minute. No. You've done a lot of talking. Your country is in big trouble.
I know.
You're not winning.
I know.
You're not winning this. You have a damn good chance of coming out okay because of us.
Mr. President, we are staying in our country, staying strong from the very beginning of the war. We've been alone, and we are thankful. I said thanks
you haven't
in
been
this
alone.
cabinet,
You
and
haven't
not
been
only
alone.
in this cabinet.
We gave you, through this stupid president, $350 billion.
You voted
we gave
for
you
your
military equipment, and your
voted
men
for
are
your
brave,
president.
but they had to use our military.
What about
if you didn't have our military equipment,
if
you didn't have our military equipment, this war would have been over in 2 weeks.
In 3 days, I heard it from Putin. In 3 days, this is something
maybe
new.
less.
In 2 weeks, of course, yes.
It's going to be a very hard thing to do business like this.
Again,
I tell you.
just say thank you.
I said a lot of times to American people.
Accept that there are disagreements, and let's go litigate those disagreements rather than trying to fight it out in the American media when you're wrong. We know that you're wrong.
But you see, I think it's good for the American people to see what's going on.
I understand, sir.
I think it's very important. That's why I kept this going so long. You have to be thankful. You don't have the cards.
Thankful.
You're buried there. Your people are dying. You're running low on soldiers. Listen, you're running low on soldiers. It would be a damn good thing. And then you tell us, I don't want a ceasefire. I don't want a ceasefire. I want to go and I wanted this. Look. If you could get a ceasefire right now, I tell you, you take it so the bullets stop flying and your men stop getting killed.
Of course, we want to stop the war.
But you're saying you don't want a ceasefire.
But I said to you,
I want a ceasefire.
with guarantees.
Because you'll get a ceasefire faster than an agreement.
Ask our people about ceasefire, what they think.
That wasn't with me. That wasn't with me. That was with a guy named Biden, who was not a smart person. That was with Obama.
It was your president.
Excuse me. That was with Obama, who gave you sheets, and I gave you javelins.
Yes.
I gave you the javelins to take out all those tanks. Obama gave you sheets. In fact, the statement is Obama gave sheets and Trump gave javelins. You got to be more thankful, because let me tell you, you don't have the cards. With us, you have the cards.
Okay, I think at this point Zelensky was wondering what cards and what game he's playing, but he was definitely losing at whatever game there is. Nevertheless, just a quick look at what global markets were like and how they panned out. Now, in Friday trade, US markets did rise. The Dow ended 600 points up, but just let's take a look at futures as well. Dow futures also doing okay. NASDAQ futures also doing okay. Remember, this is an important week as well when the tariff war actually begins in that sense. But if you look at Feb, key indices did mark losses through the month of February in US markets. For example, the S&P 500 was about 1.4% down. Dow was about 1.6% down. The NASDAQ 4% down. In fact, fears of geopolitical tensions have driven sharp moves in U.S. Treasury as well, and that on the back of that exchange we just showed you between Trump and Zelensky. The 10-year was at 4.24%. Oil prices have also ticked up after that showdown because, you get a sense, the fear now is that this Ukraine-Russia war may continue. The end of the conflict is not really as close as would have thought, because Trump at the end of it says on social media, let Zelensky come back when he's ready to make a deal. The Brent, in fact, at the $73 mark. Crypto, though, had a great weekend. After huge losses on Friday, nearly 8% down, Bitcoin was up 10% because Donald Trump has announced a strategic reserve for US, including all coins and Bitcoin as well. But like I said, it's an important week. The tariffs on Mexico, Canada, and China will kick in from the 4th. Tariffs will be key to watch out. In fact, Warren Buffett, it's rare of him to come out and speak, had this to say. He said tariffs are, we've had a lot of experience with them. He calls it an act of war to some degree, and say over time they're a tax on goods. I mean, the tooth fairy doesn't pay them. That's the quote from Warren Buffett. So I found that quite interesting to mark as well. Also an important week because jobs report for February will be out on Friday. It's expected to be weaker. So quite a bit to unpack over the weekend, but let's get Jeff Dennis in to help us break that down. Jeff, great to speak with you, and thank you so much. You know, even as we've all watched and rewatched that clip of Trump and Zelensky in the White House, my question to you is, what is the kind of impact this is going to have on the hope that the war between Ukraine and Russia ends soon?
I think it's very hard to say. I say this all the time about geopolitics, especially to do with this war. It's really, really hard to call. It was an extraordinary exchange and quite unprecedented. And I think Zelensky did a pretty good job keeping calm, frankly. I think where we go from here probably is eventually there'll be a deal between Ukraine and the US on these rare earth metals that the US wants to at least have some access to. But I don't see anything coming out of this argument in the White House that is necessarily going to bring forward a ceasefire. You've got to get Zelensky in the same room as Putin. You've also got to see how the Europeans are going to act and how much security guarantees they're going to provide. So it was a nasty spat, but I'm not sure it gives us a lot of clarity at all about how or when this war will end.
The other focus, of course, beyond geopolitics is US growth. In the latest data points suggesting that as early as the first quarter of this year, it's not going to look like a very pretty picture. What does that mean for equity markets, not just in the US, but for the rest of the world?
Well, we saw it last week, of course, with equity markets being very soft indeed. I am now getting quite worried about the state of the US economy. You've probably seen the well-known Federal Reserve Bank of Atlanta so-called nowcast model, which is calling at this point for a minus 1.5% annualized GDP number for the first quarter. So I think we may very well be looking at a negative first quarter. I think what's interesting about the data is that most of the weakness so far has been more in the soft data, the sentiment data, particularly consumer. The ISM services index was very weak, although you also got weak retail sales in January and a very soft unemployment claims data point last week. So it's going to be very important to see what the payrolls number are like this week. Now, I think what the market is doing, markets are smarter than all of us. They're getting ahead of this. And I think this big drop you've had in these equity markets in the past week in particular is really reflecting, above all, in my opinion, above all, nothing to do with geopolitics, nothing to do with Gaza or Ukraine, entirely, in my view, major worries now developing about the US economy, because economic actors, and particularly corporates, do not like uncertainty. And you've got uncertainty over tariffs, you've got uncertainty over taxes, let alone the geopolitics. And so I think you need some clarification how soft this economy is going to be before you start to see any sort of significant stabilization or rally in these markets. EM, by the way, last week, emerging markets were down 4.4% in dollars.
Jeff, good evening to you, Neeraj here. Been a really long time that we've spoken, so good talking to you. Would love to know how you think about the implications of the Chinese annual meeting in light of the fact that you're getting worried about US growth. And if US growth becomes a worry, if it brings rate cuts, etc., then money might move to EMs in general, which hasn't happened thus far. But also the fact that if China in this annual meet supports growth to the hilt, does it mean more money flows into China as we've seen in the last 3-4 months, or rather 2-3 months? And parallel to that, India has seen massive outflows over the last 5 months. You in your past role have looked at this very, very closely. When does this end? It's been, what, for $38 billion worth of outflows in the last 5 months from India.
A lot of questions there, if I may say so. I have a lot of skepticism about whether China is going to throw the kitchen sink at the economy with dramatic easing of policy, because they've not done that so far. They keep talking about it. I believe the big rally in China is because of positioning. I think it's because the market was cheap. It's still cheap, to be fair. And also a couple of important events. First of all, the new China AI model, which caught everybody out a couple of weeks ago. And also suddenly this meeting between Xi Jinping and some of these key business leaders. All of that created the impression, I think, that Chinese business leaders were getting back into the game, if you like. Now, this could go on for a while, but at the end of the day, the reason I'm very skeptical about China is because essentially you've got to get this economy going. You've got the property sector, you've got the lack of consumer spending growth, you don't have enough fiscal expansion to support the consumer. So I think the fundamentals still, to me, don't look great. Actually, what's very interesting, as of Friday night, EM's up 2% on the year, but if you take China out, EM's down 2% on the year. So the whole thing this year, if you like, is based on China. Now, where does India look like this? I'm not going to say anything different. I think the Indian fundamentals look far better than the Chinese fundamentals. I get it that you've had a lot of these outflows, and they may go on for a while. I think this is temptation amongst EM investors to compare India on the one hand with China on the other. Skeptical long-term about China, whatever it does in the short term. I still like the long-term India story, particularly because of the growth of the economy. And I think the scope down the road for the RBI to cut interest rates further.
Great.
All right. Thank you so much for that, Jeff Dennis there. So India's fundamentals look good. The street is not seeing it so far because of the kind of pain points that we've had in Friday's trade. But before you get to that, Alex, a couple of important things that have happened over the weekend to note, which is why when you look at the implied number this morning, about 70 points up, you have to keep that in mind. You had GDP data out after Friday's close, which was in line, some would say slightly better than expected. You've had the new SEBI chair take over, and then a soundbite from him, which was quite calming for the markets. We'll pay that out as well. So important to unpack all of those things. But let me come to the GDP data first. And 6.2% was the number that we had for third quarter. So in line with estimates, GVA came in as well at 6.2, in line with estimates. So compared to 5.4% in Q2, 6.2 is definitely better. Where the growth has come from is also important. Remember, the whole year's GDP number has also been increased to 6.5% from 6.4% as per the first advanced estimates. There have been tweaks to previous numbers that the government has done as well. Where has the growth come from? Clearly, government spending has gone up. Agriculture has performed better than expected. Manufacturing has been a bit of a disappointment, and services has been slightly below expectations. Just taking you quickly through what some of the brokerages are saying. BofA says it's a shallow recovery. They say GDP forecasts have been downgraded. Modest recovery to 6.2 year on year, but on an upgraded base. They have lowered their FY25 GDP growth to 6.3 from 6.5. And FY26 from 7% to 6.5. I thought that was pretty sharp, though they do say that supply side indicators are showing some good momentum. Nomura is also saying there's higher headline growth, but softer details coming in. Growth recovers, but is still cycling down. So all in all, a whole mix of views coming in. But GDP, first of all, could have been worse. That was one of the fears in the markets on Friday. So I think this will be a bit of a relief.
Yeah.
Most certainly. And I think the NSO estimates for Q4 seem a bit stretched, but be that as it may, 6.2 as Tamanna said, because Somit was mentioning that in the dealing rooms, the fear was, what if there is a miss?
Yeah.
Right now.
On the downside, yeah, correct.
Yeah, you could argue that maybe the selling was because of that or some other reason. But the fact that it is not a miss and has come in line should be a relief. Plus, it's trending higher relative to Q2. Anything would have trended higher relative to Q2, but it is looking good.
And I think it also lends credence to what we've been speaking about over the last few weeks. Neeraj, you made the point during the conclave as well, and other people have spoken about it, the capex spending picking up in December.
Since December, yeah.
Right? So some of
that we've not even seen the impact.
We've not seen.
Which
so I
we'll
said
probably see in Q4.
Some of that you would have seen in December, and you will see in Q4 as well. So it's not completely out of the question that you will see a strong number in the fourth quarter as the limited point.
I just want to mark out, and I don't know if we have that bite, maybe we can run it when we go to Indraneel Pal. The chief economic advisor saying Q4, the big driver for Q4 will actually be the Mahakumbh. I thought that was very interesting because we keep talking about the impact, but the fact that so many crores of people have gone for close to a month is going to have an impact. In fact, let's just listen in.
Huge spending that has happened in January spilling over into February associated with the Mahakumbh, where a huge 50 to 60 crores of people have visited and spent additional sums of money, and this can also add to GDP quite significantly from the expenditure side. So in that sense, the implied fourth quarter GDP growth number of 7.6% doesn't look that unrealistic. We speak today, we notice that the US stock market is significantly down, and the Indian market today has reflected that as well. But as a recent commentator, one of the long-standing observers of the Indian market, Mr. Chris Wood of Jefferies, earlier he used to be in CLSA, and he has said that from a long-term perspective, he continues to remain very positive on Indian stocks, and the growth numbers we have seen, including the revisions to previous years, validates the point he makes, which is about the long-term attractiveness of the Indian market at this stage. Notwithstanding recent volatility, which is partly driven by global developments and also partly driven by stellar gains of the previous years.
All right, so that's context ahead of the start of trade. Let's also talk about what happened in trade on Friday, and you saw heavy selling. Let's take a look at the flows data first, because this will give you a bit of a picture of what the institutions did. Foreign institutions net selling to the extent of 11,639 crore rupees. Domestic institutions buying to the extent of over 12,300 crore rupees. And a large number of large caps in particular saw very heavy delivery-based buying and selling over the course of Friday's session. The Nifty 50 benchmark has fallen very sharply on Friday, taking its fall in February to 3.6%. The mid-cap 150 and the small-cap 250 index have fallen 6.7 and 8.5% respectively in February. In fact, the fall from the 52-week high is now quite substantial. For the Nifty 50, it's reached close to 16%. For the Nifty Next 50, which is not something we look at very often, but we should, it's down about 27%. The mid-cap index is down 21% and the small-cap index close to 26%. Foreign institutions have sold 34,574 crore rupees in Feb, and they have been sellers for the 7th straight session. Now, only 5 of the Nifty 50 constituents gained in trade on Friday. HDFC Bank was one of them, gaining about 2% and providing just a tad bit of support, but you could have said that it was a bucket being thrown at a forest fire, so it wasn't too much in the way of support. IT auto stocks were punished on Friday. IT and auto index falling as much as 4% or more in that session alone. PSU banks, oil and gas, energy indices falling over 2% each. 64 out of the 500 Nifty 500 stocks falling more than 5% on Friday, and the market breadth tilted very firmly in favor of the declines. 7 stocks declining for every stock that gained. No sector ended in the green, but banks were relatively more resilient.
Maybe we see some of that playing out today. But, you know, we came 4 or 5% away from major supports, 15% down for the Nifty from highs, 25% for small caps. You would sense some support coming in, and the FI selling being so incessant. So, but the statistic is that the Sensex trailing PE ratio is now near COVID lows, right? So therefore, you would expect that that's probably a support zone, if you will. I spoke to a clutch of HNI investors, Smart Money, South Bombay Gang over the weekend, and they've bought aggressively in this mid space on Friday, including the cables and wires segment, by the way.
Interesting.
So that was the other interesting piece for me. And while autos seem to be in a slow lane, which is a bit of a worry, tractors are shining. But I was looking at the Nomura note today. Globally, except for North America and Japan, autos are sluggish. So India is not the lone ranger when it comes to weak auto demand. It's across the world except for NA and Japan. But tractors are doing well. So, and I'm sure Tamanna will expand more on it. So I'll just leave it at that. I do feel though, while Jeff Dennis is saying that China will not throw the kitchen sink at the economy, I think the China annual meeting outcome in the next 2 weeks remains a key draw. If China does make the sound bites positive, then it just enhances the allure of a lower valued economy showing decent growth and getting the money. So just be watchful of that. But yeah, the good part is that after 5 months of FI selling and after 3.23 lakh crores sold in the last 5 months, including 59,000 crore in February, you would expect that at some point of time this will trickle down, if not end. So you certainly hope for that. But
so what was the good point again?
The good point is that we've seen 5 months are behind us now. Or kitna?
Yeah. Or kitna? Okay, that's a hope. You know, so
it's a hope. It's a hope. Because one doesn't know.
So a lot of people have been talking. I saw a lot of this chatter over the weekend as well. I wonder what you think about it, Neeraj and Alex, saying that comparing this to COVID, that at the nadir, if you at the bottom come in, that's when you see those big gains. But is it the same? Because this is now a problem which looks like it'll persist longer. COVID was an infection. Once it's contained, then people can come back and spend and get out, and all of that surge happens in a big flow. But if this is an economic cyclical slowdown, it's slow on the way down, it's slow on the way up.
Yeah, it is slow on the way up for sure. So, which is why, Tamanna, I would wish and pray that the NSO estimates for Q4 turn out to be true, because if that happens, that's a huge positive surprise, and that may really bring in the money.
I mean, but you would also wait for the first quarter of next financial year for durable signs of people going out and spending. You're talking about estimates of 8 to 10% without increments that is going to be in the hands of people at the end of April. Remember, the first paycheck of the new tax regime.
But I think the high frequency indicators will probably start showing that. So we won't probably have to wait for the GDP release. Thankfully.
No, certainly.
Yeah. So let's wait and watch.
Okay. Let's get to stocks this morning, and I would say a mixed bucket for auto sales, and that's being generous. February auto sales have been in the slow lane, so overall some of those numbers, the overall picture, if you ask me about auto sales, is a bit concerning and tying in with the narrative and the concerns that we're seeing on the economy. Having said that, Hero, Tata Motors are the biggest draggers on those numbers. We'll get Puneet in just a few minutes to give you a more detailed analysis of each set of numbers, but this is the overview. Mahindra & Mahindra, Eicher and TVS have actually outperformed. In fact, Mahindra & Mahindra I would mark out for a thumbs up specifically because it's become the second largest passenger vehicle maker. It has overtaken Hyundai, so it's a big landmark move for the Indian car maker. Here's what Morgan Stanley says on auto sales. They say retail sales trends have remained weak during the month. Passenger vehicles and two-wheelers are seeing a 6 to 9% year-on-year decline in sales. In terms of wholesales, Eicher, TVS and M&M continue to outperform. So a 6 to 9% decline in passenger vehicle sales year-on-year is not great, and there's no other way to cut that. Maruti and Hero Moto were in line with estimates according to this note from Morgan Stanley, and Tata was weaker than estimates. Electric passenger vehicle penetration has improved 50 basis points month-on-month to 2.9% for Tata's. Tata's market share has dropped 3% month-on-month to 42%, while MG's share fell 2% to 36% in electric passenger vehicles. So in the overview, thumbs up for M&M and TVS. Eicher, thumbs down for a Tata Motors today. You might see some pain coming in there for Tata Motors as well. Polycab is the other one that I want to talk about. Now, Polycab, interestingly, is a thumbs up. On all things put together, it seems that brokerages have come to the view that the selling was overdone. If you compare to a Havells and some of the other players in the cables and wire space, Polycab is likely to get less hit. So here's what Jeffrey says. They maintained a buy on Polycab. They have cut the target price, though, to 6,485 from 7,700. Polycab is down 20% in the past 2 days. You saw some bump up on a very, very bad trading day on Friday. But on Ultratech's planned foray in cables and wires is what has been hitting the entire space. They say Polycab now trades at 27 times FY26 estimates, so lower than its historical average. Maybe valuations are coming back into play. Over FY25 and 27, they see no impact and estimate strong sales and PAT CAGR at 22% and 28% respectively. So sales at 22%, PAT CAGR at 28%. Exports is a budding opportunity because of the China plus one factor for Polycab's. Medium-term outlook is healthy, and factoring present market correction and rising competition beyond 2027, they have cut the target PE by 15% to 32 times. Investec on cables and wires, they've had a note on the whole space, but I've picked up Polycab specifically. They've upgraded it to a hold from a sell and set a target price at 5420. Meanwhile, on Havells, they've maintained a buy and cut the target price to 1680. And on V-Guard, they've maintained a buy and cut the target price to 475. For the whole space, they say best days are behind wires and cable space because companies are operating at peak utilization. Average annual capex is rising 2.5 times over 24 to 27, those 3 years. This is likely to bring down asset turns and return on investments, but it also leads to pricing pressure. So if this is happening to the entire space, it's going to make no big difference, or Ultratech's entry is not going to help them. They're entering a space which is already past its peak, and their distribution reach and contractor connect may not really help. So on balance, keep an eye on Polycab. BSE is one that I have picked up. I found this Goldman Sachs note quite interesting. It's a thumbs down as per this note. They've maintained a neutral but cut the target price to 4880 from 5,650. It's interesting because all the target prices, it's fallen a fair bit below them in any case, so there is some upside there. Lowering industry options penetration is the concern. There has been a SEBI consultation paper last week which wants to reduce volatility in equity markets, and they say that it's not good for any exchange if those recommendations actually come through. So BSE shares have largely priced in the risk to industry volumes from the implementation of the proposed rules, but the final outcome remains highly uncertain. Let me just break it down. Basically, SEBI proposed a new formula for F&O trade. It's an open interest formula which may further impact volumes, and volumes have already been impacted by the first set of measures. For any exchange which has been booming off these F&O volumes, it could be bad news. So keep an eye on BSE, already 10% down in Friday's trade.
All right. I've got all three thumbs up. The first one is on the back of earnings. You've got International Geopolitical Institute, which is a recent listing, as you know. And the revenue has grown as much as 6%, but you have a significant improvement in the margins, come in at 57.5% compared with 51.4% in the comparable quarter, and as a result of which you have a significant improvement in the net profit. This is a talking point for the company because it operates, of course, in the diamond space, and it is something that has both natural diamonds as well as lab-grown diamonds. So it is more or less covered, despite the shift that you're seeing in the recent past towards the lab-grown diamonds. The second one is Dalmia Bharat. This is on the back of the capacity expansion that the company has announced. It is set to add 6 million ton per annum of cement capacity and 3.6 million ton per annum of clinker capacity, which will be commissioned by the fourth quarter of FY27. That's a financial year ending March 2027. Total investment is set at 3,520 crore rupees at a cost of $67 per, that is EV per ton. And you have the total capacity of the company will rise to 55.5 MTPA cement and 30.7 MTPA clinker capacity. What is important for you to note is that they are now focusing on the Western market as opposed to earlier the thought process, which was the central market, and they already have presence in the East as well as in the South. So you have a more diversification of their presence across India. They will largely sell within a 300-kilometer radius from those plants. So it's positive. Last one is Ujjivan Small Finance Bank. It's a small update, but a significant one in my opinion. They're selling about 364.5 crore of bad loans and written off loans to ARCs, that is an asset reconstruction company. This is on the back of sales that they undertook in the previous quarter to the extent of 270 crore rupees as well. And on balance, this would be positive in the fourth quarter because you could see an improvement in the profitability, which was down quite significantly on the back of elevated provisions that were made in the third quarter, Neeraj.
My first stock is Ultratech. So Kamana spoke about Polycab. I thought the commentary from Ultratech is very positive for the cables and wires segment as well per se. But for Ultratech as well, I mean, they're saying that there are no plans to add further capacities in the wire and cable business. They are not, they explore fans, lights, faucetware, fittings. So if the joke was right that kal steel mein bhi chale jayenge, isme bhi chale jayenge, they're saying we're not entering anything else. And 1,800 crore rupees, 25% of FY25 PAT, all of that put together. Stock having beaten down 8%, grey cement likely the core business, brokerage is now constructive. Might well say Ultratech seeing some green today, so keep an eye out for Ultratech. Jubilant Ingravia was the other one, wherein they did an analyst meet. The company expects 12,000 crores of revenue in FY30. The FY30 EBITDA is expected at 2,000 crores with 17 to 20% ROC. I did a bit of math. The calculation suggests the stock is trading at about 11 times FY30 and 24 times FY27 expected EPS based on just extrapolating some of these numbers. So not necessarily cheap, but Nuvama says they have a buy. Their target price is 904. The stock is at 600 something. So if you believe Nuvama, there's a lot of upside out there. Keep an eye out for Ingravia today. And the last one on my list, while we'll talk about autos later on, Interglobe shouldn't be left out. The aviation data came out. India's domestic air passenger traffic grew 11% in Jan. We know Feb will be even stronger. So keep that in mind because of Mahakumbh. Indigo's traffic was up 20% in Jan. Occupancy stood at 90%. And Feb to date, occupancy was at 92% for Interglobe Aviation. The market share recorded a new high at 65%. So keep an eye out for this one as well. We need to slip into a break. We'll come back. Top trading strategies, GDP discussion, and more.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
All right, welcome back. Quick look at the implied open before we get to our next conversation, which is to break down what we have seen on India's GDP in Q3. 98 points up. I mean, after that battering, some relief maybe in the offing. But let me go across to Indranil Pan, Chief Economist at Yes Bank. Indranil, very good morning and great to have you on. Always a pleasure to speak with you. Let's start with how you have looked at the 6.2 number. There's been a mix of views. Difficult to say if it was a one-way, yes, this is an improvement from Q2, but is it good enough? Wanted to know what you made of it.
So I'll pick up from the last point. Yes, definitely, we have seen an improvement from an upwardly revised 5.6% of the previous quarter. We have moved to 6.2%. And if I look at the all the revised numbers and the Q1 to Q3 numbers of the current year, it implies, given that the MOSPI is looking at a 6.5% growth, it implies that the Q4 would be 7.6%. Now, that's something that I think I would be doubting in the sense that the momentum in the economy is not as strong. And therefore, a 7.6% number may be quite a big deal to achieve from the 6.2%. The second point that I wanted to sort of highlight is that if I really look at the sequential trajectory of the GDP, in Q1 FY24, it was a 9.7, then 9.3, 9.5, then it started moving lower at 8.4, 6.5, 5.6, and now 6.2, which necessarily, to a certain extent, definitely means that the bottom has been achieved. And given the economic momentum that the reforms is likely to produce, plus the push in terms of the consumption demand through the IT taxes reduction, and the start of the easing of the monetary cycle by the Reserve Bank of India, we should very sort of confidently say that the bottom of the GDP, however, has been achieved.
Indranil, hi. Alex here. A quick follow-up to what you just said. 7.6% looks difficult in the fourth quarter. So what is more likely? And what is the outside possibility based on what maybe cannot be accurately predicted, which is, as we've discussed very briefly this morning, the consumption effect of something like the Mahakumbh, which we've seen play out last month. What kind of upside potential could you have to even your own estimates?
So from a Mahakumbh perspective, I think the consumption demand is something that we are looking at. It's not really the capex demand. And the reason I sort of bring this point out is that any Mahakumbh impact is likely to be rather transitory than sustaining. So even if I'm looking at a bit of an uptick in terms of the private consumption expenditure, this is likely to be only for the Q4 and unlikely to sustain. What is likely to sustain, as I said, is the monetary easing, the IT reduction from the government of India. More sustainable will be the monetary easing than even the IT reduction by the government. And the other perspective is that if I look at the Q3 data, the gross fixed capital formation has been almost flat in terms of its growth rate, YOY growth rate, compared to the Q2. So that's somewhere, some place that we expect that the Q4 will look at an improvement. And because the government has once again started pumping in capex into the system. Into the next year, we expect a more even capex cycle by the government of India. So overall, I think for the Q4, we are still looking at a 6.3%, and the year as a whole, we are looking at a 6.2%. And in the next financial year, we are expecting the reforms momentum and all these impacts that I just pointed out from a policy perspective to boost growth to about a 6.6%.
So, Indranil, if we want to hit that 7.6% figure next quarter, what needs to happen? I mean, we can dismiss it by saying that perhaps the government's being over-optimistic or you're trying to fit that math of a 6.5 for the year. But what needs to happen? Are you expecting further cuts from the Reserve Bank of India, a push on capex? How does that work out?
Well, I think contextually, I think 2 months within that, the fourth quarter is already gone. And any incremental policy steps may not have a very significant impact on the Q4 numbers and hitting the 7.6%. Second point is that the Reserve Bank of India cut its interest rates in February, but liquidity has been tight. I'm not blaming Reserve Bank of India, but they have been trying to also sort of provide liquidity comfort to the system. But given the continuous negative liquidity in the banking sector, the pass-through of that 25 basis points has neither happened in terms of the MCLRs, nor it has happened in terms of the 10-year G-Sec rate. So to a certain extent, I think given the liquidity condition, the transmission of the monetary policy is becoming a challenge, and the transmission of the monetary policy can actually, in my opinion, happen more towards the April, May, June period, rather than in the current quarter. So that's the reason I would continue to doubt the 7.6%, and achieving the 7.6% even assuming the uptick that we have seen in terms of the government's capex may actually be quite a tall order for the Indian economy.
Okay, thanks so much for that, Indranil. So, all right, couple of things, like I said, have happened this weekend. You've had a GDP print, which was in line with estimates. And I'll tell you why that was good, because the market actually feared it would be below estimate. So that's one thumbs up. And then you have a new SEBI chief who spoke very clearly on what his priorities are. Let's just play that out for you very quickly. Newly appointed SEBI chairman Tuhin Kanta Pandey lists trust, transparency, teamwork and technology as the 4 key objectives of the capital markets. Listen in.
So first of all, let me say that SEBI is a very robust market institution. It has been built over the years with successive leadership and will continue with it. We hold the trust of the people of India. We hold the trust of the Parliament of India. We hold the trust of the government. We hold the trust of the investors. We hold the trust of the industry. Trust is very important, and we'll all look forward. So I'll say that, we have got 4 objectives. We work for trust, we work for transparency, we work for teamwork, and we work for technology. I think these 4 elements make it a distinctive, and we have created one and will continue to create one of the best market institutions in the world, for which we will all be proud.
All right, so very clear message being sent out by the new SEBI chief. Let's talk about equity markets once again and the setup for the day's trade. Let's take a look at the latest derivatives data. It's going to be the second session of the new series, and Agam, I'm hoping it's going to be better than the first.
Well, that certainly is a hope, Alex. At the moment, though, it's not an encouraging sign with the way things have, in fact, panned out over the past 2 or 3 sessions. Let's take a look at what happened last Friday. At least as far as the Nifty is concerned, we saw a very sharp 1.9% decline in the underlying, even as the Nifty now edges towards the mark of 22,000. Now, do remember that we've been talking about that fulcrum around 22,500, and that's well away, in fact, 2% away from that particular level. And along with that, we also see an increase in open interest towards what looks like fresh shorts. The Bank Nifty, the picture wasn't very different, though there was a slight, outperformance, if you can call it that, but the Bank Nifty was also down around 0.8%, and not too much change in open interest there. As we move into this particular week, when it comes to the options open interest, as you can see, now we're starting to see a lot more writing around the 22,000 calls. Do remember, until 2 sessions ago, this is where we were looking at the fulcrum to be. Now, it does seem like this is becoming a little bit of a resistance, at least for the week. And a lot of these call writers are writing the 22,000 call, 22,500 call. On the lower end, all the activity seems to have shifted. So firstly, there aren't as many puts being written just yet, which means that the traders at the moment are open to perhaps the possibility of the Nifty going even lower from current market levels. That said, the psychological 22,000 mark will be an important one, but maybe perhaps the range between 21,800 through 22,000 will start to see a little bit more put writing come through potentially over the next 2 or 3 days. It's something on which is going to be a wait and watch. It's going to be perhaps yet another volatile week of trade, but there is an expectation of short covering coming through. It's just that we don't know when it's going to come through, but it's expected. It's been expected over the last few weeks, potential and hope that it could come through this week.
Right, thanks Agam for that. In fact, let's get a sense from our guests who are joining us in studio as well, what they think at the start of the new trading. We've got Kush Bora, founder of kushbora.com, as well as Parag Thakkar, who's head fund manager at Fort Capital. Thank you so much, as always, gentlemen, for joining us in studio. Kush, let me start with you. The setup, we just spoke about some of those key levels and how that distribution is taking place. Do you see any positivity at the start, beyond, of course, the fact that we might see green at this start today?
You've heard of the saying, right? I mean, be careful what you wish for, because you might just get it. Friday, we spoke of the rebound rally missing because the indices aren't oversold on any parameter, be it PCR, be it RSI, be it valuations, P on the Nifty, as Parag Bhai will confirm. Friday, we got that wish, because on Friday, the RSI actually fell to 22, which is very close to the oversold territories of 20. That's how I track it, 80-20. So very close to those levels. Now, incidentally, this is the lowest level that the RSI has been, guess since when? COVID crash, March 2020. Now, speaking of COVID crash, one interesting data point, if I may, bring out now. During COVID crash, obviously the indices fell much harder in percentage terms, but the breadth of the market is actually much, much worse right now.
Oh.
Yeah, let me just give you a comparison, and I compare this in terms of the 200-day moving average. How many stocks are below the 200-day moving average, right, for specific indices? Obviously, for Nifty, there was one point in time where all the Nifty 50 stocks were below the 200-day moving average, right, during the COVID crash, but then they recovered quickly. Right now, you've got only 42 or 80%, 84%, okay, of the Nifty stocks which are below the 200-day moving average. And I say only because it gets worse from there on. For Nifty 500, you had 77% or 385 stocks below the 200-day moving average then, and now you've got nearly 90%, 447 stocks below. Mid-cap, 80% stocks below the 200-day moving average, right now 87. And as you would expect, the worst hit of the lot is the small cap space, where of the 250 stocks, 177, then about 70% were below the 200-day moving average, and now you've got 228 above 90%, 91% stocks on the small cap index which are below the 200-day moving average. Now, there's a universe of about 29 indices that we track. Back then, 18, right now, all 29 indices below the 200-day moving average. Now, if this doesn't sound capitulation, I don't know what does, correct? Now, despite all of this, my key message is that if you've got that stash of funds hidden somewhere under your bed or wherever, you keep them, and a view of over 12 to 18 months, now would actually be a good time to start buying. And as I said, we've said that Nifty has now gone to oversold territories on the RSI. This is perhaps when that elusive rebound rally might come in.
Wow. So I thought it was the reverse. People are removing money from the markets and putting it under their pillows because find some safety for cover. But that's an interesting point. Kush says time to start buying. Parag bhai, good morning. Do you agree?
Yeah, I completely agree. Completely. The markets are completely oversold. One of the facts which I keep saying is that after the new RBI governor has come, he has taken some serious steps, right, to infuse liquidity into the market whenever market needs it, to cut repo rates by 25 bips, then to delay the norms which were there like LCR, ECL provisioning, project financing norms, then to reduce the risk weights for NBFCs. All these steps plus government steps of budget will take some time to deliver. Q3 GDP we have seen 6.2, which Q2 was 5.4. It's a slow and gradual recovery, which market is not looking at right now. Right now, it is exactly as Kush pointed out, it's a capitulation. One thing leads to another, right? If you are suffering loss somewhere, you will book some profit also somewhere, and it's a collateral damage and cascading effect which takes over. So I think it's a time to be greedy in the markets, and by till 28th March, I think you will have this window of opportunity. Generally, we have seen mid caps and small caps bottoming out on 28th March, because that is where the entire capitulation finally takes place. But as Kush said, this time it might be different because the capitulation has already happened. And we have seen some pockets of recovery. I'll tell you, for example, whatever channel checks I have done, for example, in central India and some of the, excluding south, cement prices have gone up. Some discounts have been given, but the prices have at least gone up by 2-3%. I think Birla Corp on one channel also said that prices in their region were up by 3% and demand was very good. Ultratech, I am hearing demand is very good. They are doing very well. And so I think this fall of Ultratech due to this 1800 crore investment, which is a 3-month profit of Ultratech. What people are talking about, stock has fallen by 17% and market cap has eroded by 20,000 crores.
Because of this, it's about 8%, right?
That's okay. I'm saying it should not fall only. Based on what I'm hearing about from the channel checks which I have done in the Ultratech markets, Ultratech can report 4,500 to 5,000 crore EBITDA in this quarter. If you see TVS numbers, for example, which reported 4,03,000, that was led by exports, which are higher margin products. 26% growth in exports, right? EV, they are leading now, right? And Africa exports have rebounded, and there is huge opportunity to grow in Africa. Now, in spite of such numbers coming on Friday evening, Friday the stock falls by 5%. What capitulation is this, right? The stocks are falling in spite of good news, which are just coming up because nobody just cares.
Yeah, and the good part is that now, viewers, because you always heard about how there is safety in large caps, and if large caps were not falling, now large caps have falling. And that is an opportunity if you are indeed a long-term investor. Now, pick and choose, of course. You may want to buy an Ultratech or a TVS. You may want to buy a Mahindra & Mahindra. You may want to buy any of the other, HDFC Bank, ICICI Bank, what have you. So pick and choose, but could be interesting. However, if you want to pick and choose for a trade perspective, let's see if Kush Bora has some good ideas for you today. Kush.
Sure. Still going with a long and a short kind of a mix, because what I said just now was obviously a 12 to 18 month kind of a perspective. For today, things might actually pan out to be slightly differently. So still going with the long and short. On the short side, I've got Crompton Greaves for a short target of 318, 313, 328 being your stop loss. On the long side, ITD Cementation, the stock's been consolidating in a very tight band, which is also to say that it's not falling with the rest of the market, and you'll take that in a scenario like this. So ITD Cementation looks like a very good positional play as well, but from a near-term perspective, 550, 565 being the targets, 520 is the stop loss, so ITD Cementation on the long side.
Okay.
Parag bhai, what about you? Since you are saying it's time to be greedy, two-part question. One is, what is the perspective? Is it again at 12 to 18 months?
Absolutely. So we have to keep that way.
And then what? If I want to be greedy right now, pull out the money from under the pillow or wherever it is. I love this, thing. Where do I put it?
So basically, as I said, so there are always some pockets of value where in large caps, as I pointed out, select cement companies like Ultratech, Birla Corp, and this again from 12 to 18 month perspective, I am saying, not from today's perspective. I hope and I wish that from here on we will see a recovery. But because the valuations have become attractive due to this capitulation. But I would say that. So apart from Ultratech, TVS Motors or Birla Corp, which I have already mentioned, I think steel stocks also are looking like forming a complete bottom, because definitely when you are, ArcelorMittal in between said that European inventories are low, right? That's a lesser of a problem for companies like Tata Steel. JSPL promoters, last time we discussed, they bought worth around 800 crores from the market, their own stock, right? So I am saying that there are clear signs that steel prices in India have bottomed out, and so definitely steel stocks will also see some. So these are my pockets.
Duty, you would believe that's an added incentive.
If it comes, it's great
added.
for. It's
but you
great
would buy
for,
it otherwise also.
Yeah, I will buy it otherwise also, because I feel that prices are at bottom.
Since you're talking about things to buy or what have you. There is this very decorated fund manager who writes a daily or a weekly column in one of the newspapers, and he's made this interesting observation. Maybe it's a fun fact, but he's serious about it. I spoke to him, right? And the point is that there were 65 crore people who visited Mahakumbh. A lot of them lost their footwear and were walking barefoot. No. Think about this. So you mentioned this, right? That Q4 GDP could get a push from Uttar Pradesh, right?
Chief Economic Advisor said.
Simple.
So you're talking about Bata and Relaxo?
Why not? Why not? So that plus the whole, the chain of companies which do consumer durable sales in Uttar Pradesh, could that come in a revival? Because everybody's not just gone to Mahakumbh. With that pretext, they have done the religious tourism of that exists in the state.
The Prayagraj region.
Everything, yeah. So I wonder if that comes as a focal point.
Connie, come back to the footwear. If, say, 1 crore people lost their footwear, another 1 crore got that footwear. So they are not going to buy that.
But no.
It's gone from here to here.
But immediacy, they will be buying.
No, just to add to what Neeraj said, Birla Corp, for example, primarily sells in UP markets, right? Central India and UP. And now they will have a good volume growth also, and this is what the CEO has said on the channel. I am not, I don't have any insights into it. And the point is that EBITDA per ton has also improved significantly. I think from what he said on the channel, it is 230 rupees per ton improvement QOQ on EBITDA basis. And UP election is going to be in FY27. So government is definitely going to focus more on UP development, and which will benefit companies like this. Yeah. And it is trading at below. For example, if Ultratech puts up a new capacity today at $80 per ton, and Birla Corp is valued at say $80 per ton. Of course, their locations are very good. The enterprise value should come to 15,000 crore, and they have a 3,000 crore debt. So market equity should be valued at 12,000 crore, versus that it is 7,500 crore today.
So there is value on the table.
So I'm saying just replacement also, you are having so much value on the table.
So I do want to ask a couple of questions about sectors and stocks that took a massive hit on Friday, but two of those, I mentioned them, IT and auto, both lost as much as 4% at the index level on Friday. But let's focus on the second cohort, which is the auto pack. Reported numbers for the previous month. Wholesale data has come through for the month of February. And it's actually not looking like a very pretty picture. Let's see what the actual data suggests. And Puneet has gone through the numbers in more detail than I have. Puneet, what stands out?
Well, definitely there are, in the two-wheeler space, while Bajaj Auto is still anticipated to come with numbers, there are two clear winners and one clear loser, with Hero MotoCorp, having a very bad month in terms of sales, down 19% in this particular month. Hero reported roughly 3,88,000 in terms of sales versus estimates of 4,57,000. So it's a big miss for Hero. On the other hand, Eicher Motors has continued its strong trajectory with focusing on sales rather than EBITDA margins after quarter two, and it's reflected in numbers. It's the second straight month in terms of numbers above 90,000 and roughly about fourth straight month over 80,000, which was the medium-term target per month sales. So it's definitely a big push for Eicher Motors, and TVS Motors also. It's continued a strong trajectory. Motilal also had mentioned that scooter sales have done better than motorcycles, and TVS is one of the biggest beneficiaries. In terms of passenger vehicle makers, M&M stands out to be the biggest gainer, up 19% in terms of sales and quite bang in line with estimates of about 50,400 odd units. But Maruti was a disappointment here. The small cars has fallen, the export sales has fallen in this particular month, and hence it might be under pressure today. With Tata Motors also, it's missing estimates, and it's actually come below estimates as well. Estimates were of about 48,250. It's coming at roughly about 46,000. So definitely a negative month there. And Hyundai again a miss, and that's been the case over the last 5 to 6 months again. So in passenger vehicles, there's only one clear winner, that's M&M. In commercial vehicles, we're just flashing Ashok Leyland numbers, and it's quite bang in line with estimates as well at around 17,900 odd units. The other two, VECV was a clear winner here in terms of commercial vehicles at roughly about 8,000 units. It's grown by roughly about 9%, so that's another strong trajectory. And finally, Tata Motors again, not doing too much in terms of CV sales, again down 7%. So it's going to be a year where it's seen continuous downward trend. And tractors, it's been a good month for tractors. And we had M&M that had mentioned that in Q4 they're anticipating a 15% growth. They've come out and done an 18% growth in this particular month at 25,000 units, beating estimates. And Escorts have actually done pretty well as well. It's 11% growth versus estimates of a 4% growth. So it's a decent month for the tractors. So definitely Hero MotoCorp and Tata Motors might be under pressure today, the weakest numbers, while M&M, Eicher Motors and TVS might be on the upside.
Thanks for that roundup, Puneet. Provides me the perfect context to ask Kush what he thinks about not the numbers, of course, but what happened on Friday. As I mentioned, you had some of these counters sold into very, very heavily, even the IT pack. But then let's focus on auto. Any opportunities there?
Two of them from the four-wheeler space, Mahindra and Mahindra, still looks good. I think what's happening now,
5% down on Friday.
Yeah, absolutely. This is bargain buy. In a lot of ways, a strong support zone around the 2,500 mark, not too far from there, especially if you see from where it started falling. So Mahindra and Mahindra is a good opportunity. On the two-wheeler space, TVS Motor stands out because it's still not broken below the recent lows. In a market fall like this, that is relative strength. So these two are the stocks that I will have on my radar. Any further dip from here on and a slightly positional view should be a buying opportunity.
Okay. We've got more stocks to talk about, plenty more in fact, but we have to slip into a very quick break. We'll be back on the other side to get you more of those.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the
Welcome back. You're watching India Market Open. We're minutes away from the start of trade and indications are for a positive start for the Nifty 50. Let's take you through one or a few key takeaways from a meeting that was conducted by the Association of Mutual Funds in India. And the reason I'm pointing this out is because it lends itself to what we were just speaking about. The fact that the small cap index is down 25, 26 odd percent, and the constituents of that small cap index, 90% of them have fallen below their 200-day moving average. I'm contending, and I would love for the people sitting with me to weigh in on this, that the pain is not over. And the reason I say this is that look at the SIP data, right? You have mutual fund SIP AUM that has grown to 10.62 lakh crore as of March 2024. It was at 2.7 lakh crore in March of 2019. So it's a significant growth. Equity SIPs have accounted for more than 80% of that over the course of the last 5 years. It continues to be the case. But take a look at the component that saw the biggest growth, that is small cap SIPs. They have dominated, and that stands at 1.24 lakh crore rupees despite the fall in small caps over the past few months. That's grown from 19,000 crore rupees in 2019. Now take a look at this data point, which is the fact that SIP assets account for more than half of the total AUM of small cap schemes. And you pair that with the fact that over the last few months, you've seen more number of cancellations of SIPs. Additionally, 16% of SIPs only have gone past the 5-year mark. So most of those SIPs are actually nearer to the last 2 or 3 years. It's likely that retail investors will see red in their portfolio, will say, look, I don't want more losses, will cancel more, there will be more redemption, there will be more sale of small caps. That's my view. I don't know what you guys think about it.
So just a counter to that, Alex, because a lot of people have seen, not for the same reasons, but this cycle in COVID. And then they have seen the benefit of sticking on or putting in more. So maybe with
I hope that's true.
With the right approach, message there, and enough information, people will not lose out on an opportunity that there is.
I hope that's true.
Withdrawing or stopping at this point would be
it's a terrible idea.
Yeah, we have to highlight that even as you put the data out. This is the worst thing that you can do right now to your portfolio.
Simply because you accumulate more units when the chips are down. That's the most basic point, and that's the ultimate objective of the SIP.
Absolutely. And I'll add one more point. See, it makes sense if suppose your macros were bad, right? Your current account deficit, fiscal deficit, your corporate debt to GDP, your banking balance sheets, if they were bad, I would say that, okay, still you can throw in the towel. Okay, because you are still making money. I'm not saying last 3 years as SIP investors, but I'm saying over a period of time who have seen the cycle, who have done long-term investing through SIPs, they are still making money. So but this time it is not the case. The macros are only going to improve from here.
Yeah.
Crude oil at 72, 73 or whatever below 80 is definitely another positive for India. All these positives are getting ignored due to this Trump tariffs and Teslas of the world, and there is so much of noise, which is, and plus of course the capitulation which market has seen, and now the DeepSeek, and there are one after the other, these negative narratives have kept on coming.
So since we are talking of capitulation, I would love to know both technically and fundamentally, are cable and wire stocks giving an opportunity? But I'll start with you. Why or why not?
So my view is that, let's see, the starting PE multiples were very high.
Yeah.
So they might bounce back because there was a overreaction. But I would stick to Ultratech, where I am saying that, on a 2,92,000 crore market cap and very insignificant.
But you can't have 50% of a portfolio in Ultratech, right? No, so my question is, would you buy into these stocks? Ultratech is a cement company, right?
Yeah, no. So I'll not buy into these stocks just because of a short-term bounce. Because see, ultimately what we saw in Asian Paints, right? That competition came in. Some people ignored it that Asian Paints is really a great company. But the point is that, ultimately a large player entering in will cap your margins at some point.
What about autos? Parag, we took Kush's view. He liked
M&M
and
TVS and Mahindra are my portfolio holdings. And I would like to stick my neck out and say that TVS Motors is a great company, superb corporate governance, negligible debt, and their exports are growing. Exports are high margin business. The electric vehicles are doing very well. They are launching new products. Right, everything is rupee is depreciating, so exports will help. Exports is now 30% of the last one's volume.
Interesting.
Right, so and so rupee is depreciating, that will help. Plus, there are, I would say that they are entering into all new products with high prices also. The product mix is improving. Plus the PLI benefit which they are going to get in this quarter. Right, so I am saying margins are going to improve, volumes are improving, and they are getting market
Tata
share.
Motors? We spoke about what the picks at Tata Motors. Numbers look quite disappointing. Are you expecting more pain today? I'm going to ask Parag and then Kush this question. He's giving this side eye.
Let him answer.
What is the range of emotion?
So it's 45% off 52-week highs. Tata Motors.
That, and there have been so many technical levels that it's broken on the downside that it just becomes a little difficult to now call it that perhaps is a good time to buy. Again, everything might look good from 12 to 18 month perspective, even Tata Motors perhaps. But the reason the reason for that smile and that look is because it had that 50% retracement support. It had that 61.8 retracement percent support, 61.8% retracement support. It's not holding up. Maybe the last bit has to do with what the market is doing and not the stock itself, right? So from that perspective, again, a long-term horizon, you might want to consider, but I believe to go with strength, and I've seen strength in Mahindra and Mahindra to some degree in Maruti as well. But if I were to still pick, I would pick Mahindra and Mahindra. Tata Motors, just for now, I would avoid.
Avoid Tata Motors, M&M, TVS and Ultratech are some of the top ideas have been discussed today. Soni Patnaik joins us this morning. Soni, very good morning to you. Is it looking like a good morning? At least for our viewers who are looking for ideas. Let's start with your index calls.
Good morning, everyone. Thank you for having me on your show. I think, yes, Tamanna, today is looking like a good morning. And it's just on the mere fact, that we can see Nifty is in quite deeply oversold levels on technical parameters. It's a possibility that 22,000 level holds as a support and bounces, but then the bounce back can be seen towards a 22,500 to 22,600 range. Initially to begin with, only if this range is taken out, it can head towards 23,000 odd levels. And this is for the whole of March series is what I'm looking at. The range could play out between 22,000 to 23,000 for the March series. If it's able to cross the 23,000 mark, then we can say that, the bottom out has happened and, it can head higher towards even a 24,000 mark, but then that's the next level to follow. For now, with a 22,000 support on a closing basis, one can actually buy Nifty at current levels, keep a stop loss of 22,000 on closing basis, and look for higher targets towards 500 plus levels.
So that's the benchmark call there. But Soni, you've got one pick as well. Incidentally, I think Neeraj also spoke about it this morning, but this is on a technical basis. Indigo is what you like, right?
Yes, Alex. Hi, good morning.
Hi.
So Indigo is what I'm looking at. It is actually holding on to a range of 4,400 as a support on closing basis. Although 2-3 days ago, it had shown a strong breakout on charts. Of course, with the market volatility, it did not cross the 4,600 level, but it held on to the support. Now, again, that it's bouncing back from where the put writers have positioned themselves around 4,400 level. One can buy at current levels, keep a stop loss of 4,400. The targets to look forward would be towards 4,650. If it's able to sustain above 4,650, a positional target towards 4,800 also can be looked forward, but then that's a second level to follow. I think from current levels with a good support of 4,400, one can buy for targets of 4,650.
Okay, we're talking about some of the stocks which might show a bounce or no, and in a minute we'll get to know, but with the presumption that there might be some green on the screen today, Kush Bora, those stocks, the cable and wire stocks, do they give a trading opportunity?
Some of them do. Let's say between a KEI, Polycab and an RR Kabel, I'm just going to rank them. KEI looks like a buy, bit neutral on Polycab, and RR Kabel is an avoid. The reason is on the weekly setup, KEI has a positive divergence and taking support at the 78.6% retracement. Polycab is breaking below that, has broken below that on Friday, and even the RSI is actually slipped a little negative. The only reason RR Kabel might bounce back today or maybe in the days to come is because it's gone below the oversold territory of oversold threshold of 20. So from there on a bounce, a technical bounce, a dead cat bounce is likely. But given that kind of a setup and that it's not seen any kind of recovery, this is an avoid. So as I said, KEI buy, Polycab fairly neutral on this one at the moment, and RR Kabel is an avoid even if you see any kind of a bounce on this one, let's say today or tomorrow.
Fresh longs in KEI in Friday's session. That was something, that you saw, and therefore interesting to see if this continues or no. It's such a packed morning. We haven't had a chance to talk about the biggest losing index of Friday, which is IT. We'll talk about that as well, but it's the time for the big brokerage call of the morning. And that is Jefferies, which has initiated a buy call on Adani Wilmar. Harsh Johnson with more on this. Harsh, good morning.
Good morning. Target price 370, 50% upside from here. Jefferies suggesting that Adani Wilmar houses the leading brand of staples in India. Edible oil, wheat flour, rice, etc., all of that covered within the ambit. It's a story which they are pursuing from a perspective that it's a proxy for formalization of the staples category under the brand name Fortune, and that's the umbrella brand of the company. And of course now it's venturing beyond the edible oils business. Edible oils obviously has been the mainstay business of the company, but it's venturing beyond. The lower margins, they're justifying that by suggesting that it's a category feature, point number one. Point number two, that the higher asset turnover is driving ROCE for it, and that's what the key metric is for them. So they're expecting a like-for-like growth of 20% CAGR on the EPS number from FY24 to 27. So very healthy in that sense. And they believe that valuations also don't look too steep. At 25 times FY26 EPS, not bad at all at 25 times. FY26 expected the number is, the valuation number seems like. Now in terms of risks, one, commodity price volatility, government regulations and losses in the Bangladesh business. Those are three factors you'll have to watch out for. But otherwise, super positive, 370 being the target price.
Okay, all right. Harsh, thanks so much for that. Keep a watch on Adani Wilmar and trade today. Let's see how it reacts. Let's talk about IT though, and we were talking about the stocks and the sectors that got beaten down on Friday that could see a bounce today. Is that going to be IT? Something like a TCS got beaten down with high delivery as well, I might point out. And all of those names in the green, at least in pre-open. Let's see if that continues over the course of the session. But any opportunities here, Kush?
So if I can give a global perspective, starting from NASDAQ, for the last 2.5 months, NASDAQ has seen multiple legs of negative divergence, which means that the index kept going up, but the strength was missing. And now, with the kind of fall that you've seen over the last week, 10 days, the index actually has hit an oversold mark and then rebounding from there. So if the sentiment turns a little negative on the global front, the ripple effects are going to be felt here, in India as well. The likes of TCS, Infosys still reeling under pressure. Not a big fan just yet. HCL Tech and Persistent are the two stocks we like. Persistent still looks good, but I'm going to add a third name to the list, which is FSL. This stock has not given up, as much as even the big names have. It's still consolidating, albeit with a negative bias, but still holding up above the key averages. So FSL is one stock that you can keep on your radar from a near-term, even a medium-term kind of a buying perspective. I'm not sure if the fall in IT is over just yet.
Okay. Look at what's moving on the index right now, at least in the pre-open session. Pre-open session has ended and muted gains, actually, about 69, 70 points up on the Nifty. Is there a long in place? That's one question. Ultratech seems to be buzzing. Ultratech, iShares, M&M, these are some of the stocks that we talked about. Look at it, TVS, Motors, so auto in focus. Soni, let me come to you on this, in fact. What would be your play on an M&M TVS, and let me add an Ultratech to that list.
So Tamanna, entire cement sector has seen rollovers, but Ultratech is the only stock which has actually seen short rollovers for the March series. So anywhere towards 10,500 to 10,800. Now that range is very crucial. It may act as a resistance. There could be some selling pressure seen from those levels. Immediate basis, again, if the 10,000 support breaks, the stock can fall lower towards a 9,500. I think it's quite crucial to let the resistance break and then only form any sort of longs in the stock. Otherwise, it's an avoid from here. If we talk about TVS Motor and M&M, I think TVS Motor is also decent, although the entire auto space, M&M is the only stock which has seen some decent rollovers, but TVS Motor 20 to 40 is going to act as a support. If that holds, there's a possibility that it can head towards a 2700, 2720 odd mark. So not much from a positional basis, but if 2240 holds for TVS Motor, one can attempt and long for targets of 2700 to 2720.
All right. Okay, so that's a view on stocks that are buzzing at the start, and let's see if that momentum continues. But one stock that got beaten down very heavily on Friday, that was on Tamanna's list this morning, BSE. It was down over 10%, remember, on Friday. It is starting off maybe just a bit negative, but I want to get Kush's view very quickly on this one. Kush?
Not a bad idea to start accumulating. I mean, of course, the stock had run up quite a bit, and as we were discussing, some pockets of strength will obviously get sold into in the entire market weakness. That's been the case with BSE. It's held up for the most part of this fall and has a good support zone around the 4,400, 4,450 mark. So if in a dip you get it close to that, then even better. But BSE is one stock that you want to keep on your radar on the long side.
Okay. Well, so BSE, keep on radar on the long side. For now, there are some clouds, but 30 seconds left for the markets to kickstart trade. My question to Soni Patnaik is, Soni, now that you've seen the pre-open trades, either from your set of stocks or something else, what is your top call for the day? 20 seconds, Soni.
I think the top call for the day would be to look into Polycab. Now, Polycab is seeing some sort of a reversal. However, if it breaks above a 4,900 mark, that would be on my radar for the day. Above 4,900, it can again attempt to retest towards a 5,150 odd mark. It's a trading call, and with 4,800 as a support.
Okay. Conditional above 4,900, keep that in mind. Kush Bora's top call is KEI. Polycab is number 2 for him. Keep that in mind. But here's how the markets are starting off. Well, a whiff of green. This is surprise, but not bad at all. Surprise because we aren't used to seeing this, so it's a positive move. But we anticipated this in the morning based on the basis of the implied open. I want to see what mid caps and IT is doing too. Mid caps 0.3%. Small cap index and IT will come up on your screen next. Small caps bouncing back a bit more. IT is bouncing back after losing heavily in Friday's session, up about 1%. So let's pull up the heat map and see what's happening. Well, still a fair degree of red. IndusInd Bank is getting punished. I mean, there was a FI selling instance that happened, I think, on Thursday or Friday. But this continues the pain here. Coal India, no surprise there. The offtake numbers not that strong. ONGC, NTPC, Bajaj Finance, Hero Moto, but not too many losers. Let's look at the gainers. Ultratech bounces back. Parag Thakkar told you so, 4% higher. Top draw on the index today. M&M reacts to the tractor numbers and the auto sales. Eicher reacts to its auto sales numbers. Royal Enfield numbers were very solid. Grasim as a result of Ultratech bouncing back. And then there is IT, Steel, JSW, Adani Enterprises, Infi, Wipro, BPCL. So that's the list of stocks. Now, we still 0.5% higher, but keep in mind, it's a broad array of stocks. If you want to look at the index, it is IT which is bouncing back. On the flip side, yep, not too many losers, but for IndusInd Bank and Coal India, worth pointing out, Tamanna.
So, I would say it's a heartening Monday. It's a heartening Monday after what has been a very, very rough week. Of course, you're very far from making up the pain points, but not to crow, but all of the stocks that we called out this morning are on the top of the heap. So it would have paid to listen to us right from 8 a.m. this morning. Let me pull up the broader indices and review once more what's happening there as well. Not as exciting as what you're seeing on the Nifty, but I would say not half bad after the drubbing that has come in the mid cap and small cap. Small cap 250, 0.5% up is a welcome view at this point. Let's pull up the sector sectoral heat map as well. And I'm keen to see what's happening with autos, because that was the mixed bag, right? Look at Nifty Auto right up there. Auto IT, biggest losers on Friday, bouncing back, giving you a sense that this is a market which is perhaps at this point saying, okay, we've beaten down enough. Will it sustain? Then, of course, is a question that we have to see. Metals joining the party, also heartening. So auto IT metals, they're right at the top. VIX also looking not half bad. What is not working? It isn't bad actually. Healthcare, CPSE and pharma in the red, but mildly so. Banks are not firing today. So BFSI being quiet, but it is autos which are leading the pack. I wonder if we can see the Nifty Auto components just for a second before I get to individual stocks and see what's working there. I reckon M&M will be top of the heap, about 2.5% up. TVS Motors is good numbers. M&M now has become the second largest passenger vehicle player, moving ahead of Hyundai, so that has helped as well. All of the components, at least of this index, in the green. Let's look at specifics. Cables and wires in focus this morning. Interesting note from Investec. Now this is what is curious and also good to watch. What is the fundamental story? Ultratech's foray into the cable and wire space, a threat to other players. Ultratech is up, but so are the other players. RR Kabel, Havells, KEI Industries, KEI about 1% up. Polycab I'll mark out separately because two very positive views on Polycab. So let me get Polycab up for you as well. That's also about 1% up. We talked about auto sales. I'll recap that quickly. TVS Motors, Hero, M&M, all doing well. Tata Motors, Maruti is maybe not that great. Hero is okay though, even though the numbers weren't great. Tata Motors also up in the green despite relatively poor numbers. I think it's heartening to see auto up in the green today. IGI is just the other one I'll mark out. The results came in, and the Q4 impact is seeing as very, very negative, about 9.5%, 10% down. So on the face of it, numbers look good, but a lot of it was maybe costs coming down and finance costs coming down. Street has not taken to it well at all. Paytm has an enforcement directorate notice on a violation or an alleged violation of FEMA regulations. The stock about 1.5% down. So some of those that you should look at. BSE, if we can pull up, I'm interested in seeing what's happening with Bombay Stock Exchange. Goldman Sachs has cut its target about nearly 2% down. So those are some of the stocks moving on news, but overall it's not a bad Monday morning at all.
It isn't a bad Monday morning actually, but from the broader markets, I want to point out a couple of stocks that I'm looking at, and specifically one of the worst performers, Kim's. And this is a stock that is down about 8%, 8.3% as we speak. Also in the broader healthcare space, you have Suven Pharma that is losing about 6% or thereabouts. But specifically on these two counters, Sony, I'm wondering what you're seeing in these two counters that is leading, because I can't call any major fundamental news unless I've missed the beat on this. What are you seeing on the technicals?
Alex, not much from the technical or derivative data points either. So I think, overall, if we just look at on just basically charts, basic and Suven Pharma specifically, stock looks like it has given a very major breakdown and possibility that it continues to test the lower levels towards 1080 odd mark. However, of course, if it holds the 1080, one can see it bouncing back, but it's mostly of a sell on rise structure on charts that can be seen. 1160 is a very crucial resistance for the stock to follow.
On the upside, there are a few stocks that are gaining ground. Things like ITI looking good, up about 4.4%. Godrej Agrovet is up about 3.6% or so. Natco Pharma, Welspun Corporation of India, TVS among the top gainers, as we pointed out, 3.3% higher. And we've gone into some of the details there. But something like a PFC also doing particularly well today in trade today. Perhaps the stock got beaten down in the recent past. It's bouncing back just a tad bit. I'm wondering, Parag Bhai, what you think about PFC REC. It's not a conversation we've had a lot in the recent past. Yeah. But having said that, there was a lot of interest towards the end of last year because of this entire, and I understand you don't buy based on narratives, but there was a conversation about power demand, about the need for funding of these companies and these projects. PFC REC, therefore, what's the view?
So basically, I don't own them in the portfolio. Let me make a disclaimer. But they're very cheap and very attractively valued stocks. Plus, I think there's a brokerage report today which will excite the market. So
Okay.
And dividend yield is also very good.
Okay. Kush, anything on the charts that is indicating that these would be a buy at this juncture, PFC, REC?
So again, PFC has relative strength, but other than that, REC continues to reel under pressure. What we are seeing is a bit of a short covering bounce, from oversold territories. But I wouldn't read too much into it. Until these stocks cross the key resistance marks, I don't think you should go out and buy these just yet.
I wonder if Escorts is duly reacting as well to the numbers, because agri growth was very strong in quarter. I think the highest growth since September 23, and tractor numbers were looking okay. So both M&M and Escorts would be lovely to see from amongst the auto names. Are these looking good? Both of them, interestingly, 2%. Sony Patnaik, from a trader's perspective, right? Do M&M, Escorts, and the likes give a trading opportunity on the long side?
So M&M, although it has taken the support from around 2600 odd levels, plus minus 30 points, I'm still keeping as a leverage. The bounce back that we can see today, it still needs to cross the 2700, 2720 odd levels. If it's able to cross that mark, then you can see, there's a possibility that it again heads towards a 2800 to 2850 odd levels. That's important to hold. Right now, maybe just avoid and wait for the 2700 resistance to cross to initiate a long position towards 2850 target.
2.2% higher for this. So not bad. I mean, we're not sustaining though, I must say, because just 0.25% now for the Nifty, 22,184. So selling at higher levels, Bank Nifty in the red, in fact. Small caps have gone into the red again. So this was a short-lived hurrah. Let's see. It's volatile and it's choppy, but short-lived. IT2, from being 1% higher, is now just about 0.4% higher. Now, we spoke about this technically. Parag bhai, I don't know if we spoke about IT or no, but if we haven't, right, with you, fundamentally, does such a steep corrective move in IT, not just for Friday, but for the last few days, right, give you a chance to buy into high quality compounders? They've always climbed the wall of worry, Y2K, Absolutely. This, that, etc.
Yeah.
Is AI a different threat?
So basically, it's very difficult to understand the exact impact of AI as of now, and that is why one of the reason, plus DeepSeek, and plus most importantly, the narrative around US growth changing has affected the IT stocks, because a lot of money moved to US, if you remember, and that time IT was outperforming, right? Because the narrative was that due to Trump, US will be the growth engine of the world, and now that narrative is changing because of this tariff thing and all that. So IT has come down, and as you rightly pointed, it's a very high quality sector. Right now we are extremely underweight, luckily, extremely underweight. We just have one stock, which is TCS, and also significantly lesser weight than benchmark. And we'll keep close watch on this. We don't want to miss out a big fall like this in this high quality sector. We'll keep a watch on this, and we'll keep watch on what narrative market builds around US, and of course rupee is going to help them.
I was going to ask you about that.
So like TVS Motors, I said, which has 30% exports, IT is 100% exports. So rupee will definitely help IT companies too. So at some point you need to buy.
I don't want to make the point though. It was in my list, but I didn't make the point. Rupee closed very sharply lower on Friday. In case we missed it, 32 paise lower. In fact. 87.5. Do we have so 87.3. It's recovered somewhat in trade today, but it's still past that 87 mark. Parag bhai, you made the point on TVS, you made the point on IT. What other companies stand to benefit in a big way in Q4 at least, when you're talking about repatriation? And so I've also read that a large number of these companies do hedge. So therefore the impact would be
slightly less. Yeah, definitely.
So what would you watch for?
So I'll say, see, for example, TVS and Bajaj Auto both are, so while I'm very, very bullish on TVS because of the launches which they are doing in every segment, and they are, see, one of the announcement by TVS also is that they have taken a price hike in Jupiter segment. Now out of this 4 lakh vehicles which they have sold in this month, 80,000 is Jupiter. So 20% of the portfolio, they have taken a price hike also. In such a situation where everything else is slowing down, or some of the peers' numbers are looking very bad, right? So Jupiter is actually inventory is less in the system. So on one hand, you have those kind of this kind of domestic market share gain-led story, plus exports, plus new launches, and of course PLI benefit, which is very good benefit. So this is one thing. what I'm trying to say is all chemicals, pharma and IT, mostly IT, right, will benefit from rupee depreciation. The only thing in IT was that market went too much overboard in thinking that US will be the growth engine of the world, and now that theory is shaking a bit because of this tariff fears.
Having said that, IT is one of the lone performers today, apart from auto. IT and auto is what's keeping the market up. On your mid-cap and small-cap space, I know it's become like almost, don't talk about this right now, just flee to, large caps. But having said that, Kush, let me come to you on, what opportunities lie there. Because at the end of the day, for people who have some patience and are looking for those quantum of gains, they will continue and need to continue hunting.
Well, and see, the real test right now is not, on the levels or the fundamentals. It's more on the psychology. Everyone that I've spoken to has now, lost patience. So that is where I think things start to get, a little dicey. And perhaps that's the sign that, the bottom is near, if nothing else, at least from a psychological standpoint. Again, the stocks that we've discussed in the recent past, something like a Narayana, Hrudayalaya, correct, and the likes that continue to do well, Reddington. These are spaces, these are pockets within the small and mid-cap space which have actually done rather well. So why not buy strength? Now, as far as bottom fishing goes, again, some of these names, but you would still want to wait for the dust to clear and then go out in a big way. I would still bet on something, as I said, something like a Narayana, Hrudayalaya and a Reddington in a market like this also from a long trade perspective.
Okay, well, watch out for some of these stocks, could be interesting ones. I had one question, first to Soni Patnaik before we thank her. Soni, fresh shorts seen in Friday's session on IndusInd Bank. It had a sharp gash and it's a cheap bank in terms of valuations, but still saw some heavy selling. What do the positions look like on this one?
Neeraj, it certainly looks weak. Even on charts and derivative data combined together, it sees that the next level is around 930 to 920 range, which it can test. And as of now, the resistance is growing stronger around 980, 985. The structure looks pretty much like a sell on rise for this particular stock. And there's a possibility that it actually tests the 930, 920 support before showing any bounce back from here. So if anybody is holding on to the shorts in the stock, can continue to hold with the trailing stop loss of 980 and a downside target towards 920 can be seen.
Okay, so now two stocks. And Parag bhai, come in on this one. IndusInd Bank, right? For the longest time, people said, below 1 times book. Why would people not want to buy at some point of time? So, but the stock is getting punished while the other large banks are not. What's your view here?
So we don't hold it in the portfolio. The only thing which kept me away from IndusInd was microfinance book.
Now the RBI is coming out and saying that, okay.
No, they're just reducing the risk weights, right? The risk weights given to the NBFCs is reduced. That does not mean that you are going to recover money from the borrowers to whom you have lended. Those borrowers need to be bailed out, right? So I have not changed my view on that particular thing. I am still waiting for things to unfold. And by the way, I hold ICICI, SBI and of course Federal Bank is one of my favorite in the portfolio. So basically I have chosen banks which have secured lending. So Federal is, although the ROA is lesser than IndusInd, but as we discussed last time, right, that high ROA banks have given loans to higher yielding but slightly unsecured and slightly riskier assets. And that is in problem right now. So I think I would go with the conservative low ROA banks like Federal in such scenario where of course the risk appetite in the system, if it improves and if the economy really improves, you will get a higher delta in IndusInd kind of names.
Sure, got it. Okay. But by the way, as we speak, and while IT is very volatile in the upper part of percent again, small caps are still feeling the pressure. So 1.28% lower, independent of what US is doing or what the Nifty may be doing, that space continues to remain under pressure. And viewers, this is despite small cap activity in the mutual fund space looking fairly okay. So bear that in mind as well. Okay, we need to thank our guests for coming on the show today. So Soni, thanks much for joining in today. Parag bhai, Kush, great having you this morning. Thanks for kickstarting the week with us. Now, time for some corporate conversations. Before we get in, George Alexander Muthoot of Muthoot Finance. Harsh Johnson, you tell us the latest update around this space, which has prompted us to request Mr. Muthoot to come and give us the interaction. Harsh.
Well, good morning, Neeraj. Now, just in terms of everything that's happening with regard to lending, one, you're seeing a major change with regard to the RBI's stance. You've seen a repo rate cut of 25 basis points, and you'll likely start to see that impact the numbers of pretty much all NBFCs as well as banks in a phased manner, of course. The second major change is the fact that you've seen a tweak in risk weightages. The risk weightages were upped. So lending done to NBFCs, the risk weightage was up from 100% to 125% in 2023. That has been restored to 100%. This means that there will be more incentivization for banks to lend to NBFCs, and therefore the finance to NBFCs, a large chunk of which comes from banks, will likely get freed up, and liquidity within the NBFC system will also get better, likely as a result of this. And how much better does it get is something which will be interesting in terms of perspective. Also, what this does to cost of funds for NBFCs as well as Muthoot in particular is something I'm curious about. The other space which is extremely interesting is the gold lending space. Given the way gold has performed as an asset class, what this does in terms of growth prospects for gold lending NBFCs, and Muthoot of course being a case in point for that. Last off, Muthoot has led in terms of asset quality as well compared to peers. What's helping it stand out in this cycle, and will that continue, is the other key aspect which I'll be interested in.
And that's what we're going to ask. George Alexander Muthoot, MD of Muthoot Finance, joins us on the show. Mr. Muthoot, thank you so much for your time to us here at NDTV Profit. Great to have you on. Let's begin by getting your take on the easing up of regulations by the RBI. Would it be like some relief of rain after a drought? What is the impact for the space from the regulator, the signal that you're getting, and for your business?
Thank you. Good morning. I think the signal what is being said is that the public needs to get more and more funds accessible. So to get access to funds, banks can do direct lending as well as banks can do lending through the NBFCs. So through the NBFCs is the last mile. And that, as you said, as you earlier said, the risk weight, etc., were increased maybe 2 years back. Now it has been restored. So there was a signal from the RBI that yes, please cut down or tone down on the loans to NBFCs. Now that is lifted. So definitely that's a very, very good point. But then the purpose, I feel, with the Finance Ministry or the RBI is that finally people at the bottom, at the rural, at the urban level, the lower level, needs to get funding. And that funding usually comes through NBFCs. So if we choke their funding, there will be difficulty. The fund available at the lower level, at the consumer level, will be low. So to increase the funding at the consumer level, this will definitely help. I think that is a signal which RBI is giving. And of course, banks work through NBFCs for the last mile, and the NBFCs are the correct vehicle for giving these loans. So that's a win-win for the consumer as well as for the economy. Because without consumer spending and the economy moving up, the economy of the country also will not go up.
In terms of impact, and you've put it very well, Mr. Muthoot, on what the overall picture is from the consumer perspective, economy perspective, but in terms of impact on your company, how do you see this boosting availability of capital growth, and is that push which you now expect sustainable?
As far as Muthoot Finance is concerned, we have a diversified funding. Of course, banking or the banking sector contributes about 55% of our overall borrowing. So freeing up little more funding from the banks certainly will help. So banks will be little more freer to lend money to NBFCs, and definitely they will be much more comfortable and they'll have more fund available for giving to banks, because once the risk weight is reduced, their capital allocation for loans to NBFCs will be lesser to that extent. So that is the benefit of the banks. But then as far as Muthoot Finance is concerned, As I said, we have about 55% of our borrowing coming from banks. This will certainly help us in availability.
Doesn't seem like, Mr. Muthoot, that you need any of that because your numbers, even without that, were looking very strong. So, because I didn't get the chance to talk to you post your Q3, right? Strong numbers, marginal margin expansion as well, steady ROAs. Is this what you would have hoped for? And is this something that you reckon can continue or can improve with these relaxations as well?
One thing to make it clear is that yes, our working capital or the funding, our money has to be from funding. So we definitely need bank funding. We definitely need both. So not that we were not needing anything. We definitely need more funding. So that question is definitely there. The second is, yes, we have been growing well because what is happening in the market is that last 2-3 quarters, the Reserve Bank as well as the Finance Ministry had been giving signals that unsecured loans are not very comfortable. They are not comfortable with growth in the unsecured loans. So then it had an impact of finally again coming back to the availability of funding at the consumer level, whether it is through microfinance. There have been a lot of issues in the microfinance and people are not getting the money as earlier in the microfinance sector. The unsecured loans like the personal loans and also the SME loans which are unsecured, banks and NBFCs have been cautiously doing it. So then what has happened is that finally the availability of funding at the consumer level had taken a hit. But then at that time, as usual, gold loans came as a savior, which people started using gold loan as an opportunity to get more funding. So in the last 3 quarters, we have seen good demand for gold loan, both in the rural as well as in the urban sphere. So that is one of the reasons why the people we were able to build our book. But more important than that, we feel that as Muthoot, we feel that we were able to help customers to get their money. See, people need money. If it is not coming from the unsecured loans, microfinance, etc., or the personal loan, they need funding for economic growth. And gold loan had become an important part, and Muthoot was able to help the customers, and in the process, help build its book and profit also.
Okay. Mr. Muthoot, just trying to understand, your track record has been stupendous, right? I mean, you've had good growth over a number of years. The principal commodity which people attach to your business, gold, has had a phenomenal run too, and people anticipate that to continue. My question is, do you take a 3-year view of what the business could look like with all the uncertainties surrounding lending and regulator moves, etc.? And at the start of 2025, if I were to ask you to crystal ball gaze for 2-3 years out in such an uncertain scenario, what would your response be, sir?
Sir, one thing, you use the word commodity. Actually, we are not financing a commodity.
Yeah,
we
you are.
Finance gold.
Yeah, of course.
We finance the gold ornaments of the people, and there is such a lot of gold available. And you should see that gold loan is actually a self-liquidating asset. It doesn't increase the indebtedness of the borrower, because somebody can borrow only up to 75% of the gold which he has. So it doesn't lead to over leveraging. That is one of the big advantages of gold loan. And in the uncertain times, gold loan has always been good. So we definitely have been propagating gold loan. Now that the banks and others have also got into the field, the people are more comfortable to use gold loan or gold ornaments as a good collateral for their financial needs. That is what we are seeing. There is definitely growth in the sector. Whether it is to Muthoot or to banks or to other NBFCs, there's definitely a growth. The growth is widening. The market is widening. More and more people are seeing gold loans or gold ornaments as a good collateral to get quick and easy loans. And one big advantage for gold loans is that you don't have the EMI pressure. These are all bullet loans going for 12 months. There is no EMI pressure. So it's more comfortable. It is more easy. And finally, it doesn't lead to over leveraging loans. So to me, if you ask, gold loan growth will certainly be there. Not only Muthoot, all the banks, everybody will be able to grow. But as Muthoot, we should be as we with more than 5,000 branches spread all over the place. There is a lot of space for growth. There is a lot of room for Muthoot's growth. And one final thing is that people would always like to have a touch and feel for the gold loan business. People would rather come to a branch, nearest branch, and hand over the gold to their branch. So that is the big advantage Muthoot has, because we take the gold from the customer from at the branch itself and hand it over to the branch manager, kept there. So the branch is certainly plays a very important part in this business. So Muthoot, we see, to answer your question, we see good growth prospects even in the next 2-3 years with your crystal ball look.
Mr. Muthoot, just a follow-up on gold loan, and this is a conversation that we've been having in the studio as well. At times of crisis in other asset classes, gold comes to the fore, and we're speaking right on the context of what's happening in the economy, etc. I'm just wondering if you've seen an increase in demand in this quarter, in the last few months, for gold loans. And does it now help that the RBI has also allowed you to increase your presence with 115 branches?
Yeah, certainly. That's what I said. I was trying to say. Occasionally, we start about 100 to 150 branches every year. As a gold loan NBFC, we need to get the RBI's permission. Actually, branch opening permission is required only for gold loan companies. So all other NBFCs and banks can open branches without RBI's prior permission. For gold loan NBFCs, we need the permission. Of course, we get it. So now we have got 115 branches. Our presence will be much better. So as I said earlier, the touch and feel is definitely important. So we need to increase our branches also. So 100, 150 branches a year is what we usually look forward to, and that is really happening, and that is helping us in the gold business also.
The first part of my question, Mr. Muthoot, have you seen an increase in demand for your primary service of gold loans, tying in with what we're seeing around in the economy?
Yes. The last 3 quarters, we have seen increasing demand on growth. This always been good. Our growth projections for the year was 15%, and in the last 3 quarters itself, we have crossed 30%. So we are on track for good growth, and we see good growth in this quarter also. So there is demand both in the rural as well as in the urban sector.
All right. Thank you so much for speaking with us, George Alexander Muthoot there on the relief which has come from the Reserve Bank of India. Very, very important for the NBFC space if you want to take that last mile availability of credit to people who really need it. So interesting conversation there. Of course, demand for gold loans has only been zooming, which typically would happen if there is any stress in other asset classes in the economy. But talking about asset classes, let's focus on the realty space. Before we get in Baman Irani of Keystone Realties on board, let's go across to Puneet, who's setting up that conversation for us.
Thanks for that. So definitely there are 2 parts here. One is, of course, the industry as a whole. In Mumbai, there was a Knight Frank report recently which came out which said that registrations in February was about 11,500, and it's been consistently above the 10,000 mark per month ever since the pre-pandemic levels, and is much higher than that as well. So it's definitely a good time to be a realtor in the MMR market. Apart from that, registrations above 5 crores have risen by 15%. That's what Knight Frank had mentioned in this report. So overall, the industry has seen good buoyant demand, even in the super premium category. When you come specifically to Keystone Realtors, when I talk about the guidance specifically, they mentioned pre-sales guidance of about 3,000 crores for this fiscal year. They've already achieved 72% of that in the first 9 months of FY25. So just some commentary on that would be helpful. The other aspect is on project additions. They had guided for 4,000 crores of project additions in this fiscal year. They've already achieved 3,297 crores. So it's another big pivot. And finally, very interesting data that they give in terms of the presentation of super premium and the premium category. It's up roughly about 127% in terms of pre-sale performance for the 9 months of FY25, while the aspirational category is also up 154%. 5% at 566 crores. So overall, there are a few things that are going right for the industry. And with the new income tax cut, if there is anything that could be beneficial in the aspirational category as well, is something that we could check with the management as well in this particular chat.
Let's try and do that. And Baman Irani, Chairman and MD of Keystone Realtors with us. Puneet, thanks for laying that up for us. Mr. Irani, thanks so much for taking the time out and joining us. And I hope all is well. Would love to understand, how do you see the landscape from your perspective? The various notes that come in paint a different picture from whichever perspective you look at it. But it seems that price increases and volume increases are happening in select pockets in the country. NCR still strong, MMR kind of sluggish, if you will, and the fear, or not the fear really, but the conversation seems to be that if indeed areas around MMR are now getting focused with the new Mumbai airport, with Alibag, etc., then will peripheral supply put a question mark on the growth rates in MMR?
Hi Neeraj, thank you very much for having me on your show. Let me first dispel any doubts that you may have with regards to this different picture that you were mentioning about Mumbai MMR. In February, registrations that took place were 11,820 numbers versus February last year of 12,055. I mean, if you see, we had 2 less working days this month. So that is about a 7% decrease. And if I just extrapolate that, the number would actually be equal to about 12,647 registrations that would have taken place. Of course, this is my assumption. And I'd just like to state that because of the 2 days less, you saw lesser registration taking place. As such, the total value of registrations received, that is the government's coffers, were filled by 918 crores versus 885 crores in the same month last year. So there's definitely an up, which shows that there's an increase in the prices or the value of the apartments that are being sold. And I can just give you a rough idea of the landscape. Basically, residential share of this entire registration that took place was about 80%. So that is extremely good for us. We are seeing a demand of the 1,000 to 2,000. That is the larger apartments, I'd like to state, in MMR increased from 8% to 13%. Now, this is a significant shift. When you actually compare it to smaller units, that is below 500 square feet, there's a drop from 48 to 38%. And I'd like to think that 2 reasons for this. One is that affordable supply is not coming in as much as it should. And secondly, the affordable homes are actually not being, I would like to say, more taken care of by supply itself. So these are the things, the above 2,000 square feet, which we've also seen doing extremely well, especially in the upmarket areas, is a steady growth rate. And we do not see a down coming over there. As a matter of fact, we have a steady stream and we're looking forward to new launches in this month so that we're able to meet all the guidance that we have given with regards to launches being of about 4,000 crores, sales of about 3,000 crores, or pre-sales of about 3,000 crores. And we are well on our way to kind of achieve it in this quarter.
But Mr. Irani, just a question. For years now, I mean, I'm sticking to MMR since we started that, and then we'll move on to everything else as well. But for years now, Island City and suburbs in Mumbai, right, have enjoyed the benefit of peripheral areas, developments not quite happening in the same fashion. I mean, Navi Mumbai was a big dream, hasn't quite realized as much. Alibag, always a dream, never quite the reality except for second homes. If all of this now comes to the fore with the new airport, with the Ro-Ro terminal, etc., does it increase the allure of that and therefore caps the price increases that can happen out here? Also keep in mind, I mean, just from whatever little we hear, that the supply in Mumbai over the next 24 months is, for lack of a better word, egregious.
Neeraj, we all get inundated by the kind of information we have without the data that backs it up.
Okay.
So I'd like to tell you that new launches are down, which itself shows that there aren't so many new projects being launched. Yes, there are lots of tie-ups and lots of, I'd like to say, public notices in the papers, but till these actually become a reality, we will continue to be fine. Second point, I'd like to state that I am pretty enthused by Honorable CM's vision and direction for our state, where not only the Navi Mumbai airport will be a reality starting May this year, We've already had the first commercial liner land up out there. This will create 50,000 direct jobs in that area. And these 50,000 direct jobs could mean, if I just take a factor of 6, about 300,000 new jobs getting created due to one airport coming. Let's not forget we've got the entire port that is coming up, and along with it, we're also talking of an airport around there. You see the connectivity and the way it has beautifully affected our city. Earlier, South Mumbai saw no new developments in the last, I would say, 15, 20 years. You saw one-off building coming up. Now South Mumbai has suddenly become a very attractive destination. Developers like ourselves are also looking at projects in that area. There are buildings that are, I would like to think, more than 50, 55 years old that are looking at re-sprucing themselves up, rejuvenating their buildings itself and the lifestyle of the residents therein. Huge opportunity coming up over there. Having said that, the coastal road has also added to the connectivity, which will come in further towards Warsaw and then at some point of time towards Kandivli. All this will actually spruce up the western belt, which is a very, very preferred location. Further, locations like Chembur that are well connected are seeing an added surge in buyers' interest. All of this put together, I see being extremely good and favorable winds for development and for my consumers in and around MMR.
Pavan, hi, good morning. Tamanna here, and great to speak with you again. One thing that you said caught my attention, and we should maybe expand on it, not necessarily from only a Keystone perspective, but broadly. Luxury and above 5 CR, above 1,000 square foot, that segment continues to grow, but affordable seeing a choke. Is this only a supply side choke or also a demand side choke? Because at the end of the day, the volumes are going to come from the affordable segment, isn't it?
So Tamanna, very good to speak to you always. Look, your question is very relevant. And let me start off with some basics. Affordable housing needs the support of the government. What that means is, if I'm going to pay premiums that are super heavy, and I'm not going to get the advantage of GST because affordable housing is only classified as 45 lakhs and below, you're not going to see a developer who nowadays works on volumes and is trying to work on a cost plus. Everybody works on a cost plus kind of structure. You're not going to be able to see the kind of growth coming over there. That is why developers who find it lesser and lesser manageable to be able to do affordable housing are getting out of it, and that's where the supply is really coming down. If you allow me to kind of launch projects which are in the affordable space, developers like myself will happily do it. We've just launched Dombivli, and I think it's going to be it's going to be something that we will discover a whole new market with, because of that entire triangle, Dombivli, Bhiwandi, and Thane being to my mind a very, very good location. It is going to grow phenomenally as a new center. Now on the which you mentioned, the 5 crore plus segment. I have been saying this for the past 1.5, 2 years. All data points towards one and only one thing, that the Mumbai market is looking at accommodation between 3 to 7 crores. And I have mentioned this on an earlier show. 5 crores has become the sweet spot. 5 to 5.5 crores has become the sweet spot for most of the buyers in Mumbai. They're looking at good locations, great lifestyles, right-sized homes, well placed with all kinds of infrastructure around, whether it be schools, hospitals, healthcare, hospitality, and entertainment being around over there. And we've seen a surge, and that's where I mentioned places like Chembur, places like Bandra, places like the entire western belt, everything from Warsaw up towards Bandra as of right now, and in time to come all the way down to Borivali, will see tremendous growth.
Okay, I'm trying to understand in terms of the cost plus structure that you talked about, Bhavan, for the industry. Are input costs becoming a bit of an issue over there? Are you seeing enough demand coming in? Give us an outlook of business picture for the rest of 2025 calendar year.
So Tamanna, let me tell you, our dear friend Niranjan Bhai has been saying this for a very, very long time. Premiums in Mumbai are untenable at this moment in time. As a matter of fact, when premiums are reduced post-COVID as a support to the buyer base to be able to go out and buy or make it more affordable for them, we saw Mumbai BMC collect close to around 15,000 crores when the average was about 5,000 crores at that point of time. And many of the people said, oh my God, what will happen in the next year? We've seen the collections continue the way they were earlier. The output that we can give if we get reduction in premiums, not only in terms of residential, but also in terms of commercial, which is extremely important for Mumbai city to make commercial more and more affordable. Why should an industry pay, I don't know, in excess of 400 rupees a square foot to be in a grade A building when I can do the same at, let's say, about 200 rupees and increase the supply and increase the demand for commercial development in Mumbai, which will then lead to more residential development out here. Let's face it, Mumbai has got the best infrastructure, MMR has got the best infrastructure in the country. We are the financial capital. Add to it our Maharashtra government's entire outlay on infrastructure is such a terrific boost. We just need to get one chord right, and that chord would be that we need to reduce premiums. For the rest of the costs, I'm happy to state that other than inflationary pressures, which are in the region of 5 to 7%, we've not seen an increase more than that in construction costs. But the big problem is going to come with regards to labor availability, and that is where the industry is gearing up to go more and more mechanical in the sense where, create, precast yards to be able to kind of get homes built faster with less input from labor itself. We are the second largest employer of category 3 and 4 labor, Tamanna, as you're aware. And I think we need to stop looking at this as a growing area because we are seeing more and more people move to other industries and not wanting to actually toil in buildings itself. And over there, when we start getting the right kind of skilled labor, there will be an increase in the costs as well.
Rani, one final question. So we've spoken at length about MMR and maybe some things that you are doing. What about beyond MMR? Would you look to go beyond MMR, or is the opportunity large enough in MMR and surrounding regions? And peripheral to that, because MMR allows high-priced luxury living or luxury building, then if you decide to go outside MMR, would it be affordable or could it still continue to be luxury developments?
Neeraj, thank you for that. Look, we at Keystone do everything from a 50 lakh rupee home going all the way up to 100 crore rupee assets also that we kind of serve our consumers with. MMR by itself is a fantastically deep and wide market. Do I need to move out of this area? No. Will I do it? Yes, at all points of time. We've been evaluating projects that are in the close vicinity of MMR itself so that we are able to spread our wings and go there. This would be more like a de-risking strategy as well. I am pretty enthused by the infrastructure growth in places like Nagpur, Nasik, and we are continuously evaluating these markets. Pune will be our first choice port of call to go to if we get a right product out there. And more importantly, the entire belt between Mumbai and Pune is looking extremely attractive to us, and we are looking at second home developments out there. Whatever starts off as second home today, I can assure you in 15 years might become a first home to many. And this is where the investor or the prudent investor goes ahead and invests in land. Land has always been the best investment. Recorded from me today that land gives the highest returns, and for those investors who go and pick up a second home today in the right location where infrastructure growth is taking place, they will be laughing all the way to the bank in time to come.
Got it. Okay, Mr. Rani, lovely talking to you. Thank you so much, and all the best with your plans for MMR and beyond. Thanks for joining in. Thanks for joining in today.
Thank you very much.
That's Baman Rani of Keystone, Rustamji, what have you, however you call it. But yep, the stock flattish, but the management cautiously optimistic, I would say, or maybe optimistic. Why do I need to infuse caution in every statement? Yeah. That's just the nature of the market currently, though, unfortunately. Well, you need to slip into a break, but just keep in mind that, yep, it is a bit of a caution on the market simply because mid caps, small caps, banks, the small cap index is down 2% now as we speak, unfortunately. Some stocks will still be buzzing. We'll put a spotlight on them on the other side, and also talk to Anirudh Sarkar, CIO and Portfolio Manager at Quest Investment Advisors. Stay tuned.
very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे
Well, let's move on. But the markets are, of course, wobbly, but more news and updates. The first one is what's happening on tariffs and otherwise. Now, US is all set, of course, to impose reciprocal tariffs soon. Okay, I need to get my remote. Meanwhile, Commerce Minister Piyush Goyal is set to head to Washington, D.C. to meet US trade officials today. What's on the agenda? Rishabh has more details.
What we're seeing coming in from the trade talks between the India and the US, a very crucial move coming in from India. Union Commerce and Industry Minister Piyush Goyal is set to visit Washington. In fact, he is on a visit there. Currently, he will be meeting key trade officials from the US, including the US Trade Representative Jamieson Greer, as well as Commerce Secretary of State of the US, Howard Lutnick. Both these meetings will take place between March 4th and 6th. And talks will revolve around, of course, the tariff concerns that are coming in from the USA. The US is set to impose tariffs, the details of which will be made available starting April. And Goyal's visit is remarkable because he is going right before that deadline. The talks will obviously also talk about the bilateral trade agreement, the BTA, which is sort of being looked at as a mini trade deal between India and the US. These two will be the sort of the defining points of this visit by Goyal. What will also happen and what we're also likely to see is that India will skip the retaliatory action. So not a very aggressive stance. It will be not looking at a tit for tat sort of situation, but we will be looking at actually just reducing the number of tariff lines that we have on certain exports that go to the US, as well as cutting duties on a number of product lines, a zero for zero strategy, if you will, and also invite the US to cut down tariffs. And that is basically what an FTA is. It reduces the sort of trade barriers, both tariff and non-tariff, between two countries. So this is what we're expecting from CIMs, the Commerce and Industry Minister's visit to the US. We will stay tuned to his visit and keep track of all the details coming in.
We sure will be. Thanks for that, Rishabh. Now, what this tariff war otherwise has done is brought a lot of stocks to their knees, literally. And while markets maybe, you could argue, consolidating, a bunch of stocks have actually gone below their COVID lows, right? And Varsha has listed some of these out. She joins with a summation of what some of these stocks are, their valuations are, and what the management commentary has been around some of those. Varsha, take it away.
Thank you for that. So yes, we all know that markets have been under pressure since the last 2 months. In fact, to just give you some data points, over 450 of Nifty 500 stocks decline in February, and Nifty records longest monthly losing streak in 28 years. While there are some stocks which are trading at below their COVID low, and let's see what are their outlooks. So if I were to talk about the few stocks, you have Bandhan Bank, you have Johnson's Control, PVR, Inox, the Relaxo Footwears, SIS, VST Industries, and Whirlpool of India. These are some of the stocks which are actually trading below their COVID low. And if you see the valuations of this company, if I talk about their PE ratio, so basically majority of them, the PE ratio of majority of these companies are trading below their historical or the median level. So if I were to consider Relaxo, so if you see the PE of Relaxo, PE is almost 60x. But if you see the median PE of Relaxo is almost 103x. So all these stocks are trading below their COVID levels. But we need to also sort out what are the fundamental analysis or what is the management commentary when it comes to all these stocks, and what is the growth outlook, whether one should consider buying these stocks. So let me start with Bandhan Bank, wherein they are aiming 55% of secured mix by FY27. And they are expecting credit loss to stabilize near 2% with managed slippage. Next on the list is Whirlpool India, wherein they are actually focusing on premium products over volume. So the growth will come from the premium products versus volume growth. And some of the new launches are in pipeline. So you have glass door refrigerators, innovative washing machines, which are expected to come in the future. And next on the list is SIS. So they are expecting growth 2x of GDP, but they have actually reiterated that they're going to maintain 15% of CAGR growth, what they have been doing since listing. And the margin goal, so they're expecting 6% pre-COVID EBITDA for their security and FM business. Next on the list is Relaxo Footwear, wherein the whole focus of this company is how they're going to improve their margin on the back of end-to-end optimization that the company has been doing. Last on my list is PVR Inox, wherein they are expecting strong 2025 with blockbusters, and also they are expanding 100 to 110 new screens in FY25, and they are expecting growth on the robust lineup, which including Chava, which we have seen that's done very good on box office, and also War 2. They are expecting growth on behind of these two releases.
Okay, thanks a lot for that, Varsha. Now, let's focus on autos, because some of the top auto sector players have announced their Feb sales numbers. And Puneet Johnson with a quick synopsis of which have done okay and which have not. And Puneet, I thought the only ones which were in the fast lane were probably tractors and TVS.
Well, definitely. And I think because, Mahindra has definitely, guided that 15% growth. We can see that kind of reflection with an 18% growth in this month. Escorts also reporting 11% growth versus estimates of 4%. So it's definitely beaten. So tractors there. In terms of, two-wheelers, I will mention TVS, of course. It's reported a decent 10% growth. Beaten estimates very handsomely as well. And Eicher Motors as well is another one. They've reported a 19% growth in this month. over 90,000 units sold, second consecutive month, and this is roughly the fourth consecutive month where the sales have been over 80,000. Now, the company's COVID target was roughly about 9,60,000 units in a whole year. That would roughly translate to 80,000 in a month. But it's been a far cry from achieving that over the last 3 to 4 years, and now there's been some change after the Q2 earnings where the company started focusing on sales. So Eicher and TVS definitely a big setup. I think Bajaj Auto was disappointing, while the numbers overall showed some decent growth. I think the domestic sales have actually fallen by 14% in this month. So watch out for this one. And Hero, I think we spoke about in the morning that it's a disappointing set of numbers, down 17% in a time where rural is actually outperforming the urban market. But Hero is not one of the beneficiaries of that. We spoke about Mahindra in the passenger vehicle and the tractor space, and I just want to mention VECV as well, because as part of Eicher Motors, Royal Enfield we spoke about, VECV also had a decent month, over 8 units, over 8,000. While it's slightly missed estimates, it has the highest growth in the commercial vehicle space. So overall, it's a decent set of numbers by some players. Mahindra, Royal Enfield and TVS being one of them, but I think it's a disappointment set of numbers from Tata Motors as well as Hero. What's interesting is the valuation is very cheap on both those stocks. Hero is trading at 13 times price to earnings for FY27. That's a 50% discount to TVS Motors. So definitely a lot to watch out for going into the last month. Valuation is also something to keep an eye on.
Okay, thanks a lot for that, Puneet. So some interesting names out there, and interesting times for the market because, like we said, the broader markets continues getting punished. Anirudh Sarkar, CEO and Portfolio Manager at Quest Investment Managers, joins us right now on the show. Anirudh, good having you. Thanks for joining in. I would love to know how you are thinking about this whole landscape currently, Anirudh, because it seems like the Indian markets are being meted out for a special punishment, and the broader markets continue to reel lower, irrespective of whether the global handover is strong or no. What's your sense of the landscape currently?
Yeah, hi, good morning, Neeraj. I think, what we have been seeing for the last couple of months is that extreme pessimism. And, like they say, in the good times, bad news gets discounted. In the bad times, good news gets discounted. So what we saw that, in fact, if I just go back and see, so the big concern which was there for India was the valuations and earnings. So basically, the two were not in sync. India used to always, see that 16, 17, 18% kind of a growth over the last 4 years. And that is where the premium which India enjoyed compared to the rest of the world, that was justified. FY25 was something which was not a great number with regard to the earnings. That 16, 17, 18%, it went down drastically. First quarter we had almost like 8% kind of a growth. Second quarter was completely flat. And that is where the big concern picked up, that if you're not going to see those double-digit kind of a mid-teens to high-teens kind of a growth, does the premium justify for India? Yes, I would say that it was not right to be putting at those multiples. But yes, if I see where the price damage has happened, I think valuation-wise now market looks definitely very attractive. But as they say, at this point of time, there is absolute absence of the buyer on the screen, and which is evident if you look at the price damage on the volumes. I think volumes are extremely low. So I would say yes, there is a bit of a panic, but valuations on FY26, FY27 is getting more and more attractive.
Anirudh, the valuations are getting attractive for just the Nifty 50 companies, or are you finding valuations attractive even in the small cap space selectively? It will never be index wide, of course, out there.
Absolutely. So I'll say that, even when we talk about the large caps, there's a huge difference in the returns and the numbers also for the Nifty 50 and the Nifty Next 50. Now, a lot of debate has been happening that, the large caps are doing better than the small caps and mid caps, etc. But if I just look at the Nifty 50 and the Nifty Next 50, they both are large caps. Now, interestingly, the Nifty Next 50 has fallen almost in line with the Nifty Mid Cap Index over the last couple of months, though it is a large cap index. So I would say that beyond Nifty, even the next 50 large caps are also declining. So having said that, I would say that if I look on an FY26 and on FY27 numbers, small cap is also looking very attractive. So I'll just talk about the index, with a valuation perspective. So if I talk about the Nifty Small Cap 100, On FY27, we are roughly at around 17 price to earning, which compares to around 16 price to earning for the Nifty 50, which means Nifty 50 is quoting at around 16p on FY27 numbers, and Nifty Small Cap 100 is quoting at roughly around 17p. Mid Cap Index is slightly higher. Mid Cap Index is quoting at roughly around 21 times on FY27. But yes, I would say the market in whole has become much attractive compared to what it was a couple of months back. Individual companies is where the value is much more attractive, but I'm not sure when the recovery will happen. But I would say that for any investor who's looking to buy, I think the valuation of companies has become very attractive. There are many companies which have fallen much below what they were the lows made in the COVID. So I think, and yes, we had COVID almost 4 years, 5 years back, and over this period there has been earnings growth. Some companies were very expensive, so the fall was justified. But yes, there are companies which are looking attractive after the recent correction.
Okay, and that would be, I mean, I'm glad you point that out, because it's not that the whole universe of large caps is safe and the whole universe of small caps is looking wobbly. Now, I would love to know, Anirudh, when you're saying that some companies have started to look attractive, is it a factor of they reiterating their growth in Q2 and Q3 and valuation still having fallen? And if that is the case, what are those buckets wherein the growth guidances have been reiterated or enhanced, as the case may be, or have pulled back just a little bit, but the fall in valuations or the multiples has been very steep? Which buckets?
So I would say the two buckets where I've seen a lot of the price damage owing to the valuations. One is the capex space, anything to look which is linked to the capital goods. Second is the consumption basket. Now on the capex side, I think we are all aware that the first half of FY25 was extremely weak on the capex. We have to blame it on the elections, because typically in an election year, 4-5 months around the election, capex activity is weak. It should have picked up from August, but yes, we didn't see the pickup all the way till December. Now, if I look at the rebased number for this year, which is FY25, the rebased number, if we have to achieve, I think we should see almost like an 18 to 20% kind of a Y-on-Y jump on the capex in this quarter, which is the fourth quarter. So Jan, Feb, March, this quarter where we are, I would say that we should see almost like 18-20% jump on the capex. Next year, the full year estimate is almost like 10% growth on this year's the rebased number. So I would say the capex is one space, capital goods, infrastructure, overall the government capex, which has been hit hard with regard to the valuations and the price correction. But this is on account of growth not being there for bulk of the last year. That is where I see a lot of the recovery happening. Order books have been strong. Execution is the key, because without execution, order book has no meaning. So I think that is where order books execution picking up is going to be a big trigger. And I think we'll see good recovery on entire space where anything to do with the government capex. The second big area where a lot of damage has happened is on the consumption side, because consumption, as we know, has been weak the last year. Earlier, we used to talk about the rural consumption being weak. Last 1 year, I would say the urban consumption has also been hit. Part of it we have to account with regard to the income growth, which has been below the inflation. Part of it we have to also account with regard to the wealth erosion which has happened, because wealth effect is a very important aspect when it comes to the consumer discretionary spends. So I would say with wealth effect damaging the sentiment, I would say that is where some recovery should happen only when the market recovers. But broadly, I would say with the tax incentives which the government has given, I think consumption in the middle class is something we should see picking up from April of this year. Just kind of the basic maths, with the tax incentive which has been given, broadly 20 to 25% in hand, your income will be increasing from 1st of April. So that is a big jump for any middle class. If you get a 20-25% jump in your in-hand income per month, typically this goes into the low ticket consumer discretionary items. And I think both of these areas, capex and consumption, which has been hit for most of last year, should see some recovery.
Got it. It's interesting you mentioned capital goods. I would love to know, I mean, it's a very wide bucket, Anirudh. When I look at the commentary that is coming from companies, the power related cap good companies or that whole chain seems to have still reiterated growth numbers, not just for Q4, but for FY26 and 27 too in some cases. Is that a bucket within cap goods in the small cap space, the ancillary chain, or is it something else?
Absolutely. I would say you picked up the right sector within the cap goods, because I'm betting mostly on the power capex, because power is one area wherein government focus has not reduced. And if I look at the amount of power capex which is happening, I think the entire ancillaries to the power space is where the growth continues to be extremely, extremely strong. And there's a lot of visibility, at least for the next FY26, FY27. And I would say that with the type of price erosion which has happened, valuations have become very attractive. In fact, a couple of the power capex companies, they are now at almost the one-time peg ratio. And that is where I would say the attractiveness has become more and more higher at this point of time.
So, Anirudh, tell me this. Now, we've spoken to a clutch of managements, right? The view, the dichotomy that comes into this space. So, for example, transformers. Managements have said that FY26, 27 looks okay. Margin guidances have been maintained. But people who track this space closely say that a lot of capacity is coming on stream. And therefore, margins which had gone up from whatever 10, 11% all the way to maybe 16, 18, 20% in select cases will all start coming lower. The managements are saying that will not happen. I'd love to know, if you look at this pocket, let's say, for example, transformers, what's your sense?
Yeah, so basically, I think, there will be, I don't see a margin expansion happening from where we are. I think the peak margins are where we have reached on that space. But I don't see the margins coming off drastically, because typically even the power capex, the transformer capex which happens, it takes time for the capacities to come on stream. So, and within the transformer capex, I would say we are betting on companies which have a huge moat around itself with regard to the size of transformers they are betting on or they are able to produce. So I would say the small size transformers, yes, competition is high. You could see some amount of competitive intensity eating into the margins. But when it comes to the large HVDC orders and the large transformers, I think entry barriers are very, very high. And that is where I don't see the margin compression happening. So yes, we are betting on the bigger players who have a huge moat around themselves.
What about the other streams? And I'm sticking to power simply because there's only as much that we can talk in the limited time, right? So let's say grid manufacturers or equipment suppliers to wind energy, for example, or solar module manufacturers, again, that whole bucket. So 2 or 3 that I've invoked here, Anirudh. Any thoughts on any of them?
See, solar as a space, to be honest, I think valuations had gone way beyond what was the ground reality, and that is where the price damage has also happened much more. Because I think what happens typically in a bull market, we have all seen, you pick up one hot theme, and anything and everything around that hot theme, it starts getting obnoxious valuations, and only when the things hit the roof, then we realize that yes, these numbers are not achievable, and that is where the price erosion also happens more. So I'm not too bullish on the whole solar space with regard to the the companies which are into the modules and etc. I would say if an investor is looking to bet, he should rather bet on the ancillaries, which are the intermediaries of power production, irrespective of the source of power production, whether it is the renewable, the hydro, the nuclear, the thermal, irrespective of the source of power, one should bet on the intermediaries, because that is where your cycles will not be dependent on, which source of power is getting more capex and whether there are any concerns over there. Having said that, I think one good area where I think, very difficult to find many investable ideas, in fact, we are also exploring, is the nuclear space, because that is one area where definitely the government has a lot of focus with regard to the nuclear energy. But yes, there are not much investable ideas as of today. The other area where I would say, we had all the news in the recent days with regard to the wires and cables. See, wires and cables is something which, yes, the large player is coming in with a large capex, but it would take time for the capex to happen. But yes, I think definitely a lot of the valuation correction has already happened in many of those players. But all in all, I think, transmission is one big area where the demand for wires and cables will only increase. So again, there we'll have to look at companies who have a very clear moat. So basic idea is you should not bet on companies which are into the commodity products, or where the entry barriers are very low. Look at companies within the power space where either it's not a commodity play or the entry barriers are high.
Okay, Anirudh, lovely talking to you, and good to hear somebody who is following the market for the valuations and not just the narrative around small caps. Great to have this conversation today. Thanks for taking the time out.
Thank you.
And with that, viewers, on the note though, that conversations are great, but they're not yielding into the markets gaining. The small cap space continues to reel under pressure. But it's a wrap on this leg of India Market Open. Remember though, a lot of people say it's during these times when you sow the seed of investment that it can yield maximum results. I'm not saying therefore go out and buy all out, but almost everybody on the channel is now coming and saying there's maybe a good time to start contemplating selective investing. Think about it. Thanks so much for tuning in to India Market Open. Up next is Ask Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and with me is Mahima Vajrajani. We will take you through the next 1 hour of trade. And it is not looking great at the start of trade on Monday, but at least it's not looking as bad as it looked on Friday.
Right,
and it certainly is looking better than it was even an hour back. So you've come back from the low point of the day, particularly on the broader markets. Of course, we're heading towards just about treading water on the benchmark Nifty 50, but even for the mid-cap index, And for the small cap index, we've come off about 1% or thereabouts from the low point of the day. Small cap index still trading with cuts of about 2% or so, and the market bet tilted very heavily in favor of the declines even today. Let's pull up the sectoral indices, and you will see that IT perhaps the only pocket of strength. There you go. So about 0.6% for the IT index, auto index up about 0.33%. Remember, in trade on Friday, these were the two indices that were the most heavily punished. Both of these indices going home with losses about 4% at the index level, and you had individual stocks that lost more than that. The likes of Mahindra and Mahindra, as well as Tata Consultancy Services, Persistent Systems, LTI Mindtree from the IT pack, all losing quite a considerable amount of value in trade on Friday. Some of those stocks bouncing back, but the strength that you saw right at the start was short-lived. I want to start very quickly on the questions today because we've got several of them that have come through. And by the way, you see the numbers on your screen. At the bottom of your screen, you see the landline number. That's where you can call us. On the top of your screen, you see the WhatsApp number. That's where you can message us. And we've both got our screens open. We can speak to you directly. On that note, let me introduce our experts for the day. We've got Saurabh Jain as well as Brijesh Ail joining us this morning. Gentlemen, thanks so much for joining in, for taking the time. Saurabh joining us right now at the start. Saurabh, I'll start with the first question. And in fact, it's a question on Axelia Solutions. And I know that we get a lot of questions from our retail investor viewers on stocks that are in the broader markets. And a lot of these stocks have given up quite a bit of ground over the course of the last 3 months or so. So this particular stock, we've got Parag, who's writing in from Mumbai itself. He's got 49 shares that he's bought in this count at an average price of 1,535. He's asking what the outlook is. Do you have a specific view on this?
Basically, the stock is from the software category, and if you look at the numbers, there was no growth, or maybe year on year there was some kind of a degrowth. So it's a correction largely because of the weak operational performance as well as the higher valuation. See, all of the market is overvalued, and that is why I think a lot of selling is coming. Now some pockets are getting a bit lighter, but still I feel that companies like Axelia, I think one should not, average more or looking to buy more. In fact, on the rise, one should exit.
This is the view coming in on Axelia Solutions from Saurabh. We have our first caller for the day. Rajesh from Hyderabad is calling in. Rajesh, a very good morning to you. How can we help you?
Yeah, good morning. I want to know about Vijay Diagnostics.
Okay, and your view is long-term or short-term? Have you seen the fundamentals of the company or the charts?
Yes, I want to invest for long-term.
For long-term. Okay, Saurabh, Vijay Diagnostics is the counter. What's the view like?
The healthcare space is looking quite good to me. There is no, competition kind of a thing as of now. If you look at the numbers are showing good growth, but at the same time, the valuations are on the higher side. It is trading about 13 times to book value. But since it's a good company with a good growth prospects, I would suggest to buy not in a single fashion, but in a staggered manner in the market corrections and hold for the long term.
Buy in staggered manner, seeing the corrections, and hold from a longer term perspective is the view on Vijay Diagnostics. The next counter that we're talking about is Ashoka Buildcon. Joseph from Qatar has purchased around 500 shares at an average price of 254. And he's saying that he's seen the stock decline since he's bought, and he's sitting on a loss of around 44,000 odd rupees. He wants to now know whether he can consider averaging them, or should he be prudent selling them at this point and booking losses? His perspective is from 6 to 12 months. So, Brijesh, welcome and a very good morning to you. Ashoka Buildcon is the counter, and what are the charts looking like for the next 6 to 12 months?
Hi, morning. So basically the damage is already done. So the selling came from the levels of 220 levels, and it's almost the halfway it's already done. I think we may see another 15-20 points kind of a thing. It is likely to come close to 150, 145 levels. So I would advise to, if it can average, then 140, 150 would be the range where it should be averaging, and then there can be some pullback rally where he can exit.
So that's the view on Ashoka Buildcon. Look for avenues for you to exit. We've got the next caller. Bhagyaraj is calling us from Hyderabad. Hi, Bhagyaraj. How can we help you today?
Yeah, good morning.
Good morning.
Thanks for this call. I want to buy Jyoti structures for 1 lakh rupees or to 16 rupees.
And why this company?
Yeah, I want to get into power sector. That is the reason.
Okay, so it's engaged in electricity, transmission, distribution, and substation. I get that, but the thing is that Bhageraj, it's a very small company, just under 2,000 crore market capitalization, and the question is, if you're buying right now, are you buying for the long term, or is it a short term trade that you're looking for?
Yeah, minimum 3 to 5 years of holding period.
Okay, so have you studied some of the other companies in the power space?
No.
Okay, so let me ask from the fundamental basis, Saurabh. Then we're talking about one company, Jyoti Structures. It's currently trading with cuts of about 3%, 16 rupees or thereabouts. But if you were to play the power story, there are so many stocks that you can look at in the large cap, even in the mid cap space. If you're talking about the generation companies, or you're talking about the transmission and distribution companies, or you're talking about the equipment manufacturers, would you pick another stock or a combination of stocks for the next 3 to 5 years that can give you better prospects? Or is this company, Jyoti Structures, one that you would buy?
Well, the company is showing good growth in the recently quarterly earnings, but if you look at the shareholding patterns, there is no promoter as such. 97% of the holding is with the public. It's a very small company. I would rather suggest to play the power sector through transmission companies like Kalpataru or maybe KEC International, or for that matter, if you believe that the electricity consumption will show this year and the next year the similar growth trends of 8 to 9% volume growth, then I think utilities like maybe SJVN or NTPC make sense too.
All right, so that's the view with respect to Jyoti Structures. The next counter that we're talking about is, what's the counter? GE Shipping. And Raghunath Iyengar is the viewer, and he has a query on GE Shipping. He's holding around 34 odd shares at 1500 average price, and he wants a long-term view on this particular counter. He's from Bengaluru. Saurabh, I'll stick with you for this counter as well. GE Shipping, what's the outlook like?
See, it's a very old company and the promoters have a proven track record. Since we are passing through a rough phase in terms of global geopolitics, but I think this company stands tall. So while the stock has corrected, I think one can buy it for the long term in a staggered manner.
Right, so that's a view on GE Shipping. And just want to very quickly go across to Brijesh on the charts as well. If you bought at levels of 1,150, what are the prospects on the charts?
This is slightly negative because it has been correcting for so many weeks and there is no reversal. Only the thing is that we are in the oversold zone. So that can be one possible reason why we might like to take the long bets. But still, there are high chances that 800 level will be broken and 750 can be tested. So at least another 50-60 points kind of damage can be seen. So if you can understand this and then buy or maybe average, that is advisable.
Okay, all right. So that's a comprehensive view both on the fundamentals and on the technical basis on GE Shipping. Stock is down as much as 40% over the last 6 months. Gaurav is calling us from Delhi, and Fact is the name of the counter that we're talking about. It's under quite a bit of pressure in trade today. He's bought at levels of 728. The stock is currently trading at 626 or thereabouts. Gaurav, good morning. How can we help you today?
Good morning, boss. How are you doing?
Very well. Please go ahead with your question.
So my question is Fact. I just accumulated it very recently, I think day before yesterday or something.
Yes.
I thought I'll, manage like how everyone is suggesting, like hedge my positions over daily, like. But till what point? It's already, I'm at 15%, below. Yeah. I do understand it's a mid stock, so should I keep continuing like hedging my position in this? Should I sell it, get out of it, take 20,000 loss, or yeah?
So help me understand the thesis here, Gaurav. When you bought Fact the day before yesterday, did you buy it from the perspective of more than 1 year? Did you buy it based on the fundamentals?
Honestly, I started putting in portfolio. I've started putting in like a mid and top Nifty 50. So I've started investing. I liquidated some assets, and I'm started I keep pumping in money because I believe in our stock market, and over the period of 6 months, I can see it going up and up only. So this is the right time, and I have not only this. I've invested in KPI Tech, BBL, Bajaj Auto, Zomato, PC Jewelers, Reliance, Bharti Airtel, Jubilant Foods, and many others. So I have a diverse portfolio, but mainly it's from Nifty 50 and top 100.
Yeah.
So my positioning is for long, but it necessarily means if one stock and all I have to cut my losses, so I don't mind.
I got it. All right. So let me then go across to Saurabh, since you've kind of given us a flavor of what your portfolio looks like and the names that you've selected. Seemingly, Saurabh, his gravitation is towards the larger end of the spectrum, which is advisable at this juncture, right? Because of the kind of cracks you're seeing in the broader markets. But I think tactically, he's looking at investing in fertilizers and chemicals, Travancore, or FACT as it is called. The stock is taking a beating in trade today. What should he do with this specific stock?
Normally, seasonality prevails in terms of, in case of fertilizer stock. Whether it is too early to take a call on how the monsoons will plan out, but talking specifically on the fact, on the operational fronts in the last 4 quarters, the company has shown weak number. I think it is a negative growth on the trailing 12-month side, and moreover on the valuation side, it is quite expensive. If you want to remain in the same sector, then I would suggest to exit from the fact and better go for companies like Chambal Fertilizer.
So that's the view with respect to fertilizers as a space. The next counter that we're talking about is M&M. Shishir from Akola is holding around 723 shares of M&M at 2931 a piece. He wants a short-term view on this, and he wants to know whether he should book the loss at current levels. He's sitting on a loss of roughly 2 lakh odd rupees, or add more at existing positions. Brijesh, I'll come to you, with respect to the auto sales numbers, this month, the passenger vehicle also saw a growth of 18%, and tractors also saw a growth of around 19 odd percent. So good numbers, which is why today the stock is up, but overall he's sitting on a loss of around 2 lakh odd rupees. So what's the view like with respect to charts from a short-term perspective? Should he book loss or wait more, to, see some of his losses being recovered?
So the view, purely from the charts point of view, there has been a range breakout 2 weeks before. Breakdown 2 weeks before. That was mainly because of the EV thing which came out. So chartically it looks weak, but then if I need to hold if I'm having a position, I would be holding it, because I believe somewhere closer to maybe another 5-6% kind of an odd correction, it will find some support, and it's already moving towards the oversold zone from the weekly time frame. So not too much of damage from the current levels, maybe 2500, 2450, that could be the maximum correction. And I would suggest to hold, and if possible, do some averaging over those points, and then most probably 2800, 2900 can be the possible bounce back, and I think he can get a very good exit.
All right, so that's the view with respect to M&M. Our next caller, Anil Sharma, is calling in from Jammu and Kashmir. Anil, a very good morning to you. How can we help you? Anil, I can hear you. Go ahead with your query. Okay, I think we've lost his feed. Okay, let's go to our next query. The next counter that we're talking about is CG Power. This is Basil from New Delhi who is writing in. He's holding around 2,000 odd shares and of CG Power, and he's sitting at around 11% loss is what he's saying, and he has a 5-year term horizon. Saurabh, I'll come to you on this one. CG Power is the counter. What's the view like?
After correcting so much, the stock looks still expensive, trading approximately 25 times to book value. But since the company is performing well, and the industry is likely to perform well, and you have a holding period of 5 years, I would suggest a hold.
All right, let's take the next question, and this is a question on Jamna Auto. Shivani is writing in from Mumbai, and she's got 100 shares of Jamna Auto that she's bought with a 1-year time frame at a price of 140 rupees per share. It's halved from that point. In fact, over the last 12 months or so, it is down about 46% or so. She's wondering what she should do. Should she add more at this current level? She would still like to hold on. So Brijesh, on the charts, what should she do?
It's very difficult to suggest whether to add because see it is broken in such a way that even if we add the bounce back, I'm not pretty confident what kind of as of now there is no reversals which I can see in Jamna Auto from the long term perspective. So adding it's not advisable. Maybe she can wait for the hold this position and then with overall market scenario she can again review and take the call. But then I would ask averaging is not an option where she might hold the position as of now.
All right, so that's the view with respect to Jamna Auto, and hold is the view coming in from a shorter term perspective. The next caller, Shankar from Chennai, is calling in. Shankar, a very good morning to you. I believe you have a query on Varun Beverages.
Hello, good morning.
Good morning.
Sir, I bought regularly past 20 days, 5, 6 or 7 little number of Varun Beverages shares.
Okay.
Last first 15 days, I bought totally 90 shares. My average rate is 457. I bought 500 to 441. Sorry, yes, you are correct.
Okay.
I am ready to hold 5 years, 6 years, or still when India will reach the 5 trillion economy.
Okay.
Shall I continue to buy daily?
All
little bunch of shares?
Okay, got your query, Shankar. Saurabh, I'll come to you. So he basically wants to buy them in staggered manner. I believe buying them daily might not be a good option, but you can suggest in what kind of staggered manner can he add Varun Beverages to his portfolio.
Yeah, I think first of all, it's a good company having it's a market player in the cold drink segment and also added Namkeens to its portfolio. Now it's a pan-India player and the valuations have corrected. Now it is quoting about 15 times to book value. So there is a little bit of sense in the market that because of the Reliance entering with the Campa, there will be a severe amount of competition in the summer season. While the summers are likely to be hotter this year compared to the last year, I think the business will flourish for the companies in the beverages segment. But can't say about the competition what will be happen in the future. Now coming back to his question that how can he buy in a staggered manner? I think after every 5 to 7% decline, you can add some quantity.
Okay. All right. Let's take the next question on Ujjivan Small Finance Bank. And Parag Malhotra is writing in from New Delhi and he wants to get a technical analysis on the stock. He's accumulated 1,200 shares at a price of 44.1 and the stock is currently trading about 2.5% lower. Incidentally, there was an update over the course of the weekend where this company is going to be selling, if I'm not mistaken, over 300 crore rupees of bad loans to asset reconstruction companies, and that should reflect positively in the fourth quarter, at least to the extent of lower provisioning requirements, or at least writing back of certain provisions that it has likely made on these loans. But on the technical basis, if you've got a time frame of about 6 to 12 months, does it make sense, Brijesh, to average at this level, to hold or to exit?
Averaging is not an option because we are not having any positive view on this particular stock and maximum bounce which we can see somewhere to 36, 38 level. So not too much of upside. So if he gets the opportunity to see 36, 38, then booking loss is something which I would advise.
Okay. All right. So booking loss is the advice that Brijesh has for you on the charts. Dheeraj is calling us from Hyderabad. Hi Dheeraj, how can we help you today?
Good morning, sir. My query is regarding Reliance Industries.
Okay.
So I'm holding 350 shares of Reliance Industries at the 1245 rupees.
Yes. Okay.
Should I add more or should I add at current levels or should I wait for some more time?
Help me with your time frame, Dheeraj. When did you buy this and how long would you like to hold it for?
Like 2 months back, sir. I would like to hold for another 6 months.
Okay, so relatively short-term view is what you're seeking. The stock is under a considerable amount of pressure in trade today as well, perhaps to a certain extent contributing. In fact, why don't we pull up the contribution for the Nifty 50 very quickly and see how much Reliance is contributing on the downside. There you go. As much as 60 points on the downside being contributed by Reliance Industries, another 32 points odd with HDFC Bank, which incidentally was gaining in trade on Friday. It's losing ground today. But Dheeraj, let me get you a view from Brijesh on the charts. I guess to a certain extent, Brijesh, you can expect that when the benchmark itself starts showing an uptrend, you can expect Reliance Industries to participate. So it's an open question as to when that will occur. What would you do with this? 1,245 is a buy price. Would you buy more from the perspective of the next 6 months though?
Yeah, so definitely we'll buy it, but then for buying, I will wait for the 1,000 levels to be seen, because today being the first day of the month, and I can see some pressure on the Reliance, and directionally also I believe some more downside can be there, Reliance as well as the index. So if you discount that, then I believe somewhere to 1,000 is what I would be waiting for that opportunity. And whenever it comes close to 1,000, I think I will like to add or maybe average deep trade in Reliance.
All right, so that's the view with respect to RIL. The next query is a very interesting one. Angad is asking whether he can add Ultratech, Polycab and KEI now. Saurabh, I'll stick with you for this one, because after Ultratech's announcement of, entering the cables and wires segment, all of these counters, Polycab, KEI, etc. fell to, a large extent. They've recovered a tad bit on Friday, but not to the extent they've fallen. What do you reckon? Is this the right time to enter these wires and cable space, and as well as add Ultratech also to the portfolio? And how do you see competition panning out for all of these existing cables and wires players?
It is a kind of a bearish market in the last 4 or 5 months. Every news when it comes, markets do react very negatively. In case of Ultratech announcement, I think it will take another 3 years for the product to come into the market and will give some kind of competition to the existing players. While the existing players' stock prices have corrected a lot, and I think the valuations have also corrected. So I think right now it's a bearish market. Can't say whether the stocks KA or Polycab correct more, but yes, one can chip in a smaller quantities with the declines coming in the market. With respect to the investing in the Ultratech cement, I think it is a marquee player in the cement segment, and things are surely going to improve next fiscal with the government expenditure coming up in the full swing and the private capex coming in. So in my sense, he can go with the Ultratech too.
And specifically, very quick answer here, between Polycab, KEI, RR Kabil, all of these stocks have gotten battered at the end of last week. Which would you buy in order of preference?
Havells is a much good portfolio in terms of lighting and the product portfolio in terms of fans and all, and they have also air conditioner with them, so it gives a kind of a security with respect to the product portfolio. Apart from that, it is a market player in the cable segment. So apart from these three, I would rather suggest to go with the Havells.
Havells, okay, okay, all right. So Havells is the one that you should look at. Let's take the next question, and this is from Raju. He's asking about Apollo Tyres, which he's bought at levels of 373 rupees per share. 300 shares is what he's got, and he's wondering what to do with this. I will go across to you, Brijesh, on this one. He's in a very small profit. If I remember correctly, on the fundamentals, all of these tire companies were under pressure because of raw material pressure. A lot of these companies saw margin contraction in the quarter gone by. The stocks have declined. In fact, even last week, Apollo Tyres down about 8.4% or thereabouts. Would you buy at this juncture though, Brijesh?
Yeah, I would take a buy trade, because from a technical, there is some divergence which is happening, and I expect a pullback rally. If the market settles, then this can go back to 425, 450 levels. So definitely this is one of the favorable risk reward opportunity. One should take the long bet.
All right, one should take a long bet in Apollo Tyres is the view coming in from Brijesh. The next caller is Vineet from Bengaluru. Vineet, a very good morning to you. How can we help you?
Hey, good morning. I had asked, I wanted to know about the IREDA, IREDA,
right,
which is actually Renewable Energy Sources company. I think it's a government-aided company.
Yeah.
So I have been holding this IREDA shares for around 7 to 8 months.
Okay.
Just want to know, I have bought somewhere around 400 shares, and I've been waiting to go up since then, but it's not going up. Should I still hold, or just buy and make an average,
right,
or just it's not going to go up and sell it for a current price, or just wondering what to say.
Understood.
What to do.
Right. So you saw the fundamentals before buying the stock, is it?
Yeah, I did.
Got it. Got it. All right. Saurabh, I'll come to you. IRIDA is the counter. What's the view like and what's the outlook like?
It's a very good company showing good growth, but at the same time, the valuations were on the higher side, and now the valuations have somehow, you can say, has come to normal levels. I think if he has a long-term view, he can stick with it, but I would not suggest to average on it.
Okay, all right. So average, is that the right call? Average, is that what you said?
I would not suggest at
you
this
would
point.
not. Okay, you would not, but you would hold on to what you have?
Yes.
Okay, all right. So that's a view on IRIDA. Okay, so Brijesh, I understand you have to leave us, and thank you so much for joining us and for answering all the questions you did. Viewers, we have to slip into a very quick break. We will be back on the other side to take more of your questions, so do stay tuned.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी. हाउ डिड यू अराइव एट दिस नंबर?
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered, whether they're fundamental or technical. For you viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. We're also joined by Ajit Mishra, SVP Research, Religare Broking, who's joining us now. Very good morning to you, Ajit. I'll take the next query. Aditya from Chennai is writing in, and he's a long-term value investor, is what he's saying. His query is on Hindustan Petroleum. He's bought around 600 odd shares in the last 2 months, and his timeline is up to March 2027. He's invested at the price of 388, and he wants to know whether this is a good time to buy more in the current market situation to average, or should he sell now and re-enter, and if yes, at what price? Now, since he's a long-term investor, but his question basically is, at the current level, should he average or sell and enter at the current levels? Ajit, I'll come to you. On the charts, how is HPCL faring, and what's the right strategy to adopt?
Good morning, Mahima. So, Mahima, since he has already a decent amount of investment in this particular stock, and we are seeing that the trend is still negative for most of the OMCs, including HPCL. Stock has recently slipped below its crucial support zone on the weekly chart as well, around 300 areas. So there is a possibility that the stock might, drift further lower. But since the overall, reading says that the stock is extremely oversold, so possibility of some consolidation is also high. So maybe we can see some consolidation around 280 to 300 zone in the coming days before any meaningful next direction move. So as of now, I would not recommend him to add more. He can stick to his existing positions or fresh buying any dip towards 260 or a reversal above 320. Only in that case, he should attempt for adding more to his existing position, otherwise avoid.
Okay, all right. So that's a view on HPCL and a comprehensive one at that. I believe we've got a next caller on, and Suresh is calling us from Chennai asking about the hospitality space, I should say. I got it all wrong. Hi, Suresh. Good morning, and how can we help you today?
Good morning to each one of you on the call there. My query is regarding East India Hotel, EIH Associated Hotel.
Yes.
Yes, I am at a profit level, but I've been noticing that the price has fallen from like upwards of 350 to around 307.
Yes.
So my concern is it going to slide further, or can I say, hold on to it for the next 6 months to 12 months horizon so that it goes back to the 350 plus range?
Okay,
Thank you.
so since it's a relatively short-term question, let me go across to Ajit on this one. Ajit, on the charts, as he's pointed out, he's still in the green, but he's concerned it's only about 7 rupees or so from his buy price. So should he hold on from the perspective of 6 months to 12 months?
Right, Alex. So, yes, the sector, in fact, most of these stocks, if you'll see that, be it Indian Hotel, Taj GVK, EIH, they are doing fairly well in comparison to the other counters in the mid-cap and small-cap space. But the situation is that still we are seeing that rotational selling pressure is emerging across sectors, and that might cascade to hospitality also in the next, possible down move. So my recommendation would be to maintain his buying price as a stop loss or around 300 area in EIH, because it's a low volume counter. So possibly a break below 300 might result in a decline toward 270. So for fresh entry, a dip towards 270 is a good area to look out for. Or, in case if it manages to hold the 300 level, then he can stay put.
All right, so that's the view with respect to EIH. And we're again joined by Anil Sharma, who's from Jammu and Kashmir. Anil, a very good morning to you. I believe you have a query on Voltas, and me and Alex were discussing that I don't think you need ACs in Jammu and Kashmir at all. Okay, I think we've lost his feed again, but we'll ask him this question certainly.
Why don't we ask the question in any case?
Yeah.
Usually a lot of people have this thesis, right? Mahima, you consume products and you think, okay, you understand the company, you understand the demand, especially if you consume it yourself.
Right.
But then it's ironic that somebody tuning in from J&K is thinking of the AC. Maybe he understands exactly what it means to stay cool in summer, as a result of which he says practically nowhere else in the country is going to be as comfortable.
I think he's already seen that heat waves are already being issued in Feb itself in Mumbai, and I think AC sales are definitely going up, and that's why he wants to know whether it's the right time to buy Voltas or not. On the charts, Ajit, what do the charts suggest? Because, for the share price itself, if we can pull up the 6 months intraday chart as well, they've seen a certain downtick, and this is because as compared to Blue Star, they've lost market share as well in Q3. But with respect to charts, how is it faring, and what are the resistance and support levels that you're observing?
Right. So, Mahima, it's been almost 2-3 months now that the stock has been witnessing correction. But the good part is that after retesting its neckline area of its previous consolidation zone around 1200 mark, the last 2 weeks we were seeing gradual recovery despite the overall negative sentiments in the market. Last week also we saw the short unwinding plus the stock reclaiming its short-term averages, and today we are seeing the impact of it. Means the stock is up in a down market by around 1.5%. So I feel that there could be a bit of time-wise correction or consolidation from the current levels, but seems like the base is in place now. So with stop at 1150, definitely he can go ahead and accumulate the stock in the mentioned range around 13 and 1350 for the potential target of 1500, 1550 in the near future.
All right. There's an interesting question, and I know I want to talk about DLF next, but there's an interesting question coming from Jagdish. And apart from the stock that he wants to know about, he said, when will this market correction end approximately? And the complete portfolio green to red has taken place. And I can only commiserate. And unfortunately, all I can say is that almost everybody else tuning in is also seeing similar situation playing out on a portion at least of their portfolio. I'm not sure if Ajit has a view on this one. Is a bottom being found at some stage? Last week we were talking about possibly some signs pointing to a bottom, but then those have fallen through the floor. Ajit, if you can call it that, what are you looking at the charts and suggesting? Because for the Nifty 50, at least now we've gone into oversold, right? If you go by the RSI.
That's true, Alex. In fact, we have seen 5 months of successive decline. The February month, roughly around 5.5% kind of a cut. And the last consolidation range, the decisive consolidation that market witnessed, in the range of 21,800 to 22,500 zone last time in the month of March to June in 2024. We have entered into that category, zone now. So I believe that this area, 21,800, 22,000, is the only hope that we have as of now, considering that it's extremely oversold. We have multiple supports on the weekly charts, be it a trend line or a moving average retracement. So everything is planned or placed, but it's just that market is not at all in a mood to value those support as of now, because last week it was IT which was beaten down badly among the sectors which were holding strong. Now we are only left with banking. So I believe 47,500 mark in the banking is going to be as critical as 21,800 in the Nifty index. So if we manage to hold these levels, definitely there could be a possibility of a rebound.
All right, and hopefully that rebound should come, as soon as possible, and probably the portfolio will again turn back to green.
Right now, today, we are 30 points away from 22,000 on the Nifty 50. And so where does that gash, where does that stop, right?
I know. All right, the next counter that we're talking about is DLF. Pratish has around 85 odd shares, bought at 784 a piece, and he wants to know whether he should average at the current levels or not. Saurabh, I'll take this with you. What's the long-term view like for DLF, and do you think he should average out at the current levels?
Well, the real estate sales in the last year was good enough, but this time around, I think it is expected that some kind of inventory is getting built up in the segment like 4 crore and above, and moreover, higher in that segment. In case of DLF, we have witnessed good amount of sales, even the pre-sales coming in for the Gurgaon. But I think what market is assuming that the same is will not happen in the future. So in my sense, I think if you look at all the real estate stocks, they have topped out in the month of June, and since then we are seeing good amount of correction coming in the real estate stocks. I think the party is over in terms of profitability and the growth in the sales. So my sense is a bit negative. I would suggest avoid.
Void is the view on DLF. All right. Stock down 25%. The next question is from Somnath Roy, who's calling us from Kolkata. Hi, Somnath. Good morning. How can we help you today?
Hello. Good morning. Good morning.
Please go ahead.
Actually, my query is that I am holding a stock TCS of 20 shares at the rate of 3369.
Right.
Long-term perspective, looking into the last all the data.
Yeah.
So currently it is 3,400 or 3,500.
Yes.
So what should be my approach? Should I average it or what to do actually?
Help me understand, Somnath, you bought this at 3369. And this, I would guess that this is quite a while back that you bought this, right? When did you buy it?
1 year back.
1 year back, right? Because it's down about 20-25% odd from the 52-week high, and you're looking to hold this from the long-term perspective, right?
Yeah. Actually, I bought it in a SIP wise. I mean, a systemic invested way I bought it. So average price it is coming 3369.
Okay. Understood. So let me go across to Saurabh on this one, because Saurabh, on Friday, we saw a crack in the stock and delivery-based selling very high, right? So over 70% was the delivery-based volume. What would you say about TCS holding at levels of 3369. So it's still an attractive price, still upside, or rather still in the green for Somnath. Should he add more at the current level?
I wouldn't suggest to add more, but because this time around, while the IT sector per se is, some kind of a shown outperformance with respect to the other sectors in the market, but this time around also it is expected that the companies, bigger companies, will show higher single digit growth this year too. So we are still waiting for the discretionary spending to come in the US, and normally in the Jan to March quarter, these companies are likely to get what kind of the spending which is likely to come from the companies working in the US. So I would suggest to wait for the March quarter earnings and wait for the guidance, what kind of guidance comes from the management. I think it is a kind of a portfolio stock for the long term. I think it should be a hold.
So hold is the view on TCS from a longer term perspective, and of course Q4 commentary is something to be watched out for. We have our next caller, Vipul from Ahmedabad is calling in. Vipul, a very good morning to you. How can we help you?
Good morning, madam. Alex, good morning.
Good morning, sir.
I am Vipul Seth from Ahmedabad, holding C&T Limited, 35 shares.
Okay.
At the average price of 1785.
Okay.
And is reference to previous discussion. One veteran heard one veteran last week that only God and liars know where is the bottom and top of the market. Can you comment on that?
All right. So interesting one. Ajit, I'll take this up with you. Cyient Limited is the counter. What are the support and resistance levels looking like, and what's the outlook like with respect to the charts?
So Mahima, we have seen a sharp correction in this quarter, means the stock is down roughly around 33% so far, and we are trading below all the major averages when it comes to the multiple time frame as well. So the next support comes around the neckline area of the previous consolidation around 1100, 1120 zone. So if his view is short term, I would recommend him to reduce his position and wait for any dip towards 1100 mark and or any sign of reversal pattern formation. As of now, indications are in the favor of retesting 1100 levels soon, and upside 1300 is going to be the stronger resistance area.
Okay, all right. So that's the view on Cyient. Quite a lot of news flow for Cyient, by the way, with regard to management changes at the end of Q3, and so let's see how that pans out for them in the fourth quarter onwards as well. KV Ramana is writing in from Visakhapatnam, and he's asking about GMR Airport, which he's holding for the last 6 months, and he's bought at levels of 79 or thereabouts. The stock is trading below that at 69 rupees. He's got 650 shares. Should he hold or sell? I'll come back to you, Ajit, on this one. What would you do with this?
So GMR, the pace of decline has reduced, Alex, in the recent times, means the stock is still trading below the short-term averages, but in the last 5 to 10 trading sessions, we are seeing this narrow range consolidation in the range of 68 to 72. So volume have also dried up a bit. So this indicates a kind of a seller exhaustion. Possibly once we break this 71, 72 area, we can see a swift rebound towards 75, 78 levels. So as of now, I would recommend him to stay put with 66 as a stop loss. For fresh buying or adding to his existing position, he can wait for a breakout above 72.
All right, so that's the view with respect to GMR Airports, and hold is the view coming in from Ajit. The next caller, Murli from Bengaluru, is calling in. Murli, a very good morning to you. I believe you have a query on Hyundai Motors.
Exactly. I am holding 40 shares and I have a holding period of about a year.
Okay.
So I need the recommendation whether should I hold or sell.
Okay. Saurabh, I'll quickly come to you on this counter. Hyundai Motors, what's the view like and what's the outlook like?
The car sales did not pan out as when the financial year started. Now it has dropped. The projections have dropped below 5% volume growth kind of a thing. So in case of Maruti also, we have seen some kind of a slow sale coming in. For that matter, Hyundai Motor, some kind of variants are doing good. So I feel the whole of the automobile sector, there will be only a few stocks like in the two-wheeler segment like Eicher or TVS maybe Mahindra will do well. But for the other stocks, we have some kind of a neutral to negative view. So I would suggest rather avoid Hyundai Motor.
Ishan has got the next question on Angel One, and quite a few of these capital market-facing stocks have also taken a beating. This is a stock that he has bought at an average price of 2,701. The investment amount is about 97,000 or thereabouts. The stock is currently trading at 1,987, so he's incurring a loss at this point. He's wondering what to do after the decline today, 8.5% or so. Can a recovery be expected, or is it wise to do a sector rotation and move out from capital market plays is a question. It's an interesting question, Ajit. From a chartical perspective, you saw BSE crack on Friday. The stock was under pressure today as well. Angel One under pressure today. I guess the thesis is that some of these capital market players are going to take a beating when the participation is not going to be as strong as it was perhaps 6 months back. So what would you do with something like this? Would you sell and exit?
So Alex, that's true that in the last week itself, most of the platform stocks related to capital markets, BSE, MCX, Angel, all were under pressure. And if you see that overall the outperformance is still intact if you compare it with the other sector or stocks. So my recommendation is that if the view is short term, anyways, we are seeing pressure across the board. So it's not different to see most of these names also witnessing pressure in the current leg of the decline. For Angel, I believe that 1840, 1830 is just next major area, and possibility of testing that mark is high. So as of now, definitely he can reduce his position, wait for any dip towards 1830, 1840. In case if it manages to hold this area, then he may add to his existing position. Otherwise, he can completely reduce.
All right, so that's the view with respect to all of these capital market players. Angel One down by about 8% as we speak. All right, the next caller, Deep Shah from Kolkata, is calling in. Deep, a very good morning to you. I believe you have a query on HAL. Okay, I think we cannot. Deep, can you hear me?
Yeah, I can hear you.
Yes, go ahead with your query.
Actually, right now I'm holding a few stocks of Hindustan Aeronautics Limited at a valuation of 3807. I'm holding 27 stocks, so I want to hold it further. So I want a recommendation regarding how much more should I buy at this valuation.
All right, and you are a long-term investor, I believe.
Yeah. Okay.
All right. Saurabh, HAL is the counter. It's corrected quite a bit from its highs. He's holding around 27 odd shares, bought at 3807 a piece, and he wants to average at the current levels. What do you suggest? Should he average at current levels, or should he wait? And what's the view like with respect to HAL, where long-term financials and performance is concerned?
All the PSU stocks saw good amount of re-rating in the last 3 years, and the valuation correction which is coming in all the defense and PSU stocks. While the valuations have corrected, it has now come to some kind of a normal level. But you have to look at the operational performance also. The growth is not commendable. I mean, commensurating with the kind of the multiple that the stock is trading in. Moreover, some kind of a disappointment also came in with the announcement in the budget, when there was no significant increase in the defense budget. In fact, the last year budget, the government is not going to spend the budgeted amount on the defense side last year of the last year projection. So I would suggest, since he has bought around 3800 level, I would not suggest to buy more, but at the same time, I would suggest a hold for the long term.
For the long term is a view on HAL. We've got the next question from Mangalore, and Movin is writing in asking about Rain Industries. He's bought 5,000 shares at a price of 145. The stock is currently at 120 or thereabouts, and he's wondering what the view is and what the call is for the next 12 months or 1 year. Ajit, on the charts, would you say that it makes sense to hold?
So Alex, this stock was experiencing a very tight range consolidation in the last 2 years. Post breakdown in early January, we are seeing that the trend has again pointing towards further consolidation, and maybe this time the price wise the correction may also extend towards 100 to 90 zone. So my recommendation is to reduce at current levels or completely exit at current levels, considering that the underperformance is likely to continue even if the stock finds some support around the current area. It's likely to hover in a range in the range of 130, 140 on the higher side and around 100 to 90 on the downside.
All right, so that's the view with respect to Rain Industries. The next counter that we're talking about is KRN Heat Exchangers. Vishwanath from Dubai is asking this. He wants to have a view from a longer term perspective. Saurabh, if you have a view on this particular counter, what's the view like and what's the outlook like for the company?
Not covered this stock.
All right, and I don't think we have enough data on the charts as well, Ajit, if I'm not wrong, for KRN.
Yeah, so we have limited data, but comparatively, as per the available information, it still shows positive trend. So as of now, he can stay put if the view is short term with 750 as a stop loss.
Okay, all right. Alexander Cherian is writing in from Kerala and asking about MobiKwik, which he has bought in December. 647.82 is the buy price. Since it's a recent listing, I will go across to Saurabh on the fundamentals. Sharp downtick today as well, down over 4%. What's the view? Did you have a view on the IPO first of all, and would you hold on to this?
These are the new age businesses, very difficult to take a call on how the profitability is likely to pan out. And it's a game with the PE, which PE investors have played well. Since it is a newer listing, I would suggest not to jump in too quickly before looking at the 2 to 3 quarterly earnings. So it's a avoid from my side.
Okay. Is it time to hit the rapid fire segment? All right, so we have time for one more. Adani Ports is the name of the counter. Bhimeshwar is asking, 1,164 is the buy price. Should he hold or sell? And this is, let me take it across to Saurabh on the fundamentals. So, Saurabh, it's bearing the brunt of broader based selling, but on the fundamentals, would you hold on to this?
Yes, on the fundamental side, it is one of the good company from the Adani Group. I think the company has shown good growth, and from the long-term perspective, surely it is a hold.
Okay. By the way, a standard disclaimer here, it is part of the Adani Group, Adani Ports, and NDTV Profit also part of the Adani Group. It's time to hit the rapid fire segment, and by the way, this means, gentlemen, that we'll be throwing as many questions as we can over the course of 2 minutes at you. Do keep your answers as concise as possible. Cochin Shipyard, this is a question from Rajendra, who's writing in from Andhra Pradesh. He's bought at levels of 2,755. It's a considerable loss at this point. Would you hold or exit? Would you shift to something like a Reliance Industries? Ajit?
I would recommend to hold with stop at 1100.
All right. Tata Power is the next counter. The person's holding at 420 a piece. Should he continue to hold, Ajit, on the charts?
Book profit or exit, it looks further, weak. Maybe around 320, 310 is something that the stock might test.
Okay, Srinivas from Hyderabad is asking about Ola Electric, bought at a price of 70.26. Would you hold or exit, Saurabh?
Exit.
All right, Tata Motors is the next counter from a longer term perspective. Should the person continue to hold or sell at the current level? Saurabh?
Sell.
Paradeep Phosphates invested a month back. This is Dheeraj who's asking. He's bought at levels of 112.81. He's got a 1 to 2 year time frame. Should he hold or exit, Saurabh?
Exit.
All right. Rajini from Hyderabad is holding 200 shares of Swan Energy at 216 a piece. She's willing to hold this from 1 to 2 years. What's the view like, Saurabh?
Hold.
Okay, Equitas Small Finance Bank losing about 40%. Arun wants to know, would you hold or sell? Ajit, on the charts?
Hold and maintain a stop at 50. In case of bounce around 60-65 zone, exit.
All right. So Hail wants to know whether Mukka Proteins is a good counter to enter right now. Ajit, on the charts?
It's not in the coverage, so I can't comment.
Okay, Subex, bought at levels of 31 rupees. Pankaj wants to know, hold or exit? 2 year time frame. It's been 4 months so far. Saurabh?
Exit.
All right. BSC is the next counter. What are the levels that one should make an entry? Naresh is asking. Ajit, on the charts?
Around 38 to 4,000, he should accumulate.
Okay. Taking a hit today as well, 4.5% down at this point. Saurabh, as well as Ajit, thanks so much for joining in, for answering all the questions that you did. Always a pleasure having you.
Thank you.
All right, and that brings us to the end of this edition of Ask Profit from Mahima and myself and the team that put this show together. Thank you so much for watching. Do stay tuned. Lots more coming up on NDTV Profit.
warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
बजट भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी. हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं.
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है.
AI बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए.
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you Hello and welcome. This is KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Well, today we are talking about a solar company. It's Acme Solar, particularly. Well, this is a company which is actually the largest independent renewable power producer. It's one of them, and at the moment it has an operational portfolio of around 2.5 gigawatts. And a total pipeline of around 4.4 gigawatts. It's a very recently listed company, which means that there hasn't been as much in terms of price action. However, it has been one which has seen a lot of traction with respect to the entire sector, because this entire sector has been up and about, growing over the last 5 years particularly, where there's been a burst of sorts, even as we see more demand for engineering, procurement, and construction services, especially when it comes to the solar business. Well, this particular company is an integrated business model with an in-house EPC and O&M services. They focus on FDRE and hybrid projects with higher internal return rates. And this, of course, by that I mean in comparison to, well, some of the peers in the industry as well. And by FDRE, I mean firm and dispatchment energy. But moving on, as far as building green hydrogen is concerned, well, they do have plans around that as well. And the energy storage projects also come into place when it comes to this particular company. So just like many others in the sector, well, Acme Solar does seem like it's established itself. And of course, the successful listing of the company followed by good build-up as far as this order book is concerned is something that we're going to intend to talk about and take forward as well. But, just to tell you slightly more about Acme Solar before we actually move on, given the fact that it belongs to the solar sector, which has been up and about, in general, 2024 has been a year in which we have seen several IPOs which could potentially be compared to Acme Solar. Now, of course, the sizes continue to differ and vary from company to company, but this is as far as the company is concerned, and we're going to talk a little bit more about the peers as well. But for now, this is how things stand as far as Acme Solar is concerned. But as we always do, we do consider the fundamentals of the company when we consider how the company is done in terms of your income statement. We consider the balance sheet as well as the order book, of course, the cash flows as well, give you an idea about the return ratios. And that's as far as your financial statements go. We move beyond and talk about shareholding, the street credentials as well as the street coverage and what the street is making of it. And to take us through some of the aspects, I also have with me Mihika Barve, who's going to shed a lot more light and give us a lot more insight with respect to the company. So Mihika, good morning and thanks for joining in.
Good morning.
Let's start by talking about how the income statement has panned out.
Yeah. So if I have to see your 9-month FY25 numbers, how they stand right now, well, revenue is around 1,000 odd crores. You have EBITDA at 917 odd crores. Margins have remained stable since FY22 at 88% and a little bit of change there. And net profit as of 9 months is 129 crore rupees. However, on a year-on-year growth, there is a fall. Even if you see, the compounded annual growth rate from FY22 to FY24, it is on the revenue and EBITDA side, you've seen single-digit, degrowth. We did see an uptick when you compare FY24 versus FY23, but FY22 was higher in terms, and you've seen a fall. Margins have remained stable for all of these years, like I mentioned, but because of this degrowth, we are giving a thumbs down on this one. And it's key to note that the company's revenues are fixed based on PPA tariffs, and the company did see limited capacity additions over FY22 to FY24 to what is expected based on their order book right now. So that could have been one of the reasons. But it's a thumbs down on the income statement, Agam. But how does the balance sheet add up?
It's not bad. It's not bad because remember that the company is in the EPC, so naturally they're going to have some amount of debt, and this actually is on account of the working capital requirements that the company have, or companies like Acme Solar have. And at the moment, it does have a relatively larger equity base. So it has about nearly 2,000 crores in terms of shareholders' equity. Remember, its market capitalization is a little less than 12,000 crores. So based on that, the equity base is not small. And in terms of your cash and cash equivalents, that stands around 533. So it does stand out to be in a pretty comfortable place, at least at this point in time. Sure, its gross debt stands at 1,000 crores too. But for a company of this size, and if you consider the net debt to equity, it's not considerably high. It is in reasonable limits. And of course, we'll get more idea from the management with respect to what they want to do about, as things stand and the way they have their growth rate cut out with respect to their projects and, the upcoming capacities that will be on stream. So a lot that will be deciphered. But on the whole, at the moment, it does seem like the balance sheet looks all right. So it's going to be a thumbs up. But I reckon that is the order book which has seen a substantial growth.
Yeah, they have, a contracted portfolio of around 6.9 gigawatts. 2.5 is operational, but they've seen a significant, uptick in order book, and they've also executed. So FY24, they ended at 1.4 gigawatts. The expected in FY25 is 2.9 gigawatts. FY26 to 3 gigawatts. FY27 to 5.3 gigawatts, and by FY28, the target is 6.9 gigawatts, and this is, stated by the company itself, and they have most of this portfolio under construction right now. So what we've seen is an estimated growth, and you do see a good uptake, and the growth of the company is determined by how much capacity they add, because that's where their revenues and cash flows are coming in from. So from the order book perspective and the expected and anticipated order book as per management commentary, brokerage notes, etc., does look good. So it's a thumbs up on the order book. Agam, how do the cash flows, shape up?
Yeah, so cash flows from operations are certainly looking at an improvement, and perhaps on expected lines, because we do have an improvement in your operating metrics based on your growing order book, the execution, and the consequent impact on your income statement and your balance sheet, of course. But in general and overall, because of the fact that you do see pretty steady growth coming in, well, I'm not talking about the growth of when it comes to your top line, but I'm certainly talking about your bottom line growth, and your margins have remained stable, because of which they've been able to generate cash flows in general. But on a net basis, it's been a little bit more volatile. They were positive in FY22 and FY23, but that was not the case in FY24. Again, we must remember that the company is making investments into executing an order book, which does give it a good amount of visibility at this point in time, which is why we certainly won't give it a thumbs down for that, and we'll give it a neutral rating. But of course, that negative number for FY24 is something that we can keep an eye on, and whether or not and when it becomes positive, in fact. But it's not been a bad way to go about as far as cash flows are concerned. Again, we must remember that the company also deals with, or rather is an independent power producer, and it does depend on distribution companies to come through in terms of their payments as well. But besides that, there isn't much in terms of, engineering, procurement, and construction services, or operation maintenance for that matter. But that's as far as your income statements go. Let's talk about two of the other crucial ratios here as well. Mika, why don't you take us through them?
Yeah, so first one is return on your common equity. You saw FY22, 4%. You did see a dip in FY23, but FY24 is when you saw the real growth, 31%. Now, the company did list last year, and we have to see whether they maintain. But when you look at it from the top, the trajectory is good. But the one I want to talk about is the bid-win ratio. This is basically the company wins its orders by by bidding in tenders. So this bid-win ratio is dependent on how many tenders it it bidded for and how much it got allotted and won those. So FY22, 15%. You did see a dip in FY23, 6.5%, but you got to know that FY23 was a year where a lot of asset monetization did take place, so the focus was different. But FY24, it stood at 61%. So when you look at these two key ratios, it's a good picture. So it's a thumbs up on this one. But moving on to street cred is where it does not look good, but neither does the market right now. Yeah. How does that shape up?
No, fair enough. Look, so, I mean, as far as street credentials are concerned, it's been a tough period, because firstly, they listed in November of 2024, which was just a few months ago. And do remember that since the month of October, we've seen the markets fall, broader markets even worse. And hence, Acme Solar is, and rather its decline since its issue has been a consequence, has seen its consequence of being a part of these markets, these falling markets, which means that they've not exactly done very well. Also remember that a lot of these IPOs were listed at a little bit of a premium. Of course, at that point in time, the markets were doing well, which is why the lead managers gave it a little bit of a premium. and that premium, of course, was sold into. In fact, in the last, last 3 months or last 2 months, if you can say, just consider the year-to-date performance, it's been a decline. So it's not been the strongest of them all. But that's as far as street credentials are concerned, which is why we'll give it a thumbs down. Let's talk about shareholders, and how things have panned out in terms of shareholding.
Not a lot of change. Obviously, we don't have historical data because they did, list on exchanges.
Yeah.
As of their November listing, promoter and promoter group shareholding stands at 83%. It's a strong ownership on that point. There's no change even if you look at it at this December ending period. We did see on listing you had a lower DI interest versus FIIs, 5.8%. But over this period you have seen slight shift. DIs now hold around 6.97%. FIIs at 5.54%, while as the other shareholders hold around 4%, and that's remained constant, since the listing. But it looks good on the shareholding point as well, so it's a thumbs up on this metric. And lastly, we come with street coverage, and the stock has been getting a lot of buy calls from the street.
Yeah, I just want to make a quick point in shareholding. Because of the fact that the promoter holding is at around 83%, of course, it is mandated that over the course of the next few years, this particular shareholding will eventually have to come down to around 75%. It's a wait and watch. I'm sure that a lot of these companies in general have some amount of time before the shareholding can come down to the required limit of around 75% and lower. But of course, that's something that a lot of investors may want to keep an eye on. It may require some amount of selling to institutions, and at that point in time it'll be also interesting as to which of these institutions in fact go in, buy into the company. Of course, there are several upsides to this as well, because when these share sales do come through, they oftentimes don't happen at significant discounts. Many times they happen at premiums as well, depending on your demand and supply ratio at that point in time. But that's as far as shareholding is concerned. And again, even in terms of the listing, in terms of your domestic institutions, you do have some pretty well, I would say, some marquee investors who in fact do hold equity in the companies. Case in point, Nippon AMC, SBI AMC, Tata Mutual Fund for that matter also holds stake in this particular company, which of course bodes well for the shareholding of the company, which is why it's going to be a thumbs up there as well. But finally, we move on to street coverage and consensus ratings. Now, remember that this company is just listed back in November of 2024, which means that, we don't have too much going in yet. It is tracked by 4 analysts, and all of them are recommending a buy with a 12-month price target of around 310, which means that about a 57% upside from current market levels. So this is a thumbs up here as well. And that actually brings us to your overall rating for the company. If you just take all these into consideration and sum up all the thumbs ups, so, except for the income statement, which actually has the potential to start looking better here on, considering the kind of visibility that the order book gives you. Well, notwithstanding that, it's a thumbs up for the balance sheet and the order book. Let's move on and talk about the other factors as well. We have good key ratios along with shareholding, and of course street coverage also giving you an up move there. So all in all, that gives us a rating of around 5.5 out of 8. So that's as far as your ratings are concerned. We have the management here with us, but before we go, we want to very quickly go through the SWOT here. So Mihika, let's talk about strengths and weaknesses.
Yeah. First is their integrated business model. They do have the in-house EPC and OMM capabilities, which does help with cost advantage when you compare it to a peer like NTPC Green. They also have an potential to expand their EBITDA per megawatt, which is key for something like an Acme Solar. And they have secured cash flows for a long period of time, 20 to 25 years, depending on the PPAs that have been signed. But on the weakness side, they are putting their focus in FDRE and hybrid projects. However, there is a lack of experience because these tenders have just started being floated and have just started becoming popular. They do have a dependence on their top 10 off-takers when it comes to who's buying the power generated, and their focus does lie on select states. But opportunities and threats, Agam, where does that look?
This one is a fairly simple one because, in fact, if you consider the opportunity of timely capacity execution, the same thing can be a threat as well. A delay could be a potential threat. And similarly, in terms of opportunities current favorable market conditions, the way in which the trend is going, the very ambitious target that the government has also set in terms of solar, all these aspects bode well for not just the company but the entire sector. But do remember that because this sector is being thrust, there is also the element of competition, a higher competitive scenario, which could potentially be a threat. But on that note, let's get in Nikhil Dhingra. He's the CEO of Acme Solar. Nikhil, good morning, and thank you so much for taking the time out. It's been a few months here, and it does seem like your company has gone from strength to strength, especially when it comes to the order book. I reckon that demand, of course, is strong from all quarters, including government quarters as well. So I actually want your view on, firstly, the order book that you have at this point in time, the pipeline that you can tell us about, as well as how the order awarding activity has come through in this final quarter of this financial year.
Sure. In terms of the order book in our business, sometimes it gets concentrated, and you tend to win in some periods more than you do in other, because it's a determinant of the policies and the inventory lying with various central counterparties who are REIAs, who are responsible for signing PPAs with the states. In terms of the exposure, I was just listening to what you were saying. The top 10, in the last few years, all of our order wins have been with the REIAs, the central REIAs. So going forward, all of our portfolio will be with them. And of course, they have back-to-back PPA with the states. And that is great for us and all the developers, because it's a AAA counterparty. And there is a payment security mechanism which is available with these counterparties. So as far as order inflows are concerned, we have quite substantial orders to execute. We will be executing till 5 gigawatts in 2026, and we'll be going to 7 gigawatts in 2027 as per the PPA timelines. So as far as new projects are concerned, we have seen that they are in the last couple of months. We are seeing that there is a slowdown in terms of the new bids which are coming, and that is because of the transition from a you can say ALCM to ALCM, and also in terms of the PPA signing has become a focus for the REIAs. So we are seeing that the next couple of months there should be a strong order, some bids which will be coming, and government has also mandated that now all solar needs to come along with storage. So that's a key change which will be very good for taking renewable into more of a predictable source of power, and that is a very good move for the grid stability as well. So we'll see a lot of tenders coming up in the new regime where the cells need to be procured domestically. As far as we are concerned, with our order book, we have a exponential growth if we are as we are planning to deliver these projects. But as far as new orders are concerned, we are looking to take new orders which allow us to build our pipelines till 2030, as we have a target of around 10 gigawatts by 2030. And accordingly, we have taken connectivity, and accordingly, we are building our land bank and the team. So we are looking for new orders, profitable orders, but all of them now, just to be clear, will be coming in hybrid and FDRE or battery. It is now mandatory part, so there is no option but to, for every utility like us, these FDRE, hybrid and battery are something which you have to do, because no longer will you have a plain solar tender coming up.
Mr. Dhingra, you've mentioned how the energy storage mandate has coming, and you're going to see that as a part of every tender next. How does that change on how the company, executes? Could that add to maybe execution timelines? Because previously that wasn't a part of the process. So what needs to be, taken up by the company? What needs to change?
Yes, it's a good question, because it's a key change in terms of the overall project. So first, on the before execution, I would like to say that it makes our power more appealing for the counterparties, because we were seeing that some of the states in India have a lot of already have tied up a lot of solar capacities. What they were looking for is the peak power, because there is a peak deficit which is higher as compared to the base load, where government has done a great job in terms of increasing the supply of electricity in the country. So what we are just seeing is the remaining peak deficits. So this power is something which is very much desirable by all utilities. So there is a great demand for it, and that is where players like us come into being. And of course, the renewable energy industry as a whole is now focusing on all these projects. In terms of the execution risk, batteries are on the lower side as far as execution risk is concerned. In terms of the procurement and installation, they are far simpler than installing a solar or a wind plant. The risk with batteries are more in terms of as a country, we have not installed much batteries, but globally, batteries have been installed on a very large scale across US, China, Australia, and various other countries. Because in India, the pricing has been a concern. The batteries pricing were on a higher side. And of course, we were still on our growth phase in terms of the deficit in power. Now that we have substantial renewable in the country, batteries or any kind of storage, be it pumped storage, are mandatory part of the grid. So in terms of execution, I would not say batteries add to the risk. Of course, they add to in the procurement side of things, planning side of things, the technology selection kind of thing. They add to some extra work, but that's a welcome work because we are being compensated for that extra work through an increase in tariff, which makes the projects more, I would say, attractive for the customers, attractive for the sellers. So it's a good kind of addition.
But would this, mandate also maybe increase the cost for setting up a project? Because like you said, there are, things that you have to look out from the procurement. Could that have a hit on your margins, which have remained stable since FY22?
So in terms of the margins, our business is fairly predictable post we win the bid because in terms of the project we win, the revenues are stable for 25 years. So the only risk in terms of our sort of business is whether you are bidding with the right sort of assumptions in terms of capex and operational assumptions. So primarily all of our projects are centered around a large component of solar power, right? There will be storage and there will be a little bit of wind. So in terms of the solar, we have around 15 years of experience in terms of executing these plants, looking at the generation data across all the states in India. So we are fairly comfortable with the variability in that source of power. In terms of the cost, so the cost is always in sync with the tariff. Because when you are bidding, there are no unknowns as far as your scope of work is concerned. There is a clear mandate to what you need to install, and there is a clear sort of tariff which you get in the reverse auction. There are no new components which you find out after the bid. A company like us, which does our own EPC and of course have been doing it for the last 15 years, we have a fair idea of what is to be installed and where it has to be installed, where do we have connectivity. So in terms of there is no unknown. So cost, if it is known prior, it does not add to the risk because you can price it in your tariff bidding. So there will be, of course, increase in the cost. The cost for all the FDRE and hybrids are higher than the solar plant, but the tariffs are also much higher. And of course, the CUF which you do from these plants is also higher. So the amount of power and the price of power both are higher in these bids, and that is in sync with the higher cost.
Right. And Nikhil, a final question then. In terms of assessing your balance sheet, are you comfortable with these current debt levels? I reckon that a lot of this will be used for working capital. Are you looking to reduce this gross debt? If you could also give us a picture on internal accruals of whether or not they will be enough for now when you take on your expansion and also executing your order book.
Sure. So we have done a lot to reduce our debt since we listed, right? We have reduced debt by around 2,100 crores since we listed. So as you will see in the last quarter where we declared results, we have mentioned that we have repaid debt of to the extent of this much 2,100 crore because in the last quarter and in this quarter we have done that. So the debt has quite reduced in terms of our operational EBITDA to debt. debt, right, we are around at a much lower number. Our target is to be under 5.5 because our EBITDA, as you would understand, we are not like conventional manufacturing companies. We are getting 25-year revenue, which is actually an exception. If you look at any company, 25-year stable revenue is only available in a utility business, and more so in renewables, because even the EBITDA margin is fairly stable because there are no operational costs like fuel cost, which is dependent on outside factors. Other than the interest rate, there is actually nothing which changes on a year-on-year basis, and that also has been fairly constant for because of the government push on the renewables. We have been getting financing within a range in terms of the good projects. So there is in terms of the debt, we are at a lower level. We have around 6,500 crores of net debt, and our run rate EBITDA is around 1,800 crores. So quite comfortable. In terms of our net worth, I was just seeing what you. So we have a net worth now around 4,500 crores because it is not around 2,000 crores. That is pre-IPO. So post IPO, our net worth is now 4,500 crores. So just to correct the numbers, I think you were showing. I was waiting for you, so I saw the numbers. So in terms of the debt to EBITDA, we're quite comfortable. And as we move forward, we will always try to keep the operational debt to EBITDA within that range of 5.5, because our debt are 20-year debt. So it is not a debt which needs to be returned in a short period of time. So this has to be in sync with the cash flows for 25 years, which a PPA generates. So I think as we move forward, we will always, you also mentioned that we may need to raise equity in the next 3 years. So our current capacities and current cash flows are sufficient to do the capex we want to do. But let's say if we need to raise equity in the next 3 years, we will see if we have any debt reduction more, something we need to do to reduce the debt, we will always do that. Because we will never want to increase the debt amount beyond a debt to EBITDA of 5.5.
Right. No, Nikhil, point taken. Also, your point taken on post-IPO balance sheet updates, which, of course, we will make those respective corrections. But completely out of time. So thanking you for joining us and giving us a lot more clarity on the company.
Thanks a lot. Thank you for having me.
All right, there you have it. That's the management of Acme Solar telling us about all that is in store for the future. But that is all that we have in this edition of KYC. But lots more lined up on the other side. Stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स
Thanks for tuning in to Talking Point Unfiltered. The idea of this podcast series is to try and get into the minds of our guests and understand how do they think about the current situation, be it business, be it markets, and what are the ramifications over the medium term and not necessarily what will happen tomorrow. Our guest today is Samit Vartak of Sage One. Samit, great having you. Thanks for taking the time out.
Absolutely my pleasure. So I think this is the first podcast I'm doing, so I'm looking forward to it.
Yeah, likewise, Samit. I mean, it's been the first time that we are talking on such a format as well, so really looking forward. So, Samit, there is no better time to talk about the market sentiment than when the market is at its worst, right? Because it probably gives you the best opportunities as well.
Yeah.
How do you see this current market environment? Because the unanimous calls that I get range from how it is prudent to not be invested in India currently. Yeah. If you want to be invested, then look at only the large caps. Don't look at the mid caps and the small caps, and keep a certain percentage of your portfolio in cash. There is almost nobody saying that start hunting actively in the mid cap and the small cap space, or that take an oversized bet out there in that bucket. How do you think about the situation?
Yeah, I mean, it's always good to have too many worries around you. You know, that's where you find value, right? So I think after a long time, at least you're finding exciting opportunities. It's not the universe which has become cheap, but surely, you know, if you're a stock picker, you don't need the universe to be cheap. At least there are so many companies in this kind of a market, you know, which are trading at like 15, 20 times kind of a multiple, you know, which were not available. I mean, what happens is that in this kind of a market, which is more driven by liquidity, when it comes down, again, it's because of the liquidity, right? That some people are forced to exit, you know, some just take allocation decisions at these kind of times. And it's an extremely consensus call these days that you allocate to large caps if you want to be in India and get out of mid and small cap kind of space. So when liquidity comes out, good, bad, doesn't matter. Everything falls. It's just a matter of liquidity. And there's so much money which had gone into this space that when things come out, in this kind of times, when there are so many, you know, alarming calls, who is going to be buying at this point? So there are very few buyers, a lot of sellers. Some are not getting out because they probably don't have liquidity to get out, right? So I think these are the times when you get this opportunity. And so I look at it as a cyclical, you know, it's like almost like an annual sale. Or sometimes there is one big sale which happens every, 3 years or, 2.5, 4 years. That's a very, very common timeline when there is a big sale which
is
happens.
That sale, you think?
I think so. This is definitely, last correction we had started in December 21 and it continued sort of towards, 22, probably half of the year. And then 3 years down the line, again, September 24 is when we had the peak in the market. So we're already there, 5-6 months. And generally, I've seen that the average duration of correction is that 6 to 9 months. Right? And the faster it corrects, the shorter is the duration.
Right.
So this time, I think the speed was pretty slow, but then last 1 month, the speed has just accelerated. Right, so there has been a sharp correction which has happened, and again, I think we need to remind ourselves that you will never get such a big sale unless there are warning signs around you. So I feel happy if there are too many people warning against it. That means that the weak hands can't withstand such warnings. Only the strong hands will withstand these kind of bombardment of warnings, not just from Indian investors, but also what's happening geopolitically. So I don't know what will happen in the next 3 months or 4 months, but I'm pretty sure if you are a good stock picker from a 3-year perspective, there is exciting opportunities, and it will be shocking to me if you can't make money over a 3 to 4 year period, reasonably above average kind of returns from the kind of valuations which are available in some of the select good quality companies. Right? And again, I think, I put up one analysis on Twitter, which is comparing large cap, mid caps, and small caps, right? And I'm comparing more of large cap and small caps, where I divided the universe into 3 buckets. One is PSU companies, right? Then the private banks, because PSU companies and private banks trade at very different multiples, right? And then you have the rest of the universe, right? Large caps, when they say, large caps are trading at 19 times forward or, 21, 22 times kind of backward looking, is mainly because of the mix of the large caps. 1/3 of the profits in large caps come in from the PSU basket, which trades at 8, 10 times kind of a multiple, right? And then when you look at the private banks, which make up for about 17% more, so 50% total, again, they also trade at that 15, 17 kind of multiple. And then you have rest of the bucket, which is trading today at 40 plus multiple.
Interesting.
These are median valuations of, so then you compare that with the small caps, right? There is very little PSU as well as private bank contribution from these. The both put together probably will be 15%, right? So then you look at the mix, right? And then you have the 85% bucket, which is trading at 30, 32 times kind of multiple compared to 40 plus in the large cap. That's the real comparison. You can't just compare a mix of bucket, which has all quality, but if the low quality is high in a certain bucket, overall you will feel that the valuations are low, but that's not really. I mean, how many portfolios have 33% allocation to PSUs?
So effectively you're saying that if you don't want to buy PSUs and if you don't want to buy private sector banks, then the large caps is probably more expensive than the median small cap.
Absolutely. Just look at all the companies. Just remove those 2 buckets, which are always cheap. You can't look at them from a P multiple, because for a 10 times P multiple in a PSU can be also expensive.
Right.
When they trade on an average 5 to 6 times multiple.
Now, for a lot of people who may ask listeners and viewers that there should be actionable points in a conversation, I think the last answer gone by is truly the most actionable point. You don't need anything else. You get some of the key points, screen for yourself, do a little bit of research, and you will get the answers yourself. You actually won't need to watch the rest of the show also if you want. But I think, Samit, thank you so much. That was very well explained. Now, I want to get to the mental aspect of it before I also nail it down to whether you find a confluence of all of these factors in the markets currently and what are those pockets maybe. But just one mental aspect that I want to get out here. You would be owning some small caps which would have seen a drawdown in this last 2-3 months, right? Some maybe 20%, some maybe 30, some maybe 50, what have you, right? How do you decide where is it that you get out of? And how do you decide, can I let me stay put? Because when it falls 30, 40, 50%, you are scared obviously about whether the story is gone wrong or is it just a valuation correction or everything is going down. So how do you decide?
Yeah, so I think one of the big mental reset that one needs to do at this point in time is detach yourself from the existing portfolio. Think as if I am restarting, building a portfolio. I have new money, I need to build up a portfolio now. And see what kind of decisions will you take then, right? Unfortunately, what happens is that because of the baggage of, you having taken maybe wrong decisions, or just because of market, fall, things have corrected, you get clouded by a lot of those confusing facts, right? So once you remove that, build your completely new portfolio and then see, is it the same as what you have now? If there's a big difference, just change that. Just make that transition, because after all, your returns going forward will be based on today's valuation, based on today's optimal portfolio. And you need to build the optimal portfolio now without the baggage of having your old portfolio.
But it's an easier said than done thing. Are you able to do it?
I mean, it's just that you need, see, sometimes fund managers do have restrictions of getting out. Sometimes you just can't get out, right? Because by getting out, you probably will have 10% more fall or 15% more fall in the stock, right? So that becomes a hurdle. But for most of the investors, that's not a hurdle at all, right? So it's much easier for, a retail investor to do this adjustment, right? But at any point in time, even as a fund manager, I need to think, my portfolio is what it is, right? There will be some companies which maybe were highly valued. I may not be comfortable. I really love the businesses, but I don't like the valuation. A lot of those companies actually have come back to a very comfortable valuation. So you may have cash or may not have cash. The cash decisions would be very different. You may go for attractive, but I think you need to think about the same thing even here, that you think that whatever you have in your portfolio is an opportunity cost for you, right? You can easily replace that with something that you like, So if something else which is outside of your portfolio is much more attractive, you replace it. This is a time to swap. First of all, if you're in loss, this is a time where you can book losses, save paying taxes, and at the same time get something which is really attractive. So if you're aware of this fact, at least you will consider these factors for decision making, and it would help, because most investors would have lost value in their portfolio. They may not have cash, right? And it's easier for people who were lucky enough to keep cash. But don't bog yourself down with that. Whatever is in your hand, make the best optimal portfolio out of it, and then you'll be shocked. This can continue for sometimes 8 months, 9 months, sometimes a year, 2 years. But when things rebound, you will make up for not only the lost, portfolio value, but even make up really good returns in a matter of 4 or 5 months. It has happened multiple times. I mean, during 2009 fall, small caps had fallen by 70%. And in the next 14 months, the markets were up, the small cap was up 3.5x. That means they recovered entire fall. I mean, such a massive fall. This time it's, the fall is like 1/3 of that.
Yeah, exactly.
Right, 1/3. So it doesn't take much time to recover. But more importantly, make sure that the companies you have are the ones which will recover, because there will be many companies, in your portfolio, which may be a lot of story stocks, which would be much more cyclical, where there was a story, and many of the time in the long run do not do well. But, like I had made a presentation of how cyclical companies, in post-COVID, in the next 4 years, on an average, have gone up 10x, whereas good quality companies have gone up less than 2x during those 4 years. There is a huge gap. Now, if you expect that these cyclical companies will continue to, if they have fallen by 50%, they'll quickly recover, that's like living in a fool's paradise.
So you believe that change will happen now?
That change will happen. But make sure that the portfolio that you have now is made out of companies which are longer-term structural stories, where valuation has become really attractive. Forget about the fall in your existing stocks. Some of them will never recover. The breadth of this rise was so large that many of those stocks, I would say, sometimes 70-80% of the stocks will never see the recent highs in many years to come. But if you are just looking for 15-20 stocks, make sure that whatever stocks you have in your portfolio, have that high probability that they will, in 5 years, they'll be much higher than the peak that you saw in the recent past.
And the simplest yardstick is possibility of higher sales growth, right? Because that was one of the key things.
Possibly higher sales growth, as well as possibility of sustainable ROE.
Both.
Because cyclical companies will not have sustainable ROEs. And they will have, generally cyclical ROE.
So you would have played cyclical companies from 21 to 24 if you had played, but you are also out of them. You are now going for the sustainable ROE businesses.
Yeah, I mean, see, one-off you can take a tactical opportunity, but majority of your portfolio, generally should not be. It's a high risk, high reward kind of a game. What we look for is high risk adjusted returns. That's more important.
Got it. So where do you find these pockets now, Samit? And by cyclicals, correct me if I'm wrong, but you are therefore effectively ruling out commodity plays or what else gets ruled out? Let's first eliminate that, according to you.
Yeah, see, highly cyclical companies. For example, what I mean by cyclical companies is let's take, for an example, railways companies. I had put up some analysis, a year back, on some of the PSU companies, railways companies, how they had gone up, and their valuation multiples had multiplied 5x, 10x. Valuation multiples, not stocks. Valuation multiples, right? So these are the companies where what they sell, their replacement cycle is really long. Sometimes 25, 30 years, right? So you will have great growth for 3 years, 4 years, because government is aggressively going for capex. Right? So then you will have a huge order book which build up. But who knows? Government can completely swap. They will completely reverse their decision of spending on a railway kind of a play and focus on something else, like suddenly. And then suddenly you will see that the order book has vanished, or it just staying flat, or going down slowly. And then no one wants to pay any valuation to these companies.
But so you are, sorry, just to interrupt here, but in a lot of these companies, the order books are still high. You believe the fortunes ahead will not be a factor of order book execution, but order continuation of order wins.
Exactly. There also has to be growth in order book, right?
Growth in order book also.
What P multiple, see, a lot of these highly cyclical companies generally trade at single digit multiples in the long run. PSUs also trade at single digit multiple because of that uncertainty. Generally they only have one customer. Railways also many times have one customer, and then the product replacement cycle is very long. That makes it more riskier. Plus they have huge fixed cost. So if you, during a bull market, go for too much of an expansion, raise too much of QIP money, when the things slow down, at that time your utilization goes down, fixed costs remain, and your margin just collapse. At that time, people go back, with low margin and low multiple. So the double whammy is huge, right? If your multiples from single digits had gone to as high as 40 times or 50 times, right? Add that to at the highest order book or the highest margins, that's one of the most riskiest things that you invest in. Because there is a risk to the valuation multiple as well as to the P multiple and as well as the growth. So that's what one needs to be careful. Are your companies, were they the ones where the valuation multiple went up too much? I'm pretty sure they will revert back towards the mean. Are their valuation really away from their long-term mean? Are their margins towards the higher end? Are those based on really, huge order books, but is their product replacement cycle really long?
Got it.
If it's short, doesn't matter. Then you can, those are much more resilient businesses. And whether your cost structure and expansion was too high, and are you ready for the slowdown? If the slowdown comes in and you're sitting on a huge cost structure, it becomes pretty risky.
Does the same hold true for defense? The reason I ask is, for example, shipbuilding. We were talking to Garden Reach shipbuilders.
Yeah.
But that management, so the book-to-bill ratio must be maybe 5x or 6x.
Sure.
But while their order book is 23,000-24,000 crores, I'm using that as an example, by the way.
Sure.
The management said that they expect that their order backlog or order book by the end of FY26 could be 40,000 crores from 25. And they believe that orders worth 1,80,000 crores would come in over the next 2-3 years, of which they will get mid-teens to high-teens kind of orders. So they expect order inflow.
Okay.
Their valuations have come off because all defense stocks have come down.
Yeah.
And their execution table looks solid. So does defense look similar like railways, or is that slightly different, you reckon?
No.
I'm asking this because a lot of people are invested in defense names.
No, it could be very different. See, again, I would go back to the stock picking. It should be bottoms up. In an rising tide, all the companies in any sector goes up. Number of companies in those sector also go up, right? Unfortunately, 10 years down, if you look at the 10-year, long-term perspective, there will be few winners. There is no question about it.
That's true.
Question is, are you in those? If you're invested in the entire basket, I'm pretty sure that basket is not going to work. We're not going to deliver. Right?
But so if the tide goes down, Samit, then will a good company also go down, or can a good company shine in a bad sector as well?
In the short run, it will also go down.
Okay.
In the short run, there is no like what happens in the upside, there is very little discrimination because it goes up because of the liquidity. In the short run, liquidity is what will take everything down.
Got it.
And that's where you get the opportunity to pick the right stocks. You look at examples of longer term companies, right? So for example, say APL Apollo. Steel cycle has gone nowhere. But in the last 10 years, look at their profit, profit delivery. Look at their, debt levels, what has happened. It's independent of the entire sector doing that well. Towards the end, then everyone gets funding and everyone starts doing well. But if you look at the next 10 years, 1 or 2 of those companies will be the winners.
Got it.
There won't be 10 players who will be the winners. So accordingly, I mean, you look at, in agrochemical companies like PI Industries, in consumer finance companies like Bajaj Finance or Chola, there will be only 1 or 2 winners. The rest will be below average, returns. And that's where you need to make sure whatever you are in are those winners. Think only from that longer term perspective, because most of the companies who went through upside where, the promoters were taking advantage of frothy times, they went for multiple, QIPs. They really don't have a real genuine long-term plan. They are making plans because now they are getting free money almost, and then they are deploying that money for expansion. But every expansion done at below ROE of what the investors, return on investment requirement is destroying value, not growing value. Right. Any investment that goes which is above your return on investment, that's the only which adds market value, otherwise destroying market value. But during bad times, until that delivery really happens, there is a big gap of 2-3 years, because they're going through capex and people get excited and they think that it's going to add, as much gross block, their market cap also is going to go up that much. And unfortunately, it doesn't happen. It happens for only 1 or 2 companies, and it happens across many sectors. So there will be multiple winners in this. There will be multiple winners in defense. There will be, in the renewable energy. There will be across a lot of cyclical companies too. But only bottoms up will work.
My final question, Samit, and that is on the futuristic themes, because now we're starting to see them making their presence felt. New age companies, or any few. I don't just mean tech players. I mean anything which is futuristic in nature and coming up. But use that as an example that we now have, or we will now have one tech company or a consumer tech company being a part of the index. And a lot of people believe that what's happened in the West, wherein the consumer tech essentially became a large portion of the index as well, because the profit pools are growing. So from the futuristic themes, where is it that you are the most constructive? Here, you may have a view which is maybe 5-10 years out.
Yeah. So I'm not that good at picking these futuristic, themes, especially ones where they're not really making good profits, not making reasonable ROE, ROCs. As I said, I would like to pick companies which are high ROE already, where, my evaluation, whether they are sustainable, are they going to go through that, 20% kind of growth. And I need a little more certainty. Then I'm pretty sure out of these packs of new age, there will be winners.
But that's not the point that you're fishing in.
I don't have the ability to pick those right ones.
Okay, so then let me reverse the question, since I mentioned last question. So what would be the top 1 or 2 bets in the, or top 2 or 3 bets in the portfolio? You may not choose to take names, but you could give an indication of what kind of businesses are there, what sectors do they belong in? Because I'm guessing now your portfolio is primed for the next 2-3 years, because you would have made changes, etc. So what are the top overweights?
Sure. So, see, there are certain themes where I'm, getting bullish again, just because of the valuation correction. There has been a huge time correction which these guys have gone through. And some of the themes which I like, one is, secured finance, secured lending. So whether it's gold finance, and again, there is one player who has significantly outperformed any other player in this, and where the gold prices have gone up by almost 40%, in rupee terms probably even more. So there is a huge sort of, collateral that has developed where you still have the potential to grow. So secured lending, it could also be, some of the home finance players which are going at 25%. You can see that their gross NPLs are still at 1% and the valuations have halved. So there are really good opportunities in maybe the smaller ticket size, home finance companies where they have pretty good risk evaluation, processes, right? Other area is, which I've been always, bullish on, are things like fabrication pipes, where we do keep on changing the tactical allocation. It went through, at one point we had, say, allocation of 10% plus when things slowed down, when the valuations went up, maybe we didn't think it was worth to completely exit it, but to reduce the allocation. So probably we took it to the lower end. But now if you see, there is a huge benefit to these players, mainly because of these patra players or the scrap converters. The price difference between, say, HR coil, newly manufactured HR coil, and these converted from scrap is barely 1 or 2 rupees. Right? So there is a big market for these guys to capture from unorganized, because why would anyone want to buy? So a lot of these players may completely go out of business because they don't have too much of sustainable power. They could, if they can't really sell much and make profits, in a year or year and a half they go out of business and generally don't come back. So there is a big market for these guys to capture, even if at a total level there is not much growth. Again, I'm positive on the power finance, I'm positive on the luxury real estate, but these are again not sectoral bets that
these are all bottom up.
These are all completely bottoms up, and that's how the sectors sort of build up. You need to make, because the winners can come in from spaces which may not be at a sector level growing, but it could be that in a tough market sometimes the weaker players just go out of business, and then the strong players still can grow at 20% plus, right? So that's what you want. That it's very difficult to bring in, because sometimes when the sector becomes too profitable, there are a lot of players who want to come into it. So you may get really good sort of feel from a demand side, but then supply can suddenly come up, and it just they destroy the economics of the entire sector. That's what is more important. I think the demand supply gap is most important. Demand is easier to predict, supply is very difficult to predict, because you don't know where and how quick the supply will come from. And if you have more confidence about that gap remaining, even if the sector is slow growth, but if someone is taking away more market share, I think it's better to bet on that. Market share gain, I think, is one of the most resilient factor for sustaining ROE as well as resilient growth, because those players tend to grow during ups and down cycles. Whereas if you're just betting on sector play, you are completely riding the bull cycle of that sector. And if you get that bull cycle wrong,
then
if there is too much capex which goes on, it can destroy your returns. You may make money in the short run when things are just evolving, but when things stabilize, at that time you could go through big drawdowns.
Great. Samit Vartak, so good talking to you. Thank you so much for appearing on Talking Point Unfiltered. Really appreciate your time today.
Thank you so much, Neeraj.
Yeah. And viewers, thanks for tuning in.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
जब भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. I'm Hiral Datia and with me is Puneet Javedi. Puneet, good afternoon. Clearly, the decline does continue. I mean, last couple of trading sessions, there has been weakness. Right now also, if you go to see, I mean, we did open in the green. However, the benchmarks, that's Nifty as well as Sensex, has dipped again. And overall, you know, there were positive cues that were coming in from Asian markets, and it was IT as well as the auto stocks that were actually leading the gains in early part of the trade. Overall, in fact, the market also saw an uptick after Friday's data that revealed that India grew by around 6.2% in October to December quarter, and fueled by our government as well as consumer spending. That was the key trigger point. But now if you see, we did hit a low, and from there has been a mild recovery. So we are off the day's lows in terms of where the Sensex goes as well. It's trading almost only 150 points lower. Nifty 50 as well is again come back to that 22,100 mark. We were way below 22,100 in trade as well. Let's quickly pull up Bank Nifty on the screens and see what's happening on that front, where the financials are coming in as well. I mean, 0.5% down take. We've hit a low of around 47,841 on Bank Nifty, but again, a 20 to 30 point reversal that's happening on that front. Let's look at the heat map in terms of various sectors. Where is the pressure building in and where are the positives? There you go. You just have IT and auto which are coming in on to support the markets. Interesting how auto is holding up with the kind of auto sales numbers that are trickling in for the month of February. If you see in terms of the sectors that are losing, clearly it's media which is down in trade, oil and gas, energy, PSU Bank Index, as well as Bank Nifty, Pharma are the ones which are playing spoilsport so far. Overall, if you see in terms of the stocks, if you can have a heat map in terms of the individual stocks as well, because in terms of performance, you have names like Coal India, Reliance Industries, IndusInd Bank, Bajaj Finserv and Bajaj Auto. These are the top losers on Nifty 50. What's holding up is names like Ultratech Cement, Eicher Motors, BEL, Grasim and Wipro. And if you have the Nifty contribution, if we can have that a chart on the screens as well, you will see names like Infosys, ICICI Bank, Bharti and L&T. These are the ones which are coming to the rescue. And that's one of the reasons why you're seeing Nifty, which has moved away from the day's lows. And Reliance, HDFC Bank, Coal India are the ones which are majorly contributing to the losses in today's session. So that's the broader, the benchmark and the larger market picture. Puneet, in terms of broader markets as well, I think the cuts are deeper to an extent. And the kind of mayhem that you're seeing is, nothing that can be done for it.
Yeah, definitely. The small cap indices were down almost 2% at the start of the trading session. It's recovered a bit, 0.2%. It's recovered there, but it's been a catastrophic day to say the least. Lows of about 13,427 on the small cap 250. We are about roughly about 120 to 140 points above that range, but it has been a downward day to say the least. We have seen a clutch of auto names which have supported the benchmarks, the likes of Eicher Motors, M&M as well. TVS has supported the mid-cap indices, but on the other side, we have seen a bunch of stocks in the auto pack hitting 52-week lows as well, and it's visible on your screen. Bajaj Auto being one of them. We've also seen Apollo Tyres, MRF, Hero MotoCorp being stocks which have hit 52-week low today again after the Friday's trading session as well. And let's look at the BSE 500 top contributors and losers as well. And some of the names will be stark differences. On the downside, we are seeing pressure on Angel One. Suven Pharma has been a stock that's been in a downward trajectory since the morning, and we saw some losses on the likes of Kim's as well. Krishna Medical Institute, the hospital chain, that was down almost 10% at one point in time. It has recovered since then. Infosystem is the other one that's under pressure. But on the upside, we are seeing some positives on Blue Star, and maybe the summer stocks are with something which we highlighted on Friday as well, is something that's doing well. Apart from that, PFC, there was a note in the morning on REC as well, and that is contribution. And Polycab is one which is a very interesting name, along with Ultratech, after the mayhem that the cables and wires segment has seen here. But overall, definitely a down day in the market, and that's been something which has been a key problem.
Right, a key problem that Puneet is pointing out to as well. But let's understand what has happened to the markets from their life highs, because major correction since the end of September is what we've seen. But to understand that further, let's head across to my colleague Mika, who has the details. Mika, over to you. What are you picking up specifically with regards to indices and sectors?
The weakness in the Indian markets has continued in March 2025, and this is something that Indian markets has seen since September. So let's gauge out how markets have performed since the high in September 2024, which was September 27. The Nifty 50 has declined 4,230 points. It's a 16% decline from the life highs. The Nifty Bank has lost over 5,800 points, an 11% decline from the life highs. The Nifty Midcap 150 has lost 5,000 odd points, which is a 22.5% decline from its high, and the small cap 250 has also fallen 5,193 points, which is a 27.8% fall from the decline. If you look at the market cap loss, well, large caps have lost the most, around 60.3 lakh crores. Then you have the mid caps, which have lost 19.3 lakh crores, and the small caps that have lost 12.4 lakh crores since the peak of the markets. And lastly, if you look at the sectoral indices and how much they've declined, you have Nifty Realty topping the list at 29.5%, followed by the Nifty Oil and Gas and Nifty Auto at 26 to 28%. The Nifty FMCG has fallen over 23%. Nifty Metal stands at a decline of 19%. Nifty PSU Bank, Nifty Pharma in the range of 16 to 18%. Nifty IT and Nifty Bank at 11% declines, and the index that has fallen the least is the Nifty Finserv, which has fallen 8%.
Well, thanks for that, Mihika. But let's also take a look at some of the stock-specific declines from the market's life highs of September 27 or 2024. My colleague Mahima joins in with some of the key details. Mahima.
Right. So, as you rightly mentioned, the Nifty high was recorded last on 27th September 2024, and this was at 26,277. From that, Nifty has now come down to 22,000 levels. Now, since then, what has the stock performance been like, in the benchmark as well as the broader markets? In terms of the Nifty 50, the biggest losers on the Nifty 50 since 27th September is Hero MotoCorp down by about 39%, Bajaj Auto down by 39%, and Trent down by about 39%. In terms of biggest gainers on the Nifty 50 include Bajaj Finance up by around 10 odd percent, Wipro up by around 5 odd percent, and Kotak Mahindra up by about 2 odd percent. In the Nifty Mid Cap 150, the biggest losers include the Carborundum Universal, which have been down around 45% since 27th September. Mangalore Refinery down by again 45%, and Tata Technologies, which has been down by 43%. In terms of biggest gainers, BSE is still leading the pack, up by about 20% since 27th September. Global Health up by around 12%, and SRF up by around 11%. In terms of the Nifty Small Cap 250, the biggest losers include Sterling and Wilson down by about 64 odd percent, Whirlpool India down by about 59 odd percent, and Honasa Consumer down by about 55 odd percent. And in terms of the biggest gainers, Narayana Hrudayalaya tops the chart by about 25% of gains, Redington Limited up by about 21%, and followed by Amber Enterprises up by around 18%. So these are the stock specific movements in terms of the biggest gainers as well as losers since the market highs of 26,000 levels.
Right. Thank you, Mahima, for getting us the details in terms of individual stocks. But let's also understand, what's happened since COVID, because with markets actually continuing that consolidation, it's very important to talk about the stock specific ideas that, Varsha has pulled up a list that are trading even below their COVID lows. Varsha, what's your analysis telling you in terms of valuations, management commentary, etc.?
Yes, so thank you for that. So we all know how markets are behaving. Just to give a data point, over 450 Nifty of Nifty 500 stocks have seen decline in February, and Nifty records longest monthly losing streak in 28 years. But to talk about the stocks which are still below at the COVID levels, let's see which all are these stocks. You have Bandhan Bank, which if you see the fall from COVID is around 19%, and fall from peak is around 30% that the bank has seen. Moving on, if you see the Johnson's Controls, the fall is like 19%, and the fall from peak is almost 29.8%. And you have a list of PVR, Inox, and Relaxo, which have seen, look at Relaxo, the fall from COVID is almost 16%, but the fall from peak, which is at September 2024, is almost 47%. Even if I were to talk about, SIS, the fall from the peak is around 28%, while VST Industries have seen a fall of 33%. Look at Whirlpool of India, almost 60% of fall that the company has seen. But, so these are the stocks which have seen which are still, trading below COVID level. But let's talk about the valuations. So I have gathered an historical valuations also, wherein if you see the median P for Bandhan Bank stands at around, PB stands at around 2.4x, while for Johnson's Control, if you see the current PE, the stock is trading at around 83x, but the median PE for the stock is around 121x. Then Relaxo Footwear, if you see the stock, the PE for the stock is almost 60x, but if you see the median PE for that stock is almost 101x. So you can see the fall in valuations as well. But moving ahead with the management commentary, what the management is talking about of all these companies, starting with Bandhan Bank, they aim at 55% secured mix by FY27, and they are expecting stabilization when it comes to credit cost with near 2%. And going ahead with Whirlpool India, so their focus is on the premium products versus the volume growth that normally the company sees. And the new launches include their glass door refrigerators and innovative washing machines. Moving ahead, SIS, their growth target is they are expecting 15% of revenue growth that they have seen since listing, and also a return to 6% of pre-COVID EBITDA margin that they are expecting. Then we have Relaxo Footwear, wherein they are expecting the improvement in margin on the back of cost optimization or back-end optimization that the company is doing. And lastly, on the PVR Inox, So FY25, they're expecting a comeback when it comes to 2025. Now they're also expanding 100 to 100 new screens in FY25, and all this growth that they're expecting on the back of blockbusters that the India has seen when it comes to Chava, and of course upcoming war too.
Well, thanks for that, Varsha. So we did get you some of the sectors that have been affected in this fall, some stocks that my colleague Mahima highlighted, and now comparison with the pre-COVID levels as well. But now if you're looking to cash in on this particular opportunity in this consolidated markets, which are some of the stocks that you should buy? My colleague Rucha has consolidated a list of the top 3 stocks across market caps. Rucha.
Yeah, so these are lists of top 3 stocks across Nifty 50, Mid Cap 150 and Small Cap 250. Starting with Nifty 50 index, the top 3 stocks with the highest potential upside is number 1 Adani Ports and SEZ with a target price of 156Y and an upside of around 49.5%. Next up is Adani Enterprises with a target price of 3,000 rupees and an upside of 46.5%. And then BPCL with a target price of 334 rupees and an upside of about 40.5%. So these are the top 3 stocks within the Nifty 50 index. So even in a bloodbath like this, you can according to the analysts on the street, up to 50% upside based on the Nifty 50 top 3 stocks. Next up is the Mid Cap 150 index. Number 1 is All India Limited with a target price of 576 rupees and an upside of around 69%. Next up is Delivery, target price of 409 and an upside of 66% approximately. And then Prestige Estates, target price of 1818, upside of 62%. Mind you, all these are based on the Bloomberg estimates and the coverage according to the analysts on Bloomberg. Next up, within the Small Cap 250 index, the top 3 stocks are number 1 Anant Raj, target price 1003, upside 137%. Next up is Kirloskar Oil Engines, 637 rupees as the target price, an upside of 109%, and Suntech Realty with a target price of 705 and an upside of 99%. So if you look at the Small Cap 250 index, the upside is around 100% or more than 100%, and the Nifty 50 stocks around 50% upside is what the analysts on the street have, and this is a consolidated list for you according to analysts covering the stock on Bloomberg.
Thank you, Rucha, for getting us these kind of numbers, because these are interesting names that we're watching out for. And again, these are not recommendations. These are absolutely based on Bloomberg estimates and coverage by analysts across market cap. So whether you should be looking at these names or not is what, you should be considering. But moving on, let's also welcome in Manpreet Gill, Chief Investment Officer of Africa, Middle East and Europe at Standard Chartered, to discuss about markets and what's in store from here on. Manpreet, good afternoon and welcome to NDTV Profit, and a pleasure to speak to you as always. My first question coming to you is overall the kind of mayhem that we are seeing in terms of broader markets versus benchmark indices. What is your read from here on? Do you think there is more pain, or do you think this is an opportunity to enter markets?
Good morning, and listen, always a pleasure to be on. Thanks for having me. I think quite a bit of pain, particularly when you talk about Indian equity benchmarks. But I think the perspective here is the most important thing, because one of the exercises we did was just look at Nifty, pullbacks in the context of history. And I think it's interesting that it's not unusual to have 10 to 20% size pullbacks from peaks in the middle of bull markets. We've seen them, numerous times before. I think there's no doubt though that this is one of the lengthiest on record in terms of number of days. And I think that's where it's feeling more painful than the size of the drawdown might be. But look, we're in a difficult world, a lot of uncertainty, particularly in global markets. And I've often said for Indian markets, the risks are often global rather than domestic. But in the bigger context, just looking at the size of the pullback since late September last year, we're still looking at this as an opportunity to add, and particularly for investors who just haven't had a window in the strong rally of the last couple of years. So we're still optimistic.
So Tushar, Manpreet, my question to you is, people are talking about probably this is an annual sale in the current market scenario. Do you still agree with that, or you're saying that people still should be cautious with regards to stock picking?
No, I think I'd look at this very much as a buying opportunity, and the reason is that when we look forward here, right, the best clue sits in, the expectations of economic and corporate earnings growth. We've undoubtedly been through a bit of a soft patch, but when I look at expectations for the quarter ahead and a couple of years ahead, we still see room for optimism and room for both to accelerate from this point onwards. And that's coming off obviously some support both from the fiscal side in the budget and of course, we think more so from the rate cut side as well. So that is why, when the view we take, of course, on a broad market level, right? And at that perspective, we're looking at the size of the pullback saying, and we're comparing it to the forward expectations on the earnings growth side, and that's why we see this as more of an annual sale, like you put it, an opportunity to add more.
Mr. Gill, good afternoon, and it's Puneet joining in as well. My question was very simple. Where are you seeing these kind of opportunities? Any kind of sectors that you see which could be more lucrative, which have fallen a lot in this particular fall, and could be added in this opportunity?
So I think from a sector perspective, we are driven more by long-term fundamentals here, and the three sector overweights, at least as far as Indian equities are concerned, we sort of like technology, we like financial, and we like industrials. And these are more to do with more standalone, sectors. While there might be individual stocks and subsectors that might, provide a high beta opportunity looking for, I think for us, sort of, our view in the Indian markets is more sort of long-term fundamentals driven, and we think these are the three sectors. I think on the financials, for example, that's really driven by our expectation that growth remains well supported, and I think that is, of course, important from a credit quality perspective, and the yield curve still is fairly steep. So that's really driving our expectations there. Technology, though, I think is more an interesting one. So perhaps arguably one that might be more susceptible, especially if we see more sort of tariff-driven pain coming from the U.S. But to us, that would be the opportunity where, the downward pressure is more driven by global risk factors, but we're still optimistic on U.S. growth and demand for, demand for the sector's output. So from a revenue growth, we think that'll be less impacted than what the tariff headlines might suggest. So that's really the way we think about sectors.
Right, Mr. Gill, just one follow-up on this. In terms of, you mentioned about tariffs specifically for the IT sector. Do you see, what are some of the key aspects that you would look at going into fourth quarter earnings in terms of management commentary? Because, there has been some chatter around, because of the tariffs, there could be inflation could come back because of that. And, this discretionary spending could be reduced. So what is the outlook on that? And secondly, on industrial as well, if you can give us just some more fine print, because as a sector, the valuations have come off a bit from the highs. So anything specific within industrials that catches the eye?
So I think on the first one on tariffs, look, I think it's really about expectations versus what we actually get. I think there's already quite a bit of concern baked into markets, both in India and elsewhere, in terms of what could happen on the tariff front. So you're right. Look, there's some recent concerns about, is discretionary spending slowing? Is capital investment spending potentially could follow suit? But I look at it much more simply that if you think about economic surprises, right, where sort of the data is coming in the U.S. relative to what markets were expecting, we've gone through a long period of upside surprises, and now we're sort of compensating that with some negative surprises. But in our view, that doesn't change where we are in the cycle. We think we have further to go. Tariffs on their own, look, there are a number of scenario analyses out there which show, yes, I mean, to state the obvious, I guess tariffs, increase inflation a bit and then reduce growth on the margin. But we are talking in most scenarios of moderate tariffs, something to the scale of half to 0.75% of GDP on the growth side, and similarly on the inflation side, part of which is arguably already in the pricing market. So I think unless we get a significantly worse outcome than that, I think that shouldn't surprise markets. And India, of course, arguably being less in sort of the focus compared to currently US's neighbors, Europe, and potentially China. So I think we're less worried than what some of the market extremes would be. So that's why we see it as an opportunity. On industrial, look, for us, that's more of a long-term sort of call. We're actually sort of thinking if public capex, particularly in terms of infrastructure spend, we think about more success in the Make in India plan. So ours is a little bit more long-term in nature. Unfortunately, I don't look at individual stocks, so I can't comment on that. But I think at least at a sector level, we think that's really the long-term driver for industrials. Financials and technology perhaps a bit more tactical.
Right. So, Manpreet, you mentioned about the three sectors where you're positive on. Another aspect coming in is on the US tariffs. Now, two sectors that could get impacted is auto. You have pharma as a sector that we should be watching out for, and to a smaller extent, you're looking at textiles as well on the back of reciprocal taxes, which probably will come into effect from April. Now, with all of that said and done, with the opportunities that lie in the US markets as well, how would you actually look at playing these three sectors?
So I think, look, these are sectors which we'd always look at as what we call a core holding, right? So generally speaking, you know which our three preferred sort of OA sectors are. For us, these are more a part of what we call a broader sort of market holding. Some investors choose to do that through the sector exposure, and obviously many of our investors choose to do that through a broader sort of large cap or a small and mid cap sort of exposure. And I think that's possibly the right way to do it, because we can agonize over the sector all day, but I think what's really the macro sort of concern here is just how far could those tariff concerns go. In our view, we're getting to the point where a lot of those worries are now in the price. And that's why we're focused much at a somewhat broader level to say, look, whether it's the headline Nifty index or some of the smaller mid-cap, we have seen quite a big pullback. Our preference has always been to tilt towards the slightly larger cap equities. We think there's more protection built in there from risks, including tariffs, rather than take excessive risks in the small and mid-cap space. And I think that's really the framework we need to use. And when it comes to large cap, like I said, in our view, a lot of the tariff concerns are now priced to a large degree, which is why we'd rather be buying than selling at this stage.
Mr. Gill, just one final question from my side. You mentioned your preference towards large cap, and the sector as well was very clear. I just had one question on the consumer space. Essentially, we have seen consumption being affected over the last 4 to 5 months and growth being impacted for the companies. How do you see consumption as a theme? Because we've seen within large caps, a lot of consumer staple and durable companies have come out and called out demand in this particular time frame, but are expecting something better with income tax cuts and no income tax up to until 12 lakh rupees. So how do you see this particular space as a whole, and any kind of revival of consumption? What could be the factors to watch out for?
So I think I'd answer that question by looking at it through the macro data, right? Because if you think about whether it's a macro and an earnings perspective, the last couple of quarters, there has been a little bit of a soft patch, right? Which is not unusual after such a long period of strong growth. But I think it's still interesting that soft patch notwithstanding, regardless of whether I look at the macroeconomic forecast or I look at sort of the earnings growth forecast, it does look very much like that, a soft patch. And in our view, some of the measures we've seen in terms of particularly the budget, in terms of supporting direct consumption spending through the income tax benefits, or we look at the fact that the RBI obviously thinking there's room for at least some moderate amount of rate cuts. Those are all positives in terms of getting through the soft patch and getting consumer demand back to more normal levels. So I view it very much in the lens of the soft patch. We've seen that sort of price to some degree in the pullback in equity markets, but we don't really see that going away as a market theme.
Right. That's an interesting take coming in. Thank you, Manpreet, so much for joining us on the show and sharing the view. So very interesting. Financials, technology, as well as industrials are the preferred picks. Clearly prefer large caps versus small caps from the overall universe. And the key is they do remain buyers at current market levels versus being sellers. So there is great opportunity that's coming in at the way of investors so far. So that's a sum up from Manpreet as well. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
बजट भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV.
Welcome back. You're watching Profit Buzzers. Clearly, Puneet, auto as a sector is absolutely resilient in today's day of trade along with IT. We have the Feb auto sales numbers that have trickled in. And what's the trend that you're picking up? Because yes, there was pain to some extent.
Yeah.
Now, what's the scenario looking like?
I think it's very interesting because, a lot of companies have called out that rural has been doing better than urban, but two companies that have not done well today is Maruti and Hero. It's a very surprising trend that it's come in. The other one does make a lot more sense, that scooters have been doing better than motorcycles, and we see that trend in something like a something like a TVS Motors, which has done reported decent number of sales. The other one's also Eicher, which has also continued its growth momentum. Its strategy change post Q2 to focus more on sales rather than EBITDA margin has worked very well. So it's over 80,000 units for the fourth consecutive month. So that's very strong. But Bajaj has been a key disappointment. Two-wheeler sales in India is down 14% in the domestic market. Whereas in the passenger vehicle sales, it's clear that Mahindra is a key winner. They're up 19% growth in this particular year. Apart from that, within the passenger vehicle names as a whole, there's not too much to talk about apart from disappointment on Tata Motors and Hyundai. And in commercial vehicles, again, very interesting trend that, VCV, which is the commercial vehicle arm of, Eicher Motors, is something that's done, again, very well with new product launches, filling those gaps. While it's missed estimates, it's been the highest growth in terms of across the listed players. And finally, tractors has been one of the most promising sectors in this month, along with, I think, across categories where, growth, both Mahindra as well as Escorts have met estimates.
And I think in
that
Mahindra,
as
one
well.
more thing is we will
Yeah.
need to take into consideration the EV bookings
EV
because they were in the
bookings,
month
yes.
of February as
February.
well. So that's an outlier. But
Yeah.
how that stabilizes from here on
Yeah.
in the coming months is going to be an interesting aspect. So I think that's one of the reasons why we've
yeah.
seen that bump up
Yeah,
coming in terms of M&M, right? So that's going to be an interesting one to watch out for. And apart from that, clearly export versus domestic is going to be key with Bajaj Auto especially. The revival in terms of exports is something that we should be watching out for as well. But EV being a key aspect from here on. But the problem clearly from here on is not in terms of sales. No. Another aspect that we should be looking out for is on a Ola Electric. Now, the problem is not getting better for them because the layoffs have continued and you're seeing the second round now. The stock is down 3.5%. Tushar, my colleague, joins us with all the exclusive details. Tushar, a second round of layoffs coming in for Ola. What is it that you're picking up from your sources and why this kind of a step?
Good afternoon, Hiral. The Ola Electric story today is actually in three parts. First is the layoffs. This is the second round of layoffs in the last 6 months. About 1,400 to 1,500 employees have been let go in this particular round of job cuts. About half of these are contractual employees who were hired when Ola underwent an expansion spree in December last year. Remember, it jumped its store count, its experience centers by 4-fold to 4,000. But what sources are telling us that about a lot of these 4,000 experience centers are not even selling one scooter every month. To sustain these 4,000 experience centers, analysts tell us, sources tell us that a company has to sell 200,000 scooters a month, but the company is managing about 25,000 at this point of time. The second part of the story is the motorcycle business. Last month, Ola Electric unveiled its Roadster X, but sources are telling us that the motorcycle hasn't yet gone for homologation. This means that it is not yet ready to be launched or be delivered. Remember, deliveries are supposed to commence by mid-March. That's very unlikely at this point of time if homologation has not happened as on date. The issues are with thermal management. Remember, Ola Electric scooters have caught fire in the past because of inadequate thermal management. The battery management system has also problems. The motor has also problems. That's what sources are telling us. The third part is actually the share price or the valuation of the company. Remember, the company listed in July last year at about 71 rupees. Now that's down to about 54 rupees today. An investor actually complained that it's actually seeing a 50 to 55% write down of its investment into the company. This particular investor had invested in the company when the company was valued about $5.4 billion. So trouble from all quarters. When it will ebb, it's for anybody to see.
Got that, Tushar. Thanks so much for bringing us that exclusive story on Ola Electric. But with that, let me get in our guest for today, Amit Bhuptani, the Derivatives and Technical Research Analyst at Nirmal Bang Securities, and Avinash Gorashankar, Director Research at Profit Mart Securities, joins us. Gentlemen, thank you so much for joining us today. Amit, let me come across to you first, specifically on the auto numbers. Anything that's specifically on the charts that you see, because we've seen some wild moves on trade today. Anything that's specifically for Ola Electric or the auto numbers that are in focus for you?
If we look at the overall auto sector, Nifty Auto Index, completely it is, at this point of time also it is showing some negative trend only. Still there is not much of recovery. If we look at overall auto space also, only the momentum which we are witnessing right now is in Eicher Motor. Rest all we are seeing that a mixed bag reaction has been witnessed. In Ola Electric, we are seeing that it is continuously trading in a negative front, and we can expect more selling can be witnessed while going ahead. Once the counter gets stable over 60 level, then only we might witness some stability. Till that point of time, we might see more selling can be seen in coming days of trading session.
Avinash, good afternoon and welcome to the show. What do you make of the auto numbers as a whole? Anything that stands out for you?
Yeah, good afternoon. See, our sense is that within the overall pack, players like Mahindra and Mahindra have done a decent job in the month of February. And I think even the third quarter numbers which came out, plus the management commentary which came out, and the kind of EV launch they have done, and the kind of response they've got, I think clearly, I think it looks that Mahindra and Mahindra is very well positioned within the auto pack. the selling definitely seems to be, considering over pessimistic kind of scenario that increasing competition could actually affect their margins. But I think both from the UV side and the tractor side, I think Mahindra and Mahindra is a more stable player. Month of February has also been good in terms of volumes, and I think this could be a good bet if one looks at the longer term kind of picture, because they have been, telling the investors that EV is going to be the next growth engine for them. And I think looking at the kind of response they've got, I would not be surprised that next year, I think EV sales could be a good growth trigger for them. So I think we are constructive on Mahindra and Mahindra. Of course, the other stocks like Hero Motor or typically Ashok Leyland, Tata Motors, we believe that there could be some more weakness because volumes have not yet picked up. So I think there we have a hold, but M&M could be definitely considered to even accumulate at the current odd levels.
Accumulate M&M at current levels, that's the word coming in so far. But moving on, another stock that is in focus in today's session is BSE. If you look at the counter, it's trading with losses of nearly around 4.5%. And if you see in the last 5 trading sessions, almost 20% is the kind of cut that we've seen. Why this cut? And this is on the back of the SEBI proposal to change the formulation of open interest calculation. Now, what does this mean? What is the change? And how will it impact? My colleague Harsh joins us to tell us more. Harsh, over to you.
Right, on the 24th of February, you had the SEBI come out with a change in norms with regard to open interest calculation. The erstwhile norms was more based on volumes, and therefore ensured that there were larger volumes which exchanges were getting as a result of this, and those were used for the purpose of calculation of open interest, not anymore. And therefore you might see an impact with regard to volumes for both exchanges. Now, to try and quantify this, Jefferies is suggesting 5 to 10% impact overall. You will see derivative volumes currently at 45% for BSE, 70% for NSE drop, and therefore for BSE you will have 5 to 10% lower volumes, and that could impact EPS by 2 to 5% as per Jefferies. Goldman Sachs, though, they've cut their target price on BSE, 4880 now being the revised target price. They maintain their neutral stance. The lowering of industry options, they say, will likely also lower penetration. The SEBI consultation paper is to reduce undue volatility in equity markets, is what they're saying. Move doesn't bode well for exchanges. BSE shares largely pricing in the risk already to industry volume degrowth, and they're saying that the pricing in risk from implementation of the proposed rules could also impact exchanges. The final outcome remains highly uncertain, they say, and this paper was not expected by the market. That's why you've seen the knock on BSE, but they still continue to remain constructive and positive on BSE. Goldman Sachs target price 4880.
4880, that's the target price coming in on by Goldman Sachs. Avinash, let me come to you. How are you looking at this in terms of impact, and what would you advise investors to do with a BSE?
No, I think, Hiral, we have been constructive on the Bombay Exchange Limited stock. We believe that, this could be a short-term deterrent. But longer term, I think the kind of trajectory which BSE has and the runway of growth which the company enjoys, I think definitely points out that, over the next, say, 12 to 18 months, these kind of events are unlikely to have any major earnings damage. So, I think the markets are overly pessimistic, and I think clearly, in the short term, it's going to be the news flow which is going to impact the stock. But I think going forward, looking at the kind of positioning BSE has got, more importantly on the derivative side, and expecting that probably in the very near term NSE could get listed, we believe that BSE has got several growth triggers, and I think with the capital market offerings obviously getting impacted because of the poor market sentiment, that is also one reason why the exchange stocks are under pressure. But I think clearly, looking at the next 12 to 18 months, if any correction further happens, we could definitely be further constructive on the stock. We would definitely believe that growth triggers continue to be strong. But yes, in the short term, the markets would obviously, keep the stock under a little bit of pressure.
Long-term positive, 89% is the kind of upside that a BSE has seen in the last 1 year as well. Amit, what are charts indicating?
Same view will be just from my end also. If you look at the overall setup, more selling can be witnessed while going ahead, but it is a short-term selling as per the chart setup. But the support for the stock is at 3900, where we are seeing that 200 DMA support is also coming at that level. So currently, while going ahead, more 3 to 4 days selling can be seen in this counter. But once counter comes near 3900 to 3950 level, after that we will witness some buying pullback in this counter.
Got the view, Amit. Now, the second theme is very interesting with, cement maker Ultratech venturing into the cables and wires business with an 1800 crore investment. Last week had an impact on the stock itself, but apart from that, it dragged down names such as Polycab, RR Kabel as well as KEI Industries by almost 20% on Thursday in trade. Now, the company hosted a conference call on Friday and discussed with analysts some of the key aspects of this particular investment. My colleague Somit joins in with some more details on the same.
Well, yes, the company did hold a conference call on Friday post-market, and what they are saying is that they're aiming at asset turnover ratio when it comes to this cable and wire investment of around 6 to 7 times. They're aspiring at 25% internal rate of return and ROCs to be more than 20%. In fact, for FY30, FY31, they're expecting the return on capital employed to be close to 25%. They're expecting this unit's EBITDA margin to be as per industry average, and they do not plan to add further capacity when it comes to cable and wire division apart from the 1800 crore that they have already announced. When it comes to capacity utilization, they're expecting full capacity utilization to hit by around FY30 and 31, and that's when the company's ROC will be more than 30%. When it comes to which products they will be entering into cable and wire, obviously wire they are entering, but in cable they are only focusing on low tension cables as only. When it comes to the revenue mix, 60% of the revenue will be derived from wires, while the remaining 40% will be from cable. That is what the company has guided so far, and they also mentioned clearly that they had explored other segments as well, which includes fans, lights, faucets, sanitary ware, furniture, tiles, but none of these were fitting their criteria. Hence, they are not planning to enter any of these segments going forward, at least anytime soon for these segments. And hence they have chosen cable and wire segment because that was fitting their criteria and not the other segments as of now.
Well, thanks for that, Somit. But let's look at the other side of the way, and brokerages have come out with reports on KEI as well as Polycab. And what do they make? Let me get my colleague Anushi to give us more details on the same. Anushi.
Okay, so post the conference call, and as Somit pointed out what the entrant could mean, let's look at what this means for cable and wiring companies like KEI Industries and Polycab and Jeffries' view on it. So Jeffries has maintained a buy on KEI Industries, but they've cut the target price to 4,260 from 5,475. Now this is on the account of the impact that we've seen in the stock performance. KEI Industry was down about 20% just a few days ago, while potential impact of the Ultratech's entry in business would be seen post FY29. So if we see the housing wires business, in which contributes about 20 to 25% of sales of KEI and is one of the segments that the companies focused on expanding their presence, they see mainly the impact over here with Ultratech's entry in this segment. So with this, they have reduced the medium-term growth expectation to 10 to 12%, what used to be 13 to 15% for FY28. Other than that, even considering the stock price impact and the earnings estimates now beyond FY26 to 27 number, they have lowered the price target multiple to 35 times as compared to 45 times for FY27. Now coming to Jeffries on Polycab, they've maintained a buy call, but again like KI, they've cut the target price to 6,485 as compared to 7,700. Now do note that Polycab was down about 20% in these past 2 days with the focus on Ultratech's entry for cable and wiring, which we've been pointing out. So considering what has happened, the stock's P ratio now is trading much lower than what it was, and this is versus the historical average also that we are seeing. And so however, there's no impact that Jeffries is seeing on their estimates of sales and PAT, which is pegged at 28% and 22% for the coming years. It is factoring in the market correction which has taken place and the rising competition beyond FY27, through which now they have cut the target price multiple by 15% to 32 times. This is again in line with what the 5-year historical average multiple looks like. But however, they pointed out two positives for
Polycab. One is the growing medium-term opportunity, which continues to be healthy for the business, and also exports is a budding opportunity with the China 1+1 theme in focus. So this is the overall view from Jefferies on KEI and Polycab.
Well, Anushi, thanks for that. Avinash, coming to you straight on this, because we've seen that stock correction on all these cable and wire makers. Any kind of outlook that you have on these?
No, I think clearly, the existing players like KEI and Polycab will continue to grow. The overall cable and wire market is growing by about 10 to 12%. And I think unlike, a B2C market, this is largely a B2B market where product recognition, relationships with your dealer network, relationships with most of the EPC customers has to be extremely strong. And it's going to take a very long period for a player like Ultratech to actually, bite into the market shares of these existing companies. So my sense is, at least for the next 2 to 3 years, I don't foresee any major kind of competitive intensity. Most of these companies are sitting on a healthy order book. I think the raw material input prices have also been reasonably good. I think overall, post FY28, I think one could see a little bit of competitive intensity. So I think we have been telling our clients that, players like Polycab or KEI, I think preferably Polycab could be a good kind of bet, looking at the fact that if the economy grows, because most of these companies are a proxy to the economy, and power sector, the way things are going, the kind of investments which are coming in, I would not be surprised that Polycab could show a healthy earnings growth for FY26 as well as for FY27. So we have a constructive view here.
Got the view, Avinash. Amit, on the charts, while fundamentally, Avinash has a positive view, anything on the charts suggesting for RR Kabel, Polycab or KEI Industries?
If you look at the Polycab, the stock has given a major sell-off from the upside level, but currently stock is trading at the major support of 4600 level. So till the time now it's not going below 4600 level on the closing basis. Till that point of time, we might not witness any new short position in this counter. The range for this counter currently is 5050 to 4600 level. So once the stock gets a clearance above 5050 levels, after that we will witness a fresh buying opportunity in this counter from where the momentum will be picked up towards 5500 level. So currently any new long position will be created only above 5050 levels. Above that we will witness a fresh buying opportunity in the market. Whomsoever is holding this counter should hold with the support of 4600.
Right, so that's with regards to Polycab and what we're looking at in terms of KEI Industries. But moving on to the pharma pack, you have Jubilant Ingreva. They've actually gone ahead and affirmed their 2030 vision, but the stock is seeing cuts of 7.5%. Earlier, it was down nearly 10% in trade. Let's head across to Varsha to understand what is it that is concerning investors from the analyst con call. Varsha, over to you.
Thank you for that. So first, let me just give a key highlight about the analyst call. So they have reaffirmed their 2030 vision with a target of sales of around 12,000 crore, EBITDA of rupees 2,000 crore, and ROC of 17 to 20% versus 12% currently. This growth will be led by specialty, health and nutrient segments, and they expect specialty and nutrient to contribute 80% to the revenue, and they're expecting this specialty chemicals to grow from 1,800 crore to 6,000 crore, along with margin expansion from 20 to 25%. And the CDMO pipeline and the semiconductor foray are these are the two things which they are more bullish about. They are expecting CDMO revenue to grow 5x by FY27, and the company is expected to expand its pyridine derivatives portfolio with 6 new products over the next 12 months, which are in pipeline, and the fine chemicals is expected to double by FY30. Now, they've also defined inorganic growth, and they've secured 2 contract wins, including the non-pyridine based agrochemical intermediate. Now, the 2 things which I think are concerning investors, one is they were expecting all this, 3 times of revenue, 4 times of EBITDA by FY20 now that has been extended to FY30, though in October con call they had highlighted that maybe few quarters here and there they can miss it. And the other thing is, when in such a market, when you're getting all the other CDMO companies or the other chemical companies at a very reasonable valuations, maybe that is what concerning investors, that maybe they're pulling out money from Jubilant and they want to invest in the other CDMO and chemical companies which were trading at a very high level few months before. So maybe these are the 2 reasons this is because of which the stock is down almost 7-8%.
Right, so that's with regards to Jubilant. Amit, let me come to you. What are charts indicating? Are you seeing an opportunity to buy currently with the kind of fall that we've seen?
No, I'm expecting more selling can be witnessed while going ahead. Continuously, we are seeing that carry forward selling has been witnessed from last 3 days of trading session, and I'm expecting on the downside the first support for this counter is at 550 level. Below that, 520 will be the major support. Once the counter manages to take support at 520 levels, from that point of time, we will witness some pullback buying. But at this point of time, I'm expecting more selling can be witnessed while going ahead.
And very quickly, Avinash, coming to you, your view on a Jubilant?
No, I think Hiral, I think the stock has been beaten down by overly pessimistic kind of expectations, and I think the kind of numbers which the company has presented for its 2030 vision. I think most importantly in these markets, fundamental news flows are unlikely to create an immediate impact. I think it's more on the market sentiment that the stock has been beaten down. My sense is that once the numbers start coming out, possibly for FY26. That would be a time when one could reevaluate the stock. But I think those who have already a position should hold on. I think definitely, the company has sounded very aggressive growth plans. But I think more amount of data and more clarity and visibility and actual implementation is going to actually re-rate the stock. So I think that happens. I don't think the stock will move up in a hurry.
Absolutely. So no fresh entry recommended. Thank you, Avinash. Thank you, Amit, so much for joining us on the show and sharing the views. But let's also pull up our IGI on the screens right now. Major pressure on that counter. Revenue growth and PAT growth has been lower versus other jewelry companies. So that is one of the factors that has impacted. The studded mix is on a downtrend for all the jewelry companies. And if you talk about the trade receivables, they have been increasing. And in terms of the cash flows, that has gone into the negative. So these are the factors that the street has taken negatively as well for an IGI, and that's what is creating pressure on this one, Puneet.
Well, definitely, but just want to mark the Nifty 50, which good recovery, and it's now in the green currently. While missed roughly about 10 to 15 points, but it's a good recovery that we've seen. Let's also pull up the mid cap 150 and the small cap 250 as well to see where they are right now, because we started the show with the small cap at roughly about 1.7% down. We've seen that on mid cap as well, while roughly about a 50 basis point recovery in terms of the small cap 250 as well. So that's a good strong recovery that we're seeing. But with that, we're kind of out of the time in this particular edition of Profit Buzzers. Stay tuned to NDTV Profit for more.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई इसके लिए सेंटर्स बनाए हैं।
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit. Headlines you start.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, the market seems to have recovered from their day's low, but mid-cap and small-cap still in the red, and Nifty is largely flat, right?
Yeah, currently if we see in the last 1 hour or so, we've seen a strong recovery in terms of where the Nifty 50 index is concerned. Currently flat, as Somit was mentioning. We'll see, let's just look at, in the last and trading at levels of 22,166. Let's see what are some of these stocks which are bucking the trend and has led to these uptick that we are seeing. So let's put the top contributors in focus here. We have Infosys, Bharti Airtel and ICICI Bank in the green, while Reliance, HDFC Bank and Axis Bank is still down under pressure. Now this is in terms of what is happening in the benchmark indices. If we pull out the sectoral trend also to see where we are headed, we are looking at a mixed set of data today. Media down about 1.48%. IT is the top contributor. We are looking at about gains of 0.99%. Do note that our Nifty IT on the Friday session was down about 3%. We have something like realty also, metals also, some of these counters which are bucking up the trend 0.72% and 0.59% gains. And PSU Bank about 0.94% down. But this is in terms of the sectoral action that we are looking at. When we look at the advanced decline ratio and see overall breadth of what the market is seeing today, we're looking at about 17 advances, 31 advances in Nifty, while 20 advances in the decline. So it's mainly largely a flattish mix that we are looking at in terms of the advanced decline. But let's pull out the Nifty Midcap 150 index and see where that is headed. Now Nifty Midcap continues under pressure. It is down about 0.4%. Now this is much lower than what we had seen in the earlier parts of the day with the index down more than 1%. Let's see some of the counters which are in green. So in terms of where the Nifty Midcap index is concerned, we have counters like Polycab, Prestige and Voltas in focus. Now Polycab is an interesting one, seeing gains of around 3.3%, and this is especially after Ultratech Cement's conference call after its entry in cable and wiring, and the stock was down about 20% in the last few sessions. Prestige and Voltas also bucking up the trend. Cummins India up around 2%. But what is still in the red? We have something like a Irida seeing cuts of around 6%. Fluorochem seeing cuts of 5%. All the major brokerage stocks are down. Exchange stocks are down, with the likes of NSE seeing about 5% of cuts. Moving to the small cap index, where we are looking at the gains in the day, we have something like a Blue Star with seeing gains of around 6%, Atul Industry about 5%, and Avanti Feeds 5% up as well. But what is still in the track is something like Wellspin Corporation, Kirloskar Brothers, Suvain Pharma seeing cuts of around 6 to 7%. So Somit, this is in terms of where mainly the broader and the benchmark indices are concerned, right?
Right. One stock-specific news that has come in is on InfoEdge, where the jobs peak data that has come in for the month of February shows that the index is at multi-month high. It's up 4% on a YY basis and 13% higher on a month-on-month basis. 10 out of the 16 sectors have registered growth, while 5 have seen a decline. While the IT sector, which is the key sector for InfoEdge, has seen a sharp uptick from Jan level, as per the report that has come in by InfoEdge. But other than InfoEdge, it's the auto stocks that remain in focus on the back of February sales number. What were the key takeaways coming in from that? Let's get in Puneet for some more information.
There are, in the two-wheeler space, while Bajaj Auto is still anticipated to come with numbers, there are 2 clear winners and 1 clear loser, with Hero MotoCorp, having a very bad month in terms of sales, down 19% in this particular month. Hero reported roughly 3,88,000 in terms of sales versus estimates of 4,57,000. So it's a big miss for Hero. On the other hand, Eicher Motors has continued its strong trajectory with focusing on sales rather than EBITDA margins after Q2, and it's reflected in numbers. It's the second straight month in terms of numbers above 90,000, and roughly about 4th straight month over 80,000, which was the medium term target per month sales. So it's definitely a big push for Eicher Motors, and TVS Motors also has continued a strong trajectory. There were Motilal Oswal had mentioned that scooter sales have done better than motorcycles, and TVS is one of the biggest beneficiaries. In terms of passenger vehicle makers, M&M stands out to be the biggest gainer, up 19% in terms of sales and quite bang in line with estimates of about 50,400 odd units. But Maruti was a disappointment here. The small cars has fallen, the export sales has fallen in this particular month, and hence it might be under pressure today. With Tata Motors also, it's missing estimates, and it's actually come below estimates as well. Estimates were of about 48,250. It's coming at roughly about 46,000. So definitely a negative month there. And Hyundai again a miss, and that's been the case over the last 5 to 6 months again. So in passenger makers, there's only one clear winner, that's M&M. In commercial vehicles, we're just flashing Ashok Leyland numbers, and it's quite bang in line with estimates as well at around 17,900 odd units. The other two, VECV was a clear winner here in terms of commercial vehicles at roughly about 8,000 units. It's grown by roughly about 9%, so that's another strong trajectory. And finally, Tata Motors again, not doing too much in terms of CV sales, again down 7%. So it's going to be a year where it's seeing continuous downward trend. And tractors, it's been a good month for tractors, and we had M&M that had mentioned that in Q4 they're anticipating a 15% growth. They've come out and done an 18% growth in this particular month at 25,000 units, beating estimates. And Escorts have actually done pretty well as well. It's 11% growth versus estimates of a 4% growth. So it's a decent month for the tractors. So definitely Hero MotoCorp and Tata Motors might be under pressure today, the weakest numbers, while M&M, Eicher Motors and TVS might be on the upside.
Okay, well, thanks for those details, Puneet. Let's welcome in our guest, Gaurang Shah, the Head Investment Strategist of Geojit Financial Services. Hi, Gaurang. Welcome to the show. First of all, I want to understand your outlook on the overall auto sector, the auto numbers which have come for the February month. It's a mixed picture that we are looking at. On one side, we have something like Hero Motor, which is under pressure because of the weak sales that were anticipated. But the other side, we have something like Eicher and the other companies which are still quoted better than expected numbers.
So thank you for having me on the show, and good afternoon to all of you all. So we have coverage on TVS Motors, Bajaj Auto, Hero MotoCorp, Tata Motors, M&M, Maruti, and Ashok Leyland. These are the auto-related stocks on which we are, including a pure EV play like Electra Green Tech. So we remain positive on all these names from a long-term point of view on the fundamental side. The problem lies is when people depend upon or they overreact on the month-on-month sales numbers. Now, there have been times in the history, and there will be time in the future wherein these month-on-month numbers would be better than expectation, or they'll be in line with expectation, or they may disappoint you. The reasons could be one too many depending upon the month and the kind of backdrop of events that lie. I think more prudent to look at is, if you're looking at the fundamental, then look at 6 monthly and yearly numbers. That will give you a much better picture rather than looking at month-on-month sales numbers. There has been increased amount of news flow in terms of competition, new competition coming into India. And of course, there has been a little bit of scare. We've seen correction, but we have seen niche and marquee names come into India, launch their product, and finding it difficult to survive, they pack their bags and they head back home. So time-tested companies in India, which are associated with the auto industry, will continue to deliver good numbers from a long-term point of view.
Gaurang, have you happened to see the jobs pick index that has come in from InfoEdge? It is showing a strong growth. In fact, it's at a multi-month high, the jobs pick index for InfoEdge.
So I won't be giving a specific comment on InfoEdge because I don't think we have coverage on that. But I was also reading a couple of reports wherein the outlook as far as the opportunities that lie ahead is huge. And I think government policies are also working in the right direction. One correction, we do have fundamental accumulate coverage on InfoEdge with targets close to about 8,000 plus levels from a long-term point of view. The only problem that lies in this particular sector or with this company is the ever-evolving competition that comes in. Some of them don't stay for long, but some of them do stay for long. So that kind of unevenness will be there. But fundamentally, it looks to be a good opportunity for long-term investors on InfoEdge.
For long term is what we are seeing for InfoEdge. But moving to a NDTV Profit exclusive, promoters and anchor investors exit via offer for sale is under tax scrutiny. My colleague Srini Chaudhary joins in with the exclusive details on this.
Hi. So Income Tax Department is, scrutinizing all the promoters and anchor investors who exited their holdings mainly through offer for sale, and this is pertaining to the fiscal year FY21 and FY 2024. And they are also checking whether capital gains tax paid on the subsequent sale or not. So sources tell NDTV Profit that they are probing at least 216 OFS deals, with 86 of those deals went listing in FY24 alone. So this is a part of CBDT's nationwide special drive where they are aiming to sort of identify discrepancies in the capital gains reporting and, try to sort of uncover if there are any potential tax evasion taxes here. So there is a letter, issued by CBDT to all field formation, that is tax sleuths across the country, where they're asking to check the potential tax evasion as they're observing a lot of these, misreporting in the revised tax returns by these promoters and investors. Please note that, NDTV Profit has reviewed the CBDT letter, and the data of all the companies went for OFS, which has been circulated with tax sleuths for detailed examination. In fact, in FY21, 24 OFS were there, in 22, 56 OFS were there, and in FY23, 50 OFS were there, which is under examination. And in fact, based on these scrutiny, Tax Department already started issuing notices to several such promoters and investors in past 10 days, seeking explanation over determination of capital gains. Back to you.
Okay, well, thanks for those details, Shrimi. But moving to another exclusive is about the problem which doesn't seem to get better for Ola Electric as the layoffs continue for the second round. Tushar joins us with all the details on this one.
Ola Electric's story today is actually in three parts. First is the layoffs. This is the second round of layoffs in the last 6 months. About 1,400 to 1,500 employees have been let go in this particular round of job cuts. About half of these are contractual employees who were hired when Ola underwent an expansion spree in December last year. Remember, it jumped its store count, its experience centers by 4-fold to 4,000. But what sources are telling us that about a lot of these 4,000 experience centers are not even selling one scooter every month. To sustain these 4,000 experience centers, analysts tell us, sources tell us that a company has to sell 200,000 scooters a month, but the company is managing about 25,000 at this point of time. The second part of the story is the motorcycle business. Last month, Ola Electric unveiled its Roadster X, but sources are telling us that the motorcycle hasn't yet gone for homologation. This means that it is not yet ready to be launched or be delivered. Remember, deliveries are supposed to commence by mid-March. That's very unlikely at this point of time if homologation has not happened as on date. The issues are with thermal management. Remember, Ola Electric scooters have caught fire in the past because of inadequate thermal management. The battery management system has also problems. The motor has also problems. That's what sources are telling us. The third part is actually the share price or the valuation of the company. Remember, the company listed in July last year at about 71 rupees. Now that's down to about 54 rupees today. An investor actually complained that it's actually seeing a 50 to 55% write down of its investment into the company. This particular investor had invested in the company when the company was valued about $5.4 billion. So trouble from all quarters. When it will ebb, it's for anybody to see.
Right, well, that was the exclusive coming in on Ola. Gaurang, coming to you, how are you looking Ola as a stock, given the fact that competitive intensity has been high in the electric two-wheeler space, and also the company has been losing market share here?
Well, so we don't have a standalone coverage on Ola Electric, but the company needs to do a lot in terms of ground level action rather than plain speak of words, to be very honest. The last report that I read, I don't know how far it was correct, but there were more than 10,000 complaints against the company, and the consumer court has to intervene. Along with that, a very dilapidated product, according to me, Ola Electric. The kind of accidents that we have seen and heard with their product, it's very hard to believe that the company is still talking in terms of setting up a customer care center, service center, upgrading their manpower to the technology that they are using, etc., etc. I won't give any bias and a load, but I will always say this, that there are better companies to look at, which are much capable than what Ola Electric is in terms of whether it is a vehicle driven on ICE, that is internal combustion engine, or whether it is to do with an electric vehicle product, whether it is two-wheeler or three-wheeler, or even, as a matter of fact, four-wheelers. I think the biggest challenge for this company is to come out from the losses that it is making and break even. I think that's going to be the tallest order for the company.
Well, thanks for that, Gaurang. But now it's time to bring in the management of Jupiter Wagons, which is in focus. Now, this is after the company has is expected to launch its first commercial EV, that is JEM Tej. To talk more about this development and also on their Indore facility, we're joined by Vivek Lohia, the MD of Jupiter Wagons. Hello, Mr. Lohia. Firstly, welcome to the show. It's a big development that we are looking in terms of where the EV segment is concerned for the business. Talk to us about this development, about the first launch of the commercial EV product, and also about the Indore facility as well.
Good afternoon. Today we unveiled our first offering in this segment. It is a 1-ton payload truck with a 2.5-ton GVW. So we are launching the truck itself in this month, and we created a completely new facility in Indore to assemble and produce these trucks.
Okay, so considering that you've inaugurated a new facility in Indore, can you talk to us about the order pipeline that you see? What is the kind of opportunity that you expect from this business going forward in the next 1 to 2 years? If you can give us a near-term and a medium-term outlook as well.
So this is a segment which we are very excited about. If you look at the entire ELCV landscape in India, annually the market is about close to a 5 lakh vehicle market. And we expect in the next 2 years, there'll be at least about a 20-25% conversion, which is going to happen. And this, we are talking about four-wheeler trucks in the 1-ton, 2-ton, and the 3-ton capacity. So in the next 2-3 years, we expect the market to be at least close to about 100,000 vehicle market, which is quite a substantial size. In terms of 1-ton product, which we have launched today, the only competition is the Tata Ace, where our product offering is much more stronger because we are on a high voltage platform. We are offering a much larger range. We are offering a fast charge. A vehicle can be recharged within 1 hour itself. It can go up to close to 300 kilometers as per the ARI specifications, and real world we can do about close to 190 kilometers. The loading capability is close to 1 ton, And before the end of the year, we'll be launching the 2-ton as well as the 3-ton vehicle. So we expect the market to be very strong. Initially, the plant has the capacity to produce about 8,000 vehicles annually, which we expect to reach in the next 2 to 3 years.
Yeah, you've mentioned about there just being one player. So considering that, what's the kind of share that you expect from this market going forward and the sort of incremental revenues that you expect from this segment going forward?
So initially in the first year, our strategy is to establish the product and establish GEM as a brand name in this segment and build the necessary distribution and the service network. We have already appointed 8 distributors across the major metros. Out of the 8, 3 dealerships have already started. The other 4, 5 will start rolling out in the next couple of months. So initially, our strategy is to establish our products and then build on the volume from there on.
So recently you have announced multiple order wins when it comes to the wheel set business. Could you just throw some lights on what is the total order book right now, specifically on wheel set business, and how much of more order info are you expecting in this calendar year when it comes to wheel set business?
So, again, on the wheel set business, in terms of the external order books, we have now order books of more than 400 crores. And as you may be aware, this is a business where, it's both for our own captive consumption as well as for the market. So today on the Aurangabad facility, we have limited capacities. Right now, we can produce close to about 14,000 wheel sets, which by around middle of this year, we are augmenting to about 20,000 wheel sets. I think once we have further capacity, we will take in more order books, because right now we are not chasing order books in terms of capacity limitations. And by in 26, our Odisha plant, the axle facilities will go online. And by 27, the wheel lines are going to go online. So by that time, our capacity would be about close to 1 lakh wheel sets, which will be a market of about 3,000 crores. And of which, our partners in Europe, Tatra Wagonka, they themselves require about close to 40 to 50,000 wheel sets for their European operations. So this is a business which we are very bullish on, because given the demand in India, because as you are aware that India today imports most of its wheel set requirements, and today, if you look at forged wheel capacities, there is very little forged wheel capacities in India. So this is a market which we are very strong and bullish on.
Okay, so considering that you're expecting about a 5x jump in terms of the wheel set businesses, along with this, you have another business adding up. You're targeting about a 50% of a mix with the non-wagon and the wagon business also. Want to understand, from here onwards, if we compare the current order book, what is the incremental growth that you expect in the overall order book going to be, and how would this lead to incremental revenues for the business? If you can give us a guideline beyond FY26, what's the sort of revenue growth that the business can expect?
So I think by FY27, once the entire all the facilities which we are talking about, everything comes online, we are looking at a revenue of about 10,000 crores. That has been our guidance. We continue to maintain that the freight business, I think you're going to see a lot of going forward. You will see the freight business to continue to remain strong. So with all the businesses put together, I think about 10,000 crores is what we are looking at, and EBITDA margins of 15% plus.
Right. And when it comes to a wheel set, I was specifically again wanted to ask you, given the fact that you're saying that currently India imports a lot of wheel sets. So what is the total market size here? And say in the next 2 years, how much of this market can you capture? 2,000 crore, 3,000 crore, if you could help us with?
So India today, I don't know the exact numbers, but it is, I would say that the market in India for wheel sets is close to about 300,000 as of now, out of which India produces close to about only 100,000 wheel sets. roughly. So there is a big gap in terms of the demand and supply. So for us, it is combination of the exports and our captive consumption which we have. Because if we produce about 10,000 wagons, which we are projected to do, we ourselves would require about 40,000 wheel sets. And then given our partners requiring about 40 to 50,000 wheel sets, I think between most of our capacity will be consumed in-house. But it's not that we are, so we are in terms of capacity, we don't see a challenge. Only thing is, since it's a new technology today for the Indian market, we are targeting much bigger capacities going forward. I think we are looking at putting up another line for another 100,000 wheel sets, but we want to take it one step at a time.
Okay, Mr. Loya, considering all these expansion plans which are going to be on stream from FY27 onwards, I want to understand what's the update on the capex plan going to be like. You have already 2,005 crore of an investment for the expansion in Odisha. Along with this, you'll also announce a 3,000 crore of a QIP. So just want to get a sense on how you would be funding all of these capacity additions, if you can just give us more details.
So first of all, on the QIP, it was just enabling resolution for us. So we are not looking to raise any kind of funds right now. I think the business is today very well funded. So the majority of the capex will be towards the Odisha facility, which we have announced. It will be about 2,500 crores of incremental, for which we have the financial closure. So in the last round of QIP, which we had done, we have raised the money to fund this project. And incrementally, I don't see the company needing any substantial additional funding to do the capex, because we are generating healthy profits, and this year onwards, you see our cash flows also becoming quite positive. So I think we'll have enough cash flows internally to fund our expansions.
Well, that would be all, sir. Thank you for joining us and giving us more perspective about your business. Well, with that, it's a wrap on this edition of Top Trades. Stay tuned and keep watching NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various ports.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind?
Welcome back. You're watching India Market Close here on NDTV Profit. Thanks for tuning in. Good afternoon. I'm Harsh Saita. With me is Neeraj Shah. Let's quickly pull up where the Nifty 50 is at. We've seen a decentish sort of recovery from the lows of the day. 22,004 is where the low point of the day is. We've not breached 22,000, and that's likely the positive. And we've also recovered by around 95 odd points. That's the other positive. Let's look at the heat map on the Nifty. Talk about some stocks. There are some which are standing out right from the get-go. You have a Grasim up 2.7 odd% on the back of course, Ultratech also being up in a market like this. And Ultratech also up 2.5 odd%. You're seeing JSW Steel doing well. So some commodity plays. And there are certain pockets which are doing well for itself. Even an Apollo Hospitals doing well, BEL, and other defense players also doing well for themselves today. IT is the other index which is standing out on a day like this, nearly 1% higher on the IT index. So you'll see some IT names there as well. But it's largely even Steven with regard to the advanced decline, the breadth here at least. The top loser is a Reliance, down 3 odd% in trade, hitting yet another 52-week low. A Coal India also under pressure. And then you have some auto names, a Hero Moto and a Bajaj Auto as part of those. HDFC, which stood out on Friday, is down 2% as well today. That's largely the texture. We're flattish with a slight negative bias at this point. But let's look at very quickly the advanced decline. And that ratio, it's improved and improved quite decently in that sense versus the low point of the day. But when you're still looking at the breadth, it's looking extremely weak, 3:1 in favor of the declines. And that's where a bulk of the pain is. This wasn't reflecting on the Nifty 50. And therefore, a bulk of the pain still residing in broader markets. Neeraj, we've seen a recovery where the small and mid-cap indices are concerned from the lows. The bounce back is there, but the breadth still a bit of a concern, right?
Yes, it is. But you have to admit that on current valuations on specific pockets, it's starting to look interesting, and we'll get to that in a moment, but just marking out a few names which are standing out today in trade. So you're seeing PFC, REC both having a near 4%, 4.5% kind of an uptick. So keep an eye out for both of them today. Blue Star, which made that capex announcement as well day before, is up about 6.5. There is strength in La Opala amongst other things. Consumption is marked by Varun Beverages Blue Star, La Opala, etc. Supreme Industries is interestingly up 5% as well. Narayana Rudalaya is also up about 8% in trade. So there are individual stories out there. The breadth, of course, 187 to 310, so not quite positive, but there are some gainers out there too. On the losing side, I think capital market and exchange related pockets are down in trade. So therefore, you'll see Angel One being the top loser, but MCX is down in trade today. I suspect Bombay Stock Exchange could probably still be sulking a bit. So keep some of those in mind as you monitor trade. Jubilant in Gravia, and we'll talk about that in detail. But clearly, the FY30 targets notwithstanding, the valuations may be a bit of a drag, if you will, and that's why that stock is correcting. Interestingly, after staying stable for a number of sessions, Gujarat Fluorochem is finally giving way, 5.5% lower today at 3387 and counting. So that is looking slightly weak as well, Harsh.
Yep. Yeah, so those are some pockets to keep your eye out on. Let's quickly pull out the heat map as well with regard to sectors if we can. You know, fascinatingly, IT doing decently well for itself, nearly 1% higher. But after the kind of beating that we saw it have or saw it get on Friday, well, may not be as surprising. The Nifty Metal is doing fairly well for itself. The Nifty Realty, which is down nearly 30% from the highs, is also sitting in the green. The Nifty Auto on the back of auto sales numbers in focus, that's the other one. Of course, we've covered broader market indices. So that's broadly how it's playing out. But we have with us Ruchit Jain, Vice President, Equity, Technical Research and Wealth Management at Motilal Oswal Financial Services. And we also have Gurmeet Chadda, Managing Partner and CIO at Complete Circle. Gurmeet, before I come to you, let me quickly take a check with regard to levels from Ruchit. Ruchit, what's the sense like? We've seen a decentish bounce from the lows, you know, to nearly 100 points from the lows on the Nifty, but 300 points where broader markets is concerned. So that's decently significant. What's the trend looking like now? Are we seeing a bit of a reversal at all or no?
Yeah, hi, very good afternoon to everyone.
Good afternoon.
Well, it's too early to call it a sign of reversal because, you know, there is no change in the broader trend, which has been negative since last few days. But I think, you know, one early signs are there for a pullback move in the markets, because if we look at some historical data, then in last year, in 2024, in the month of March, April, markets had found good support around 21,800 to 22,000 range whenever there was dip in this range. And the RSI setups now on the daily and the hourly charts on the Nifty are in oversold zone. They are in oversold in mid cap and the small cap as well. But at least in benchmark, we have noticed this trend that whenever the benchmark index comes near its previous swing low support, and if the RSI setups are oversold, then markets tend to show some pullback move to relieve that oversold setups. So we think that this 21,800 to 22,000 is a good range from where a pullback move should be seen in the index. So one can expect some positive momentum in some of the large cap names, but frankly too early to call any kind of such momentum happening in the mid cap and the small cap space, because whatever pullback move we are witnessing over there, we are witnessing good selling pressure again at high levels. So I think in the index 21,800, 22,000 should hold on for now for some pullback move.
Yes. So in light of that, Ruchit, what are the recommendations for the afternoon?
So just one recommendation for now. JSW Steel is one stock which is looking quite positive. So Neeraj, we are just focusing on such stocks which are showing resilience in the falling market, where the stocks are not correcting when the market is correcting. So JSW Steel has been one name when even when the metal index has shown some corrective from the highs, this stock has not shown any significant price-wise correction. So this clearly shows a good relative strength in the stock. So at current levels, JSW Steel can be bought with stop loss below 940 for potential up move towards 1020.
Okay. Gurmeet Chadda of Complete Circle Consultants with us as well. And before I throw data at Gurmeet, let me just try and understand from you if you believe that there is now a bit of near panic, if you will, and do valuations such as that. Because in absolute terms, of course, the 3.23 lakh crores will look very high. But in percentage terms, as a percentage of what they own, it's not a very large sale that has happened over the last 5 months as well from FIIs. We of course call it in rupees lakh crores and it looks unprecedented, but the Indian market has also gone up. So Is this near panic levels, or can we correct more?
So, Neeraj, I think there is panic since last week, and I measure by number of calls I get and my team gets, during the market. It's substantially gone up. And the panic is more at the level of do-it-yourself clients, people who are using new age apps and doing it without any professional help. I think that's where the panic is more because the portfolios are lopsided. So, I spoke to some people where defense was 40% of the portfolio. There are a lot of people who have only done SIPs in small cap funds. So I think, and this kind of markets, in a way, then corrects those excesses, and that's what is happening right now. Also, there's a lot of margin calls getting triggered in a lot of cases where shares are pledged, including LAS accounts, including the MTF book. So that's contributing to the price action. On FI, Neeraj, I don't think so. The number is less substantial. Mind you, this is on back of any major macro development. No, so you have those kind of sell figures with that logic even during COVID and other periods, and 90% stocks are now almost below 200 DMA. So the broader correction now is almost 25-30%. And let's say if I take BSE 500, let's say, as a broader universe to benchmark, not in particular. So and this kind of correction is more painful because it's been a grinding one. We haven't seen a 5-6 month drop, and the larger drop creates more panic because you're already down 12-15%, and February, let's say you lose another 10%. That's what triggers a negative reaction. So my sense is looks overdone in a lot of pockets, if you ask me, because a lot of stocks are not going up despite good news. Right, so M&M hasn't moved up despite excellent February auto numbers, just an overhang of tariff and Tesla coming, which I think is overstated. Similarly, banks, if they are under pressure for, I don't know, I mean, there are no longer valuation concerns there. So when stocks don't even go up on good news, it's a bear market, and when stocks go up even on bad news, it's a bull market. So I think we are now in the second chain. Now markets can remain oversold for a slightly longer period, and that is why now it's very important to control your stomach and behavior as well. You don't want to put any incremental money, fair enough. It's not easier for us to say live, but only thing to do right now is not to do much. Just let this settle a little bit and let things stabilize before you take more actions on portfolios.
Gurmeet, Harsh also joining in. So Gurmeet, frankly, when you're looking at how markets are moving as well, we're seeing large changes to stock prices very, very quickly. Let's pull up something like what an REC is doing today, a PFC, for example, even what an Angel One is doing, a BSE is doing. You're seeing very quick moves on the upside as well as on the downside. What are those pockets which at this point, I know you're telling viewers to refrain, but if you were to pick financials, I know you're bullish on recycling as well, but even within them, there would be certain quality parameters which you would be judging at this point. What are those?
There are two big parameters in my view. As I said, what are the companies which are still doing well and markets are still not reacting to it? So let's say if it's capital goods and industrials, are the companies still winning orders? Let's say, for example, in defense, you have solar industries, which have got orders worth 10,000 crores, including Pinaka Rocket and export orders 2 days back. It's held up strongly today, but the stock is down from where it was, almost 25-30% down. And there is near-term visibility. Similarly, companies which have reported good earnings, good numbers coming in like M&M and Auto, but the stock has not given a great response. So that is something. And the two parameters here, as I said, is earning growth at a reasonable multiple. So let's say you're getting 15-20% earning growth and you're at for 20-25 times. I think that's a pocket to look at. Second, is there's a huge value somewhere, right? Something the stock has just gone 50-60% just because there's a lot of negativity, in the market, or because of lower volume stocks, especially which have lower float. That could be the other space to look at. But don't compromise on earnings and ROE. I think this is two factors you should focus here, which is earning growth and good ROEC. That so above 15% for both ROE as well as earning growth. I think that's the pocket to be in, provided valuations are reasonable. And more importantly, in my view, I think if you have liquidity and if you've been in the market for 8-9 years, you realize that, 6 months later we'll be talking. We were getting X stock at X price. We did not act. The same way we talk right now. We say that Tata Motors was $100 in COVID. Indian Hotels was 90 rupees in COVID. Davies was, 1,000, 1,200 in COVID. But we did not act then, right? So the best way right now for incremental liquidity is stagger it. And as I said, if your nerves are, not with you, just let it go. Let things stabilize.
Now, what we want both Gurmeet and Ruchit to speak on, and Gurmeet in particular, because this this brings valuations into picture, but it also brings levels into the picture. And I want to first get my colleague Varsha to try and talk about how bad the pain is for a select band of companies, which are viewers, trading below the COVID lows. Yes. Varsha, take it away. Some of these stocks have fallen way beyond the panic lows made in COVID, isn't it?
Yes, absolutely. So we all know the pain that's going into market since 2 months, and over 450 of Nifty 500 stocks have declined in February, and Nifty records longest monthly losing streaks in 28 years. But let us have a look which are all those stocks which are actually trading below their COVID levels. Let me start with Bandhan Bank. So if you see Bandhan Bank, the fall from COVID for this bank is almost 19.3%. If you see the fall from peak, that is I'm speaking about from September 2024, the fall is almost 31%. Moving on, if you see Johnson's Controls, the fall from peak is almost 30%. PVR Inox, 46%. Relaxo, look at Relaxo, fall from COVID is almost 16%, but fall from peak is almost 47% for a Relaxo type of company. And moving ahead, if you see, if I were to talk about SIS, which is a security agency company, the fall from peak has almost 28%. Whirlpool, 58%, and VST Industries almost 34%. Now the interesting thing about here is valuations. How are the valuations? So I've taken median PE versus the current PE that they are trading. Talking with Bandhan Bank, so here we look at the PB ratio. If you see the current PB ratio of the bank is almost 1.1x, but the median PB has always been 2.4x, way below, it's trading at way below its median PE. Talking about Johnson Control, look at the current PE that is trailing 12 months PE is at almost 83x, while the median PE is 121x. Relaxo Footwear, the stock has always been, at 100, 105 levels of PE, but currently trading at 60 PE. That's a huge fall when it comes to price to earning ratio. Then if I were to talk about VST Industries, it's currently trading at its median PE level, but it's gone up to 22, 23x also. Lastly, if I were to talk about Whirlpool, the current PE, trailing PE is almost 37x, while the company's median PE has almost 80x. So all these companies are trading way below their median PE. But if I'm talking about valuation, I also have to give a preference to what is the management commentary, what are they expecting going forward. So starting with Bandhan Bank, they are aiming 55% of secured mix by FY27. They're expecting a balanced growth. Credit cost is expected to stabilize near 2%. While for Whirlpool India, they're focusing on premium products versus volume growth that the company has always seen. So premium products will drive growth for this company. They're expecting new launches when it comes to glass door refrigerators, innovative washing machines, and SIS. They're expecting a 15% of revenue growth, which they have always been showing since listing, and they're expecting 6% pre-COVID margin, EBITDA margin for security business. Relaxo Footwear, they're expecting, rather they want to grow their margin, or they want to expand their margin on the basis of the optimization strategies, back-end optimization strategies that they have been doing. Lastly, PVR Inox, so they are expecting strong 2025 comeback with blockbusters that we have seen. They are expanding 100 to 110 new centers in FY25, and this all growth and the robust lineup is expected on the back of Chava, which has seen a good blockbuster hit which has been, and also the War 2, which is in line.
Interesting. Thanks to that, Varsha. Some very interesting names. I don't know about PVR, but I haven't gone to a movie theater for a while, but a lot of people are. But some of the others are very interesting, Harsh.
Yes, they are. You know, let me take it straight to Gurmeet. In fact, Gurmeet, I know, you know, recycling is one theme which interests you, and you know, fair call as well, right? You have it's a multi-decadal kind of a theme. You'll likely see this theme play out over at least the next 10 years. But how do you pick a stock within that? Because there are quite a few names in that space as well. How would you take your pick in that space? Any thoughts on that?
I think just try and figure out which is solving both immediate and long-term problem. I think Vatek Wabag is one which seems to be solving both near-term and long-term problem. In fact, Delhi election water was a major issue, especially Yamuna. So that's a problem which needs immediate addressing, right? So water treatment, sewer coverage. Plus, government has Har Ghar Jal and Namami gauges. So there's a government expenditure of over 1 lakh crore, and there is a genuine short-term need because of health issues and environmental issues. So I think water treatment clearly fits in there. Second is which we are researching and trying to figure out more name is smog guns with the air purification, because that's going to hit you again once you cross monsoon, and the second half of the year starts. So the preparation needs to begin now. So you have to figure out names which come in air purification, and then you have plastics where we have some small exposure to Ganesha ecosphere, and then we look at other names. So I think you have to play the value chain and don't over concentrate just on one name. I think this market has taught us time and again, especially the correction, is the importance of diversification. Because if you get in a concentrated portfolio 2 or 3 things wrong, you push yourself back by a few months. So you have to lose less in a market like this, and that's the reason that don't run too many concentrated portfolios. And to the point Neeraj was making on a lot of stocks being below COVID, I think important thing is to look at valuations. So something like a Relaxo, for example, is still 60 times earnings. So, but there are a lot of spaces where banks have come either book or below book, and the worst of the news on microfinance is probably, or stress on unsecured loans is probably in the price. I mean, that's a better pocket to look at than only look at consumption names versus let's say a 30-40% fall.
Okay. Gurmeet, well noted. Gurmeet, one final question. I know we exchanged messages when we were in the morning when we were talking about Kumbh, and amongst other things, even footwear getting lost, right? So 66 crore log gaye. Agar 1 crore footwear gum ho gaye. So that's 1 crore of sales that can happen immediately, right? But I'm just trying to think. Are you making a Kumbh basket?
Neeraj, I'm making a more travel tourism basket because that's a broader play. Kumbh would be, let's say, very near term. And if you see, for example, though air travel is a very small part of it, very minuscule part of it, Interglobe hasn't really corrected. The market share is almost now 65%. They've launched a business class. The international routes are getting started. Last quarter, they had about 60 planes which were grounded for maintenance issues. So, but only risk here is the FX related conversion play. We don't know. It's a bit of a black box which comes because there's so many variables there. Hotel stocks, in my view, will continue to do well. We have a summer season ahead. So a lot of good hotel stocks. I'm more keen on some of the mid-end ones like Lemon Tree. ITC hotels have corrected a lot of. I mean, it's at what 150, 160 levels now. And if it has a 13,000 plus portfolio of rooms, and their mix will also change in terms of own keys and management keys. And then you have something like an IRCTC where ticketing margins are improving, railway need capacity is going up, and e-catering incrementally is getting more and more channelized as more and more stations and trains get added. So that's another one. So I like this space more because that's a broader theme, and I like digital consumption play, which includes some of the the marketplaces in my view. So that's my side of playing the consumption theme rather than only concentrating very narrowly on one quarter on, let's say, footwear or anything related to.
Okay, Gurmeet, we'll leave it at that. Thank you so much for taking the time out and being with us. Much appreciate your time. Ruchit, I would love to bring you in on this conversation of those COVID low stocks, right? And just trying to understand. For somebody who's looking at a very long term, Ruchit, do any of the stocks are showing charts of bottoming out? Maybe there could be a time correction. So people might do an SIP, let's say. But are there any stocks like that from the broader market, from what have you, wherever?
So Neeraj, just while listening to this conversation, I just recollected one thing in mind. I started my career in stock market in January 2008, exactly from where that bear market started in Jan 2008. And post that bear market, when the markets rallied, one of the things that I learned at that time is not all the stocks, especially the mid cap and the small cap stocks which rallied in the previous bull market, tend to come back or outperform in the next bull market. So I think many such small cap names which had rallied significantly over last 1.5, 2 years was the up move that we have seen. I think not all of them would come up, would resume their momentum when the broader markets would resume the uptrend again. That's not the case with the large cap names, but more with the small cap names. So I think when it goes with the mid cap and the small cap stocks, just because the stock has fallen or they are below their COVID lows, that should not be a reason to do any kind of bottom fishing over there. In fact, according to the relative outperformance theory in technical analysis, any stocks or sectors which are underperforming the broader markets are the weakest one, and one should avoid bottom fishing in such names. So I think as far as this theme is concerned, or such stocks which are concerned, which are trading around the COVID lows, I think these are the underperformers in the falling market. And hence, until we see any kind of reversal with price volume action coming in, so price up move supported by good volumes, I think until such structures come in, I would tend to avoid doing any kind of bottom fishing over there.
Fair call. Okay, Ruchit, I understand we probably have to thank you. So thank you so much for joining in today and giving us your thoughts and some wisdom as well, Ruchit. So thank you. You incidentally started your career at the best time, right? I mean, if you were before 2008, you would have seen a downtick. Thankfully, you started only in Jan, so you don't have to see the downtick and saw uptick later, so which is great stuff. But thank you for joining in today.
Thank you, Neeraj.
That's Ruchit Jain with his words on some of the stocks. But by the way, the stock of the day, and interestingly, Harsh, why have you chosen Jubilant Ingravia?
Because, the commentary overall, Neeraj, look quite strong. You're looking at profits which are expected to go up nearly 5x from the current levels. You're expected to also see decentish revenue growth, both of those. And therefore, interesting that despite such commentary, stock has tanked 10%. Let's go across to Varsha, in fact, to give us those insights. Varsha.
Thank you for that. So let me just give you a few highlights. So they have reiterated their guidance. So they're expecting 12,000 crores of sales with 2,000 crores of EBITDA and 17 to 20% of ROCE by 2030. This will be led by specialty and nutrition segments, and they're also expecting CDMO pipeline and semiconductor to be the long-term growth driver, and the CDMO is expected to grow 5x by 27. Fine chemical segment is also expected to double by FY 30. Now, over here, the main point, like Harsh, you were pointing out, why the stock is down despite the good analyst meet. So one thing is they were expecting this numbers by FY 29. This may be one of the reasons why, because now the timeline has been scheduled to FY 30. Maybe one of the reasons why we are seeing the pressure. And also, if I want to talk about the valuation analysis, let's pull out that chart. Look at Jubilant Ingravia, the 3-year forward P is at 22x. And if I compare this with other chemicals, you have Lakshmi Organics, Ami Organics, Navin Fluorine and JB Chemicals, all are into CDMO business. And they are also expecting good uptick into CDMO business. So why not go for Ami Organics, Navin Fluorine or JB Chemicals, and sell Jubilant Ingravia and go to these companies where they are already into CDMO business. Maybe this is one of the reasons why investors are pulling out money from Jubilant, and maybe they can invest in these kind of companies, because you have valuation comfort over here. 22x versus 18, 28, 35 and 23x is the valuation analysis that I've done.
Okay, thanks a lot for that, Varsha. Really appreciate it. Now, let's move on to an exclusive of ours, or do we need to take a break? No, maybe, okay, we need to take a break. Okay, let's take a very quick break. We'll be back with more details.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
a life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
बजट भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी
Okay, back with India Market Close right here on NDTV Profit. I know it's time when we give you the herd on the street, but before that, an exclusive piece of news that we put out some time back and wanted to get an expert opinion on that. Well, a promoter's exit through OFS is under the tax scrutiny. Remember, we've seen a clutch of promoter exits happening more so in 2024, but all through the last 2 or 3 years in terms of block deals or QIPs or both. And as we learn, that IT department is probing promoters, anchor investors in the OFS transactions ahead of public listing. So in case of unlisted stocks, maybe even on some of the listed names as well. The question is, there is some suspicion of inflated acquisition costs to reduce capital gains tax. Now, let's welcome in Mr. R.S. Luna, Managing Partner of Alliance Law and former ED of SEBI, to try and understand what could happen in a scenario like this. Mr. Luna, thank you so much for taking the time out. This is Neeraj here. Good afternoon. The number of deals that have happened as an offer for sale have certainly been very high. We learn that some of this is being probed. What would your initial reaction be to something like this?
Well, as I understand from the news item, that this is basically in respect of the unlisted companies, or those companies who may be planning to go for this listing, and before they go for listing and the promoters trying to offload the shares and the issue related to the pricing of the shares and all that. Now, since it's a unlisted company, or the transfer shares taking place before listing, it will not fall within the purview of SEBI strictly, because it's not the manipulation of prices of the listed company. It is only in respect of an illisted company. But yes, the income tax department definitely have a more role to play, because if the pricing is being manipulated to avoid the tax liability or otherwise, definitely this income tax department has a better role to play there. But immediately to my mind, so far as the unlisted companies are concerned, SEBI's role will not be much there to play as of now.
Luna, let me get in my colleague Shrimi, who broke this news as well, to give us the complete detail, and then would love your further opinion on this as well, because remember, and Mr. Luna, I know you have to rush for a meeting, but I would urge you to just stay on for 2 more minutes, because I just want Shrimi to come in and give us the whole detail of this piece, and then we try and get the follow-up question from you as well on this very thing. But okay, Shrimi should be with us in moments from now. Okay, I'm told it is going to take some time. Okay, never mind. Mr. Luna, let me try and take one final question with you, sir, because I understand you have to go for a meeting. The second question would be that we know that in a lot of SME companies, right, shares are issued to some key anchor investors at a very small price or a very low price, and then the IPOs come in about 6 months' time at a much inflated valuation. So that problem exists. Here the reverse is also being thought of, wherein maybe inflated cost in order to justify capital gains. You reckon that, and I'm sure something like this has happened in the past too, how easy it is to get some of these things proven per se?
So one part is that you see this grey market before the companies going for the IPO is very well known, and the sale purchase of the securities either through anchor investors or otherwise, that is well known, and I don't think merely because it's happening before the public issue, anybody can take any objection to that. Yes, if there is as income tax department looking into there's a taxation violations and all that, certainly that can be looked into. But I don't think in respect of an unlisted company, if it is happening like that, the SEBI's role will come into play.
Mr. Luna, do you have 2-3 more minutes, please? Because I have my colleague Shrimi, so maybe she can give in the whole story. But unless you have a meeting, but if you can, just hang on for a minute more, sir.
Yeah, please. I'll hold on.
Okay, great. Thank you, Shrimi. We're talking to Mr. R.S. Luna. He's given his initial thoughts, but of course, I've told him a part of the story. Why don't you enumerate the whole data, and what is the key point according to you, Shrimi, which should be something that people should focus on?
Yeah, so couple of interesting points here. So I'll start with the story first, that income tax department is, scrutinizing all the promoters and anchor investors, their associates, who sort of exited their holdings just ahead of the public listing, and they're also sort of trying to understand whether the capital gains tax were paid or paid lesser than what was anticipated on the share sale. Now, 216 OFS happened between FY21 and FY24. Those now come under the income tax radar, and they are examining that. In fact, they have sourced data from NSE, BSE, and they have done their own data analysis where they have made a list of the number of OFS happened, and the companies and the promoters, anchor investor, etc. How much they gained out of it, all the profit, all that computation and the data is there with the income tax department, and based on so what has triggered this trigger after they have found certain misreporting and discrepancies in the tax filing, in the revised tax filing, the date of which ended in January 31st, and based on that sort of observation, they have started now sending the notices to many such promoters and anchor investors, because they have clearly seen that misreporting on the capital gains tax. But another interesting point here is that which Mr. Luna can also explain on the part that there is this bone of contention as far as cost of acquisition is concerned. And interestingly, July 2024 budget has already sort of explained that. And that was mainly with respect to the, how you're going to calculate your cost of acquisition. And so budget clarified that whatever the cost in inflation index between the date of purchase and 2017-18, remember there was this LTCG rule come into play from April 1st, 2019. So between that, you should take those period before calculating your cost of acquisition. So what expert we reached out to telling us that, in the impact on the tax calculation in case of sale of shares and under OFS, seller was not sort of, understood whether they are going to pay whether that transaction is exempt or they have to pay the lesser tax. So that is the bone of contention which was already addressed in the budget 2024. Since then, even then they are not sort of going they are not paying. That's what Income Tax Department telling us.
Shimi, just one quick question and then we can pose that question to Mr. Luna as well. So is the key problem that there is an inflated acquisition cost on the part of the promoter and then the resultant capital gains that the promoter has made, and in order to show lower capital gains, they have shown a higher acquisition cost? Is that the key contention point?
Yeah, that's the crux point, and that's the suspect which they are of course looking at, because now they are running this special drive also. So that is the crux of the matter, that whether they artificially inflated the cost of acquisition to sort of reduce their overall tax liability.
Mr. Luna, we understand that this is more a tax issue as well, but considering that you've been in the thick of things, just wanted to understand, would there be a SEBI violation in such a case wherein a promoter may be showing inflated acquisition costs of his or her shares in order to reduce capital gains?
You see, firstly, as I said, that because it is all happening in the unlisted company, so SEBI's role will not come.
Got it, sir.
You see, the issue is that promoters normally may be acquiring the shares by a preferential allotment at face value or at a very lower value as compared to the fair market price and all that. So that is the actual cost of acquisition, but there could be a situation where when they start claiming the tax benefits, they might be looking at the fair market price at that relevant time, and then the issue of the indexation and all those all complexities of tax might come into picture. And so I think it is more an issue of a core taxation problem than anything related to the securities market.
Okay, well, but thank you so much, sir, for still giving us that clarity, because it's important to get that. Much appreciate your time. And Shimi, thanks for getting us in the lowdown on this story as well. Okay, now that's one exclusive. Time for another one. Something that we do every day at 3:30. Today, we're doing it at 3:40, which is heard on the street. And what is it that you should be focusing on today on this segment? Simply because it's a day that has seen a bit of a bounce from the lows. Somit.
Yes.
What are you gathering today?
Well, stock specific
action. This is our favorite part of the show, by the way.
Thank you. So stock specific action is in Lupin. What I'm understanding is there is strong buy flows when it comes to Lupin on institutional desks. Both DIs and FIs are actively accumulating these counters. Market share gain is something that is expected in one of its key drugs, Piriva. Apart from that, dealers are also indicating that Lupin is a relatively safer play when it comes to all these concerns regarding the US tariff on pharma products. So Lupin does have an US exposure, but not as high as other large cap pharma companies. So that's one Lupin. The second one is Polycap, strong volumes. Dealers are saying that there will be high delivery volumes on this counter, given the fact that a domestic institutional investor, mutual fund, in fact, is a leading buyer in market today. So block deal data would be something important to track when it comes to Polycap. And lastly is the steel names, JSW Steel, Tata Steel, SAIL, all have been running up in trade. Dealers are indicating that there is a potential price hike of around 1,000 to 1,500 rupees per ton possible from March for this month, in fact, and triggers that could be triggers that are actually indicated because of which the price hike has been or might have been taken by the steel companies is that the China PMIs has been showing some expansion, and there's a possibility of a safeguard duty coming in, and that's the reason why there is a possibility of a price hike of around 1,000 to 1,500 rupees per ton on steel HRC products, in fact.
Yeah, this could be big. This could be very big for the steel companies. And Somit, thanks for getting us what is being heard on the street, because yes, you could argue that this is something that everybody's talking about. I'm told Siddharth Khemka is with us on the show to talk about the fundamentals of the market, and Eamon Kapadia on the technicals. Gentlemen, both of you, thanks for joining in. Usually we start with the charts on the Nifty, but Siddharth, I would want to get you in on this point that Somit was saying, right? What he's gathering from his sources is that there might be some movement on the safeguard duty for steel, amongst other things that could be done, okay? But he's learning about safeguard duty on steel. Now, if that were to happen, Siddharth, do you reckon it's a large net positive for steel companies? And if so, would all companies be positively impacted, or would you pick and choose?
Yeah, hi, good afternoon. I think definitely with the US tariff war going on, I think there is a risk of a Chinese dumping on Indian markets, and to safeguard that, if the government is planning or if puts a safeguard duty, it will definitely be positive for Indian steel companies. It will be definitely positive for across the board, but if you look at selectively, if you were to pick and choose the domestic focus companies, for example, you have Tata Steel, you have Jindal Steel and Power, SAIL. So these companies will have much more impact in terms of the overall sensitivity to the domestic market. So I think JSW Steel, Jindal Steel and Power and SAIL, these three companies one should definitely look at as a positive impact from any safeguard duty that the government puts on import of steel products in India.
Okay. And Siddharth, I mean, keeping duties aside, what about pricing? Do you see some bit of upside with regard to pricing, domestic pricing with on steel, and who would that disproportionately benefit? How would you play that?
Yeah, so I think, Harsh, if you look at the overall scenario, I think the global steel prices are bottoming out, but we do not forecast or foresee a strong uptrend in steel prices. For that, a lot of things have to happen. The dollar index, that has to come off. I think the Chinese market, while showing signs of improvement in terms of the PMI data or the economic growth, that should be positive. But again, as I said, we are not expecting a very strong outlook in terms of overall metal prices. Some of the base metals selectively definitely looks good. For example, a copper or a zinc looks better in the current environment, but the larger ones, aluminium and steel, we have a benign outlook there.
Okay. Himen, if I can come to you, and let me actually take a step back, zoom out a bit, start from how you're viewing markets at this point. We saw at least the index make a low. We've seen a bit of a bounce back with regard to pretty much all indices. What's the sense at this point, and what are levels you're looking out for now?
Very good afternoon to you guys. Thank you for having me. It's always a pleasure. Frankly speaking, 22,800 breaking was bad. One would expect at least a 500-point decline from there that has happened. And we've gone all the way down to 22,000 now, Harsh. So, well, markets have been deeply oversold, honestly, for some time. I believe they're just waiting for some sort of a trigger to turn around. 22,125 is one level, followed by 21,800. So I believe we are probably close, but not yet there. A couple of things. We've had two bearish gaps coming in last week, which are really not good for the market. I thought at least one would have got covered up by today. Evidently, that's not happened. So in terms of levels, like I said, 21,800 should be it for the time being. But we haven't seen any signs of a reversal. What we've seen today are just intraday bounces, nothing more. For sustainability, yes, we need to overcome 22,300, and the first technical green shoot would be when we close about 22,526. One, it's was a support, now resistance rush, and secondly, there's a gap just below that. So that would also mean that the first we got two bearish gap. That means the first bearish gap is getting covered up. So I'd say fundamentally good stocks. One can start nibbling now. Deeply oversold, 4,000 points and more have gone, and lots of stocks except Reliance, which broke 1,200 today, which was a concern and a surprise. Many of the stocks are at medium to longer term support levels. So, and 6,681 decline. So, I believe that we are close, but yet not there in terms of a turnaround. Harsh.
Okay, and your stock picks for this afternoon, Himen?
Okay, stock picks, two stocks. Firstly, a buy call on NCC. Deeply oversold, upward key reversal coming in today. Crossover buy by the mechanical indicator. We need some more volume by the end of the day. That should probably pan out. So buy at 176, stop loss 170, target of 188. Secondly, a buy on Pidilite. Almost similar logic. Deeply oversold, crossover buys, upward key reversal. Looks good. I believe I have a modest target. Buy at 2660, stop loss of 2620, target of 2740. I believe this should comfortably go to 2800 plus, assuming the market turns around like it probably will. Harsh.
Okay, Siddharth Khemka, your views with regard to the market. What are you advising clients, customers?
So yeah, I think as Himen rightly pointed out, we are also expecting the market to bottom out. Now the only question remains is how much more downside risk is there to the market. So there are two key events out there. A, the reciprocal tax that will be levied from the first week of April. That is a big event and overhang on the market. Until that comes by, or clarity in terms of the kind and type and percentage of tax that will be levied, that comes out, I think market will remain subdued and under pressure. And the second key event is the Q4 earnings, as well as the outlook for next year, so FY 26. So that's the other key event that is out there. And again, Q4 earnings expectations are not that strong. The consensus expectation, including our own expectation, is that Q4 will see another mid-single digit growth in the Nifty as well as the overall corporate earnings. So I think next few months we could see the market stabilizing at these levels, and hence what we are suggesting is to buy in tranches. A lot of quality names both in Nifty as well as in the broader market. Mid caps, small caps have seen correction. Nifty stocks have corrected anywhere between 15-20%. The broader market stocks have corrected around 40 to 50%. So I think what we are suggesting is to buy in 3-4 tranches. A, we can buy now. B, after the March quarterly results, that would be a good time to buy the second tranche. And once we see some improvement in market, we are expecting improvement in earnings by second quarter, where the base effect would also start kicking in, plus the effects of the government push on consumption, either through the tax benefits that has been given, or the overall spending. Rural economy has seen growth. Expecting urban consumption growth to start improving from Q2. So that would be a good time where we could see improvement in the market.
Okay. All right. So those are just general views, but coming through and valuable at this point, right? Because everyone's on the fence as to what to expect next. Now we've taken a bit of a pause, it seems, today, and a breather, and a welcome one. But let's look at the top 3 stocks nonetheless. Top 3 stocks of the day. Anushi is here with all of those.
Hey Harsh, so I'll start off first with AstraZeneca Pharma. Now this is buzzing after the company got a CDSCO approval for distribution of their durvalumab solution. Now this solution is used for treatment of patients with unresectable hepatocellular carcinoma. Now this CDSCO stands for Central Drug Standard Control Organization. The stock is up around 3%. The next one on the radar is KEI Industry. Now do note that in the last couple of days after Ultratech Cement had announced its its foray into the cable and wiring industry with a 1,800 crore of capex, there has been a significant fall for a couple of names like Polycab, KEI Industries. In fact, the stock was locked in a 20% of a lower circuit a couple of days ago. So Jefferies has now come out with a note on the same, wherein they continue to maintain a buy call, but they've cut the target price to 4,260 from what was 5,475 earlier. They've cited a couple of reasons. Firstly, they see the potential business impact coming in post FY29 numbers, and this would be impacting the company's housing wiring segment, which contributes about 20 to 25% of overall sales to KI. Even the medium-term growth expectation, which used to be around 13 to 15% earlier for FY28, has now been trimmed to 10 to 12%. In line with this, in line with lower expectations in terms of growth, the price target multiple has been lowered to 35 times as compared to 45 times based on the FY27 estimates which are there. Lastly, a couple of these exchange names are in focus. Something like Angel One, BSE. If you look at, I'll talk about BSE right now, wherein Goldman Sachs has maintained a neutral rating on BSE, and they have, however, they've cut the target price to 4,880 from 5,650. This is mainly after the lowering industry option penetration, and the SEBI consultation paper is to reduce undue volatility in the equity markets. Now, this move doesn't bode well for the exchange like a BSE, if you think, and the option trading accounts for around half of the top line for BSE. So this is not a good impact that we are seeing for a couple of these exchange names. BSE shares are largely pricing the risk to industry volumes and pricing in risk from implementation of the proposed values. So final outcome, however, remains uncertain, and this paper was not expected by the market. So we are looking at a significant downtick in terms of where the BSE share price is concerned in trade today, and these are the top 3 sticks in our radar today.
Okay, thanks so much, Anushi, for that. One in particular, Siddharth, that I want to highlight, of course, AstraZeneca, KEI both doing well, but all of these capital market plays and BSE, now second consecutive day, 5% plus fall. We saw a 10% fall on Friday, nearly 6% more today, and it's fallen substantially from the top. So Siddharth, give us perspective with regard to some of these names. What's the impact like in your view? And how should you look at this? Could this be a buying opportunity in any of these? Because Angel One also from the highs has fallen quite a bit, and suddenly the multiples are starting to look quite lucrative.
Yeah, I think, Harsh, the market is kind of giving a higher valuation multiple to the capital market theme stocks because of the high growth that was being witnessed. But in the last few months, there have been several changes with regards to the weekly expiry being done away with. Volumes have come off both in the cash as well as derivative segment. Due to the current market fall. I think that is also leading to some pressure in the overall capital market theme stocks. But nonetheless, I think that's a theme which could do well in the long term because the financialization of savings as a theme is likely to continue to play out over the long term theme. In that specifically, if you look at some of the stocks we like, BSE, we believe that with the weekly expiry given, you can say parity to all the exchanges, they are likely to gain market share and that should help while valuations remain a bit of concern, but overall we like BSE. We have a buy rating there. Angel is something where valuation is very comforting, and we believe that post this current volatility, I think once the market stabilizes, market will again find value. They are also expanding into other businesses like wealth management, asset management, that should drive growth in the long term. Apart from these two, what we like are CDSL and CAMS. Both are the support, you can say, to the capital market theme, A on the depository side and B on the mutual funds RTA. So again, stocks have come off sharply from the top, but these are good opportunities to add gradually over the next few months.
Okay. All right. Himen, quick check with regard to BSE and Angel One in particular, because those two facing the biggest knock. Also curious to know your view on Anand Rathi, because the stock is up 5% on a day like this.
Distribution pattern, in between 6047, 5000 downward breakdown. No rush, we'll get it cheaper, at least on technical parameters. Angel One, I believe, has posted a new low. multi-year low. But we are running into a congestion area. Downside appears limited, maybe not much to go down further. As far as Anand Rathi is concerned, it's a different kettle of fish. It looks like a bull market consolidation breakout. The first mini breakout should come in above 4,300. Setup looks positive. Last week the volume was huge. Cash market. This is not delivery marking, but higher volume in the last 2 years. So I would be bullish on this. Not very excited about BSE, but Angel not much to fall.
Okay. Now one stock which has been in focus pretty much for most of last week and is moving today as well is Polycab. Bull versus bear to try and break this one down because of course there's just so much that's happening in the space. Puneet here to help us break that down.
Well, thanks for that. So, there are two key triggers today in the market reacting to stocks like Ultratech as well as the cable and wire makers. One is, of course, the company Ultratech held a earnings conference call on Friday. Now, not specifically earnings, but specifically in the conference call, they discussed about the cables and wires entry. Now, apart from that, there are two brokerages that have come out today. Jefferies has come out with a report on Polycab as well as on KA Industries. And there's a key reason why we're straight going to valuations because that is going to be one of the most lucrative side of Polycab going forward. Now, there is no doubt in terms of business fundamentals over the next 2 years, but the larger concern is on Ultratech's eventual entry into wires and cables, and effectively by FY28 or FY29 is when the market is expected to fragment. So of course that is the first bear case with Ultratech's entry into the cables business, but stock currently trading at 27 times price to earnings for FY26, and it's a level that's not seen after the COVID pandemic. So it's a new level of low in terms of performance, and what brokerages are estimating in terms of growth is expected to be a good year over the next 3 to 5 quarters, and that hence is expected to have a valuation de-rating in certain sense for Polycab. When you look at the company is of course a market leader at roughly about 15% share in terms of retail wiring. They have 7,000 crores in terms of revenue and is of course the market leader, but with Ultratech's key commentary on asset turn of about 6 to 7 times with an investment of about 1,800 crores, they could turn and look at a revenue of 12,000 crores over the next 5 years. Now, this will of course come in only in FY28 and 29 and will not impact the market till then, but eventually there will be a new player with very cash heavy books and is going to target the market effectively, and that's one of the bear cases again. The third key aspect is what Jefferies is estimating a strong 22% sales growth, 28% growth in its profit over FY25 to 27, which is expected to be the golden period, but it has also cut its target multiple. Now this should be 38 times, so that's an error, but it was 38 times earlier. It's cut to 32 times now in terms of price to earning metrics, and that's another key aspect. It's going to weigh on the valuations across brokerages. We saw on the first day itself last week that Motilal had cut the target multiples to around 35 times for something like in Polycab. And finally, currently, what is the street anticipating? Now, of course, the consensus Bloomberg estimate is roughly at around 31 times price to earnings. It's, of course, as I mentioned, the lowest it has been over the last 5 years. But, when you look at the other players such as RR Kabel, while not a market leader, is trading at just 23 times price to earnings after this 20% fall, while KEI, which is heavy in terms of cables, is somewhat at a premium at around 32 to 33 times price to earnings. So overall, it's going to be a very interesting time for a stockholder, currently holder of Polycab, as well as someone who's looking to enter this opportunity, because while the stocks have corrected, the space is expected to have fragmentation over FY28 and 29, and it's you as an investor has to decide to get into a long-term call or take the next 3 years of rewards.
Very, very interesting. Thanks so much for breaking that down for us, Puneet. And we're going to take views from both of our guests on the other side of this very short break.
I'll tell you, there are some investors who have taken a call today. Puneet was saying that people need to take a call. There are some MFs which have taken a call today to get into Polycab. So that's the interesting piece.
Oh, yes, that's super interesting. But of course, we'll take thoughts from both Siddharth as well as Hemen. But before that, very short break. Stay tuned.
warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी. हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं.
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है.
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए.
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में ही ट्रेनिंग फॉर AI, इसके लिए सेंटर्स बनाए हैं.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research.
Welcome back. You're watching India Market Close. Thanks for staying with us. We'll stick with Polycab because interesting perspective that we got, and at an opportune time as well. Got the bull case as well as the bear case on Polycab. Let me quickly go across to Siddharth. Siddharth, what's the view with regard to Polycab at this point? Because well know that Ultratech is still some time away from coming into the space. Do you believe Polycab will have enough levers to try and bridge competition, if any, that will come after 2 years, and try and maintain that 26-27% kind of market share?
So yeah, Harsh, I think interesting move there by Ultratech. After getting into paints, now they have decided to get into the cables and wire segment, and we heard the management that they evaluated a lot of other building material segment and they shortlisted this space, A, because of some similarity to the existing business, B, I think because of the growth rate and the IRR targets that they have set for entering any new business. And if you look at, yes, I think it will take a time of at least 2 years for them to get into the market. The capex plan is definitely aggressive because it constitutes almost 25% of the aggregate gross block of the top 4 players. If we remove Havels, which is a diversified presence, and clearly the targeting is towards wires about 50 to 60%, and about 40% from cables, and that too the initial entry would be in the low tension cable segment. So I think what is happening is definitely there is a change in sentiment because of this announcement. While there would not be any financial impact in the near term, market clearly will see a rating, you can say derating of the multiples because of the entry of a major player, and also because of the fact that they have proven their execution in the paints business. So definitely we have lowered our multiple targets for the space in the cables and wires space. We have downgraded KEI and RR Cable from a buy to a hold to a neutral rating. We have lowered the multiples by 20% across. So even for a Polycab, which was earlier trading at a 50 times, so we were valuing it at a 50 times forward multiple. We have lowered that to 40 times multiple. Good part is that the market share loss that will happen, as you rightly asked. I think Polycab will be able to defend a large portion of its market share. There will be some of the unorganized players, the smaller players from which Ultratech will be gaining market share. And I think from the larger players, it will be nibbling away a fraction of it, of their market share. And there could be a bigger impact to players like KEI or R Cable, which are closer to that 8 to 10% market share compared to Polycab, which has a much larger presence, brand presence, as well as a market share of 26%. Hence, we believe that is a stock which looks good in this market fall, and someone who is looking at a 2-year, 3-year horizon, definitely it would be rewarding to buy Polycab at current levels. We have a target price of almost 7,000 for Polycab.
Okay, Neeraj, you've been hearing buying on Polycab, so let me go across to Himen, take his views with regard to charts. How are charts looking, Himen, at this point with regard to where a Polycab is? Would you also buy at this point?
Okay, if I were to play for a bounce, I mean, the whole market is poised in a similar vein. So yeah, I would keep a stop loss of 45.50, which was the swing low of Friday. Yeah, and then I would play for a bounce. But I think one needs to keep one thing in mind. Stock goes from 500 to 7,600 in 5 years. I'd be very surprised if it goes to make a new high in this calendar year, maybe next year. So it's oversold, that supports, fallen off a cliff, looks at attractive level. So for a bounce, yes.
Okay, very interesting. The other stock which is really moving in trade today is a Siemens. Jeffrey is bullish on that one, 50+% upside. Anushi joining us with details with regard to Jeffrey's views on this one. Stock up nearly 5%, Anushi.
Yeah, right. This is a big upside that Jefferies continues to maintain on something like a Siemens India with a target price of 7,219, which implies about a 56% of an upside. Mainly the bet is on the power transmission segment, which the company has amongst it, other segments. Now here, the expectation is of a higher capex growth going forward. In fact, if you look at the power capex, that is expected to rise about 2.5 times to a $300 billion plus over FY24 to 30 period as compared to what was it in FY17 to 23. Along with this, operational leverage is going to something which is going to play out for the company, and the expectation is that the fixed costs are going to go down as a percentage of sales to 10 to 11%. With this, there could be a boost to EBITDA margins which are there, and that could roughly stand at about 16.5 to 17% as compared to the 13.6% that we saw in FY24. Along with this, there have been a lot of talks about the demerger of the energy division, what it could bring for the table. So Jefferies believes that this could unlock further value for the company going forward, and the energy demerger could potentially add up to 8 to 21% to the current current market price, which is already there. So it's a big range that we are looking at, and something that we should be continuously tracking on, and this is what Jefferies has also been stating, and thus the 56% of an upside that we are seeing.
Thanks so much for that, Anushi, for that perspective. Let me come to you first, Hemen. Would this one interest you at this point? 5% higher, what's happening and what levels would you look out for?
Upward bar reversal coming in today, Harsh. And yes, we had a swing low on weekend at 22nd March 24 at 4562. We gone to 4566. We've come to that level, oversold. Positive divergences have started, crossover buys have begun. Yes. Once again, it may sound a bit like repetition, Harsh. I will play for a bounce. 8,100 to 4,566 is quite a lot, but it has moved from sub 1,000 to 8,000. So once again, calendar year 2025 is not going to do much. But yes, if the quality stock falls 2,500 points, even 1,000-point rally cannot be ruled out. So yeah, for a bounce, absolutely.
Actually speaking of bounces, there is a bit of a bounce from the lows for IndusInd Bank, Hemen. Would you initiate fresh shorts here because it's clearly looking very, very weak per se?
Well, I agree with you totally, Neeraj, that it is weak because frankly speaking, I'll just take 30 seconds more, Neeraj. IndusInd Bank peaked in 2018. Bank Nifty and many of the banks peaked either last year. So it's been abysmal, woeful underperformer. So, but currently, I believe it's in the throes of a recovery. The huge volume on Friday, that's 5 crore plus, is a cause for concern. But I still believe the oversold situation hasn't exactly gone away. A dead cat, I know it, a dead cat bounce, it's a multi-week dead cat bounce, which is still not over. So I think 1100 comes before we short the stock, Neeraj.
Okay, 1100 comes before the next move per se. A lot of stocks are looking wobbly today as well, of course. But look at, for example, CET, or you could even look at Pratap Snacks. That is looking slightly wobbly and 3% lower. Credit Access Grameen has corrected a little bit, so keep that in mind. What is doing well is Narayan Rudalaya. Good move there on that stock, is now trading at the day's highs, if I'm not wrong. 14% higher for this one, 1644 and counting. Are hospitals a good bet, Siddharth? And if so, is it Narayana or is it something else that you would buy?
Yeah, I think definitely in this volatile environment, within the healthcare space, hospitals have been reporting strong numbers. Unfortunately, we don't have coverage on Narayan Hrudayalaya, but we do have coverage on Apollo Hospital as well as Max Healthcare, both of which we like. Max, we have a target price of 1,300, while Apollo Hospitals, we have a target price of 7,800. I think both companies are looking at good occupancy levels. Realizations have improved sequentially. Plus, for Max specifically, the aggressive capacity expansion that is working out. The newer hospitals, as well as a lot of bed addition is in a brownfield where the fixed costs are already taken care of. So that is leading to improvement in margins as well as the return ratios. So yes, I think it's a good space, but our preferred pick would be a Max Healthcare followed by Apollo Hospitals. Narayan, we don't have coverage.
Okay, so those are views coming through on some hospital-related counters, both buzzing today. But power financiers, that's the other pocket where we're seeing a bit of zing. PFC, REC seeing gains of over 4% each. CLSA has come up with an interesting note where they've upgraded the stocks to high conviction outperform. Varsha's here with all of the details on this.
Yes, thank you for that. So yes, as you rightly said, CLSA has upgraded to high conviction outperform for PFC, though they have cut their target price and what they're saying is the existing pipeline, that is 59% undisbursed sanction, will actually support double-digit growth, and the past bad assets have almost tamed down for the company, and the outlook on the new disbursals seems to be better, and they're expecting a best delivery on loan growth, ROE and dividend yields, and still this stock trades at 0.76 0.76x of FY27. While for REC also they have upgraded to high conviction, outperform from conviction, and there also they've cut their target price though. But what they're saying is that 55% of sanctions undisbursed, this pool alone implies double-digit growth, and no slippage over the past 2.75 years is what CLSA is saying, and the outlook on the new disbursal is better as per the brokerage firm, and they are expecting a best-in-class delivery and strong track record of senior management is what the note highlights, and this is the reason why we are seeing both the stocks, that is PFC and REC, is buzzing on the back of CLSA upgrade to outperform.
Thank you so much, Varsha, for that. But Siddharth, if I can just broaden the discussion a little bit further and not just restrict it to power financiers, broaden it to the power sector as a whole. How best would you play this? Power financiers in particular, we've seen EFC fall, I believe, 35% from the highs, maybe a little bit more than that. REC even more, 40% plus from the highs. Looking interesting, or would you play it through another mode within power? Because some of the smaller mid-cap power stocks have really taken a beating.
Yeah, I think it's an interesting space. A lot of developments. The power energy consumption in India has risen in the month of Feb. We saw strong summers leading to that. I think industrial consumption is yet to pick up, and whenever that does happen, I think overall demand for power will go up. So we like this space. The only challenge is that the slowdown in capex from the government, that is impacting sentiments. This sector had seen strong rallies and valuations were very high. Also, another positive advantage was the recent government focus both in the budget as well as in the visits to France as well as US, where they focused on the nuclear capability. I think that is something a lot of utilities, especially the likes of NTPC, Tata Power, Jindal Nuclear, they will benefit from the growth in the nuclear power capacity. So yes, we like this space. As I said, some of the players that we like from the private utility side. So we like a Tata Power, we like JSW Energy. These are the two preferred picks. NTPC we like, but we currently have a neutral rating, and we have a buy rating both on REC, PFC. The recent RBI's, you can say, the opening up of the sector with the liquidity increase, with the rate cuts, we think that is positive for the NBFCs, within which valuations are now comfortable with both REC and PFC, both of which we like from the power financing space.
Very interesting views coming through with regard to some of those names. Himen, these two in particular, because they're buzzing in trade today, views?
Okay, PFC looks good. Frankly speaking, Harsh, it's stable than the rest of the market. Market's been making new lows. It hasn't made a new low in the last 9 trading sessions, so a little bit of relative strength coming in. Oversold at supports. Once again, it looks great for a trading buy. Maybe if you have a 2 month point of view, but if you want to invest, you probably invest 1/4, wait for things to play out. You will get a chance to do it later. And yes, if you have a view for 2 years or more, I believe then it's a great story to buy. But currently, once again, I would treat it more of a maybe a swing trading buy rather than an investment. And if I'm investing, I wouldn't invest fully.
And what about BTST strategies? Very quickly, I mean, 30 seconds.
Okay, BTST, it's a BTST on NTPC. Buy at 14, buy at 314, stop loss 311, target 320, risk reward ratio 1:2.
Okay, awesome. Thank you so much for that, Himen. Again, sticking to the power pack. So good, we got your views on NTPC as well. But let's quickly switch focus. Puneet standing by with regard to how the auto companies, in terms of their numbers for February, have shaped up. What are trends looking like, Puneet?
Well, thanks for that. So very quickly, the numbers have been out today, so I'm pretty sure investors must have seen it. But there are a couple of interesting trends that brokerages had pointed out, specifically that within two-wheelers, the rural market is doing better than the urban market, and the scooters are doing better than motorcycle. Now, while the second trend has played out with TVS outperforming Bajaj in terms of growth, The first one's not so much in terms of the current numbers, because Hero has been very disappointing, down 17% in terms of sales, missing estimates by almost 80,000 units. While on the other hand, someone like an Eicher Motors has done very well, highest growth in the two-wheeler space, 19% growth. While someone like a Bajaj has done mediocrely well, but the domestic sales have fallen 14%. The third consecutive month of a fall in the domestic market. So that's where is a key concern. But here TVS and Eicher were key winners. When you look at the four-wheeler space, again, it was that rural has done better than urban, but only in terms of footfall. So that hasn't translated in sales, and that trend is visible in Maruti Suzuki, where just a 1% growth. Small cars have fallen, exports have fallen this month, so that's a disappointing trend. Whereas Hyundai and Tata Motors continue in the disappointment, and Tata Motors has actually estimated about a 5% fall. It's come at 9%, so again a disappointing month. But a key winner here is Mahindra, undisputed leader in the last 11 months, and is expected to close FY25 on a strong show. Finally, on commercial vehicles, VECV is the one I want to talk about. Very strong growth, again highest in the industry among the listed players, new products filling gaps. And finally, on tractors, this has been one of the most interesting sectors and sub-segments specifically in this month. Highest growth across pairs, and Escorts coming at 11% growth versus estimation of 5%, so a beat there. And Mahindra continuing with a strong growth. It was anticipated a 15% growth in this year, in this particular quarter 4. So definitely a big beat there. So it's key big winners are M&M, Eicher and TVS. Biggest losers will be Hero and Tata Motors.
Siddharth, quickly, firstly, thank you so much, Puneet, for that. Siddharth, your quick take with regard to what stood out for you within the auto pack, and how would you play it? What's your assessment like this time around?
Sure, if you look at the passenger vehicles and the CVs were in line, however, tractors volumes have something which has far exceeded our expectations. Two-wheelers were weak. Two-wheeler volumes for the industry was down 4%, and we saw weak numbers from Hero MotoCorp, while Royal Enfield, TVS did better. I think if you look at what is the key takeaway, we look at a sustained outperformance from Maruti in the passenger vehicle segment, as well as Mahindra and Mahindra both in the passenger vehicles as well as tractor segment. And the rural doing well, we expect in the near term tractors to continue that outperformance, and hence two top pick ideas from the auto space: A, Maruti, and B, M&M, which we like from the auto space.
Okay. All right, let's, we're just about 4.5 odd minutes from close. Let's quickly take a look at the macro. A few things to watch out for before trade tomorrow. One is the Euro area inflation number, which will come out. Then you have US manufacturing PMI number, which will also signal in some form or shape how the US macro is shaping up. Japan unemployment rate will come out, but the big one on the micro side of things, you have Suraksha Diagnostic, which will be in focus. 6% of shares to exit lock-in. Impact of that will likely come in tomorrow. Of course, we'll have to also wait and watch, because technically from the listing price, the stock has only had a downward spiral, and therefore from that 417 number in December of 2024, which was the listing price of the share, currently sitting at 263, likely the impact may not be big of this, but we'll have to wait and watch nonetheless. I want to quickly take in a view. Hemant, Supreme Industries, stock buzzing. What's the sense like on this one? What levels to watch out for?
I think first we have taken support at this congestion area, so downside appears limited. There's 2 rounds of positive divergences. Volume is highest in the last almost 24 trading sessions, but obviously we need a delivery marking confirmation. I believe a turnaround is around the corner, and upward bar reversal on this sort of volume, if the volume delivery is high, it's a very clear indication that a turnaround is around the corner. Today's low can be used as a trading stop loss. I believe this stock is set for a 500 to 700 rupee move in the next 3 to 4 weeks. Harsh.
No, I'll take over, Hemant, and add a question on a stock which usually doesn't come about, and that's Abbott. If you can pull up Abbott and just see the intraday of that chart, a bit of a spike there. So interesting, 3% higher. Any thoughts here, Hemant?
Well, fascinating stock, Neeraj. On a day like this, the stock makes a new all-time high, breaks out of a one-year consolidation. I mean, hats off. Looks good. Further upside seems going to 33,000 and more.
Okay. Thank you, Hemen. Thank you, Siddharth, for joining us this afternoon, giving us all of those views. But quickly, the last minute and a half to quickly wind up trade. Let's look at where we are at, where the Nifty is concerned, largely at the flat line. We've recovered, of course, almost 125 odd points from the day's low, and that's likely the key positive, but can we sustain it? So, no complaints where the benchmark Nifty 50 is concerned, that for sure. Let's look at the heat map as well, and the breadth here is looking largely solid, in fact. 30 advances to just about 19 to 20 declines odd. No major trend per se playing out, but some of the heavyweights weighing down on the index. HDFC, RIL among the losers. Auto stocks in focus on the back of auto sales numbers. So you're seeing some movement on some of those counters as well. But what's doing well? You have IT stocks doing decently well for themselves. And while I'm at it, let's also pull up the sectoral heat map and try and zoom in on how sectors have performed. It's looking like a far better picture here, as you can well see. IT up 1%, metals doing well for themselves as well, 1% or so, and we saw some moves on the Nifty 50 counters as well within the metals pack. Realty up 1% as well within broader markets. Pharma up around 1/3%, thereabouts. FMCG also doing decent-ish. What's not doing well? Oil and gas and bank. Nifty Bank is the major one which has pulled down the index today. Both private and PSU Bank underperforming the Nifty 50. Let's look at the advanced decline though, because the breadth is where the concern is overall. That's the breadth for the day, while there's been quite a bit of improvement as the day has gone by. But nonetheless, we're still strongly in the red where the breadth is concerned, and that's likely, again, where the concern is. We've closed for the day. Nifty Midcap Index, let's quickly pull that one up. Again, from the lows, we've seen a very good bounce. The lows were made at 17,379. We've closed in somewhere around 17,770. So it's a very strong bounce back, 400 odd points, and we've closed in the green for the day. That's another big positive. The Nifty Small Cap Index as well, 13,427, and from that we've bounced again 300 plus points, 330 odd points, and we've closed around 0.7% lower for the day on the Nifty Small Cap. But from the lows, it's been quite a decent recovery, and that's what's really standing out in trade today. Last off, I want to pull out the BSE 500 top gainers, top losers, some big moves. Hospital stocks were in focus, and you saw Narayan on the back of that, and then you had some moves within mid cap and small cap, and pretty much all stocks within that basket on both sides. 5-star taking a bit of a knock, in fact, 6% lower. Suvain Pharma down 7. Angel One we've spoken about, 8.5% lower. There's some of the many stocks which were moving in trade today, but plenty of big moves and a good recovery. That's been the story of the day. With that, out of time on this edition of India Market Close. From Neeraj, myself, everyone who puts the show together, thanks so much for watching.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
बजट भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी
Hello and welcome. Good afternoon. You're watching Market Express and I'm your host Malika Mishra. Let's get straight into the show. The Sensex and the Nifty recovered from midday losses to close flat. Small cap stocks hit fresh lows while mid caps remained unchanged. Oil, gas and financials pressured the market, countered somewhat by gains in IT. Ongoing global trade uncertainties and looming tariff wars fueled market volatility. The BSE small cap index registered its worst fall since COVID as it dropped 14%. Pharma and IT appear to be the tariff play as the United States gears up to impose 25% tariffs on Canada and Mexico. A total of 20% tariff will also be imposed on Chinese goods coming into the US. While Mexico is attempting to placate the US, reports point to China readying to impose reciprocal tariffs on the US. Market weakness continues in March 2025. Nifty 50 declines more than 16% from highs. Nifty Bank is down 11%. Broader markets have performed even worse than benchmarks. Mid Cap 150 is down 22% from highs and small cap is down 27%. Large caps have lost 60.3 lakh crore. Mid cap have lost 19.3 lakh crore and small cap has lost 12.4 lakh crore during this decline. Let's take a look at stock-specific declines from lifetime highs. Hero MotoCorp, Bajaj Auto and Trent are the biggest loser on the street, which has seen a 39% decline each since September 27th. The biggest gainers are Bajaj Finance, which is up 10%, Wipro is up 5% and Kotak Mahindra is up 2% since September 27th. Since September 27th, the Nifty Midcap 150 has seen significant changes. Carbonundum Universal and Mangalore Refinery have both dropped by 45%. Tata Technologies has also faced a decline of 43%. On the other hand, BSE has gained 20%. Global Health has increased by 12% and SRF has risen by 11%. Nifty Small Cap 250 has experienced notable movements since September 27th. Sterling and Wilson drops by 64%, Whirlpool India declines by 59%, Honasa Consumer falls by 55%, Narayana Rudalaya gains by 25%, Reddington increases by 21%, Amber Enterprises is up 18%. Stocks below COVID low include Bandhan Bank down 19.3% from COVID levels and 30.5% from peak. Johnson Controls falls 19.1% from COVID and 29.8% from peak. PVR, Inox and Relaxo also declined, with Relaxo down 15.8% from COVID and 46.9% from its peak. Whirlpool drops 44.4% from COVID levels and 57.9% from its peak. The market sees significant losses and shifts. Nifty 50 stocks with high potential upside include Adani Ports, Adani Enterprises, and BPCL. In the mid-cap 150 index, Oil India, Delivery, and Prestige Estates show significant growth potential. In the small-cap 250 index, Anant Raj, Kirloskar Oil, and Suntech Realty lead the way. The market offers attractive opportunities across various segments. Current market looking like an annual sale, says Samit Vartik, CIO of Sage One Investments. He describes the current stock market as a big sale with numerous opportunities for investors. Vartik emphasizes that now is a great time to invest as many stocks are trading at attractive valuations. Jefferies initiates a buy call on Adani Wilmar with a target price of 370 rupees. The company built large scale under the Fortune brand. As the company has top 3 share in Fortune's key products. The brokerage firm believes that the valuations of the company seems reasonable. Jefferies is bullish on Siemens, maintaining a buy rating with a target of 7,219 rupees, implying a 56% upside. They see Siemens as a strong play on power transmission, which has the highest capex growth. Power capex is projected to rise 2.5 times to $300 billion over FY 24-30. Fixed costs as a percentage of sales are expected to decline to 10 to 11%. Operating leverage is set to boost the EBITDA margin to 16.5 to 17%. The demerger of the energy division could unlock further. Muthoot Finance gets RBI approval to open 115 new branches. Currently, the company owns 7,340 branches. This approval follows a reduced risk weightage for banks lending to NBFCs. The risk weightage reduction could help banks and NBFCs to lend more aggressively in the retail segment. Muthoot Finance's share price has gained 12.46% over the past 6 months. Let's now talk about the company that caused a rout in the cable and wire segment. Ultratech has now said in its con call that it expects an asset turnover ratio of up to 7 times from its latest announcement of foray into cables and wire segment. The company expects a full capacity utilization in FY 30 and 31. The revenue mix between the wires and cables will be 60:40. Now, it'll be interesting. The company will be entering low tension cables only on the cable side. Jefferies lowers K Industries growth expectations. They maintain a buy rating but cut the target price to 4,260 rupees. Ultratech's entry into cables and wires impacts K's stock performance. Ultratech could affect the housing wire segment, contributing 20 to 25% to K's sales. Jefferies sees potential business impact post FY 29. Medium-term growth expectation is now 10 to 12% versus 13 to 15% for FY 28. They lower the price target multiple to 35 times from 45 times for FY 27. Jefferies maintains a buy rating on Polycab but cuts the target to 6,485 rupees. Polycab stock is down 20% in the past 2 days due to Ultratech's entry into cables and wires. The stock trades lower than its historical average. Jefferies sees no impact on Polycab over FY 25-27. They estimate strong sales and PAT growth at 22% and 28% respectively. Exports are a budding opportunity for Polycab. The medium-term outlook remains healthy. Ola Electric slips around 5% today after the company announces to cut over 1,000 jobs to offset its losses. As per Bloomberg, the Ola Electric layoffs are set to include procurement, customer relations, and sales staff. This marks the second round of layoffs in less than 6 months. Some of Ola's 4,000 stores are not selling even one scooter per month. In fact, the Bhavish Agarwal-led company reported a sale of close to 25,000 scooters in February, but with only 1/3 of them being registered. Shares of Nifty Heavy Large Cap Reliance Industries slips over 3% today. RIL drags the benchmark by 544 points, accounting for 13% of total point fall. And the stock has lost close to 4.88 lakh crore in value since Nifty highs. Goldman Sachs slashes target price on BSE as India's oldest stock exchange may most likely see a decrease in trading volume. Now, this comes after market regulator SEBI changed calculation rules on open interest and equity derivatives. This tweak aims to help reflect accurate price sensitivity and prevent stocks from being manipulated and pushed into a ban period. Kotak Institutional Equities initiates coverage on one of the biggest offline retailers, Vishal Mega Mart. The brokerage projects a steady 17% compound annual growth rate in revenue over FY 25-28. Vishal Mega Mart operates pan-India network of 668 stores with approximately 30% located in Tier 1 cities and 70% in Tier 2 cities. Kotak expects the company to add 80, 90 and 100 stores over financial years 2025, 2026 and 2027 respectively. Shares of International Geopolitical Institute were locked in lower circuit after the company posts revenue lower than estimate and PAT growth. The company's revenue for the quarter ended December saw an uptick of 6% at 265 crore rupees. This came in lower as compared to other jewelry companies as they recorded double-digit growth during the same period. Shares of Paytm fall as much as 4.39% to 683.55 rupees during trade on Monday after the company receives a show cause notice under FEMA. Now, this was in regard to acquisitions of Little Internet Private Limited and Nearby India Private Limited. The show cause notice was under FEMA alleging violation of 611.17 crore investment transactions. Nifty IT snaps 7-day losing streak after it records the worst day in nearly 2 years on Friday. Trump's tariff threat and changing dynamics in the AI industry continue to keep the index on a surge. Shares of Coal India wavered around 3% after the miner reported its business figures for February month. Now, the production for full year is up only 1.5% YOY. Offtake for the month also declined by 4.8% from last year. Morgan Stanley identifies this decline in offtake as a key negative. It explains slow pickup in power demand as one of the main factors affecting production growth. Jubilant Ingrevia reaffirms its 2030 vision. Sales and EBITDA targets are ambitious. ROCE aims to improve. Now, growth will come from specialty and health nutrition segments. Chemicals and CDMO are key drivers. CDMO pipeline and semiconductor to be long-term growth drivers, specialty. Now, fine chemicals to double by 2030. Plans for inorganic growth are set. Biocon launches liraglutide in the UK for diabetes and obesity. It is the first generics company to get UK approval for liraglutide. Now, the aim is to provide affordable access and expand to other European markets. Looking ahead, Biocon sees improved performance. This is due to continued recovery in Syngene and good momentum in biosimilars. The company also plans to launch new products in generics. Nomura notes rising agri-based commodity prices and raw material inflation. The brokerage firm's top picks from the FMCG sector are Marico, HUL and RTC. Nomura believes that soft crude prices positive for most consumer and paint companies. Challenges in the FMCG space includes higher prices for palm oil, coffee, milk and other inputs, which can impact margins for companies like Britannia and Nestle. Now, RailTel is in focus. The company receives a 26.3 crore rupees work order from the Cuttack Development Authority. Additionally, it secures a 37.18 crore work order from the Madhya Pradesh State Electronics Development Corporation. The company is set to execute these projects reflecting growth and expansion. IIFL Finance plans to raise 150 crore through a private placement of non-convertible debentures. This move aims to support the company's growth and financial strategies. The funds raised will be used for business expansion and to enhance their financial position. AstraZeneca Pharma receives CDSCO approval for durvalumab. Sorry, I couldn't pronounce that, but this is a special solution. This drug is used to treat liver cancer that cannot be surgically removed. The approval allows AstraZeneca to distribute this special solution in India, aiming to provide better treatment options for patients. According to a study by Amphi Crystal, small cap funds have emerged as the fastest growing segment, having doubled their corpus since 2019. The study also reveals that women investors have doubled their investments through SIPs over the past 5 years. Now, women account for 33% of the total assets under management of SIPs. And let's give you an exclusive story. The IT department is investigating promoters, anchor investors, and related associates who purchased unlisted shares of companies and sold them later via the offer for sale route upon listing. This is suspected to have helped them avoid capital gains tax. Now, tax officials doubt that many investors have inflated their acquisition costs by using an overly high fair market value instead of the actual real price. Betting big on power capex, says Anirudh Sarkar, CIO and portfolio manager of Quest Investment Advisors. He believes that the power sector will continue to see strong growth. Sarkar highlights that valuations are looking attractive for power plays. Currently, power companies are trading at close to a 1-time PE ratio, growth ratio, making them appealing for investors. Transformers and rectifiers is in focus after bagging 2 orders for supplying transformers. Now, there is a 272 crore order from the Adani Group and the other is from Iraq's AI Sabha Group and Australia's Powerlink, having a value of 78 crore rupees. The delivery of both the orders is expected by the next financial year. The government has tightened passport regulations for those born on or after October 1st, 2023. Only a birth certificate issued by the Registrar of Births and Deaths or an authorized body will be accepted. Those born before this date will still be able to submit documents such as PAN cards, driving licenses and voter ID cards. These changes took effect on February 24th, 2025. No other passport rules have been modified. Starting March 8th, women from economically weaker sections will be able to register for the Mahila Samman scheme. The scheme provides an aid of 2,500 rupees per month to women in Delhi. While BJP has promised that the process will be completed in 1.5 months, AAP has criticized the delay in implementing the scheme. Trade Minister Piyush Goyal's Washington visit begins today. The sudden visit comes as President Trump plans on imposing reciprocal tariffs on trading partners, including India. Now, analysts estimate potential losses at about $7 billion a year. To ease tension, India has already cut tariffs on several items like high-end motorcycles and bourbon whiskey. During this visit, Goyal aims to discuss potential Indian concessions and a trade deal to reduce tariffs and boost bilateral trade. The Uttarakhand search operation has ended as 4 more bodies were found at the Uttarakhand avalanche site, raising the death toll to 8. On Friday, around 54 workers were at the Border Roads Organisation project site when the avalanche hit the containers that were being used as living quarters. 46 workers were safely rescued, and authorities have said that those injured are being treated and seem to be in stable condition. The Supreme Court has issued a notice to the centre asking whether the original source of a post should be notified before its removal from platforms like X. The petition argues that bypassing the original source violates natural justice. The court noted that if the person's identity is known, they should be informed. They stressed that while the government can remove content, the poster should receive notice. The centre has 6 weeks to respond to this. The Supreme Court takes action to regulate online content and asks the centre for draft guidelines. The Supreme Court allows Ranveer Ehlabadia to continue his show with conditions to maintaining decency and morality. The court emphasizes that fundamental rights aren't given freely. They caution against abusive language and stress that comedy should be enjoyable for all. Supreme Court seeks a regulatory system without censorship. Solicitor General highlights protecting freedom of expression while preventing obscenity. The court expands the case's scope. Ukrainian President Volodymyr Zelensky told UK media on Sunday that his country is prepared to negotiate a minerals agreement with the United States. Following a historic summit in London, he told UK reporters that the agreement will be signed if the parties are ready. The agreement, which was expected to help resolve the crisis in Ukraine, fell through on Friday following a televised dispute with US President Donald Trump in the Oval Office. Days after a public clash with President Donald Trump, Ukraine's Volodymyr Zelensky sought to clarify his stance. In a video message on X.com, Zelensky emphasized his appreciation for American assistance in the war against Russia. His remarks followed a tense White House exchange where Trump and Vice President J.D. Vance reportedly confronted him for not being thankful enough for resisting their proposed truce terms. Columbia University student Roy Lee has claimed that an AI tool he invented called Interview Coder helped him secure internships at Amazon, Meta, TikTok, and Capital One. He invented this invisible software not to land an internship, but to expose the flaws in the lead code interview. Now, imposing cheating allegations, Amazon has lodged a complaint with Columbia. The other companies have rescinded their offers as well. Indian cricket team has qualified for the semi-final in ICC Champions Trophy. The match will be played in Dubai against Australia. The men in blue defeated the Kiwis by 44 runs in the final group stage match and ended as a table topper. The semi-final is supposed to be played tomorrow. The 97th Academy Awards commenced on Sunday night at Dolby Theatre in Los Angeles, hosted by Conan O'Brien. Honora dominated the awards night with breakout star Mikey Madison named Best Actress and Sean Baker named Best Director. Adrian Brody won his second Oscar as Best Actor for The Brutalist. Now, Kieran Culkin won Best Supporting Actor for A Real Pain, and Zoe Saldana won Best Supporting Actress for Emilia Perez. Anora stole the show yet again, bagging Best Picture, bringing its Oscar total up to 5, also winning Best Editing and Best Original Screenplay. Director Walter Salles received the award for I Am Still Here, making it the first Brazilian film to win Best International Film. In the shadow of the Cyprus won Best Animated Feature. Vicky Kaushal blockbuster Chhaava has made 600 crores in a worldwide box office collection on the 17th day of its release. The blockbuster is set to eclipse Salman Khan's Sultan, which made about 620 crores worldwide. The Sambhaji Maharaj biography is actor Vicky Kaushal and director Laxman Uttekar's biggest earner so far. And with that, it's a wrap on Market Experts, but do stay tuned to NDTV Profit for more news and updates.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में ही ट्रेनिंग फॉर एआई इसके लिए सेंटर्स बनाए हैं।
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30.
Nifty and Sensex end flat after a volatile trading session. Media and oil and gas emerge as the top losers, and Realty breaks a 5-day losing streak to reverse some loss in the market. Authorities are investigating 216 share sales to check if promoters lowered their tax by inflating costs before public listings. Ola Electric lays off 1,400 to 1,500 employees as its expansion hasn't led to enough sales. Piyush Goyal heads to Washington, D.C. to meet U.S. trade officials. Meet set to be focused on reciprocal tariffs. India is likely to skip retaliatory action during talks. May also discuss cutting duties on product lines. The adjusted HSBC India manufacturing PMI slows to its weakest since December 2023. February's manufacturing PMI stood at 56.3, down from 57.7 in January. Supreme Court takes suo moto on regulating online content as center to come up with draft guidelines subject to the petitioner furnishing an undertaking that whether Ranveer's show will maintain the standards of decency and morality. The petitioner is permitted to resume the Ranveer show. Low-budget comedy Anora has triumphed at this year's Academy Awards, winning 5 Oscars. Another notable mention was No Other Land, a film made by an Israel-Palestine collective about displacement in the West Bank, which won Best Documentary Feature despite no official distribution in the US. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahogana. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, the Income Tax Department is probing questionable transactions where promoters, their associates and anchor investors purchased unlisted shares of companies and later sold them through an offer for sale when the companies went public. Over the past 10 days, the department's investigation wing has issued multiple notices questioning investors across various cities about their methods for calculating the cost of acquiring the unlisted shares and the subsequent profits made during the OFS. My colleague Shrimi Chaudhary is joining us with exclusive details. So Shrimi, can you explain exactly what violations the IT department is looking into?
First and foremost is, of course, Income Tax Department is scrutinizing the promoters and anchor investors who, exited its holding just ahead of public listing through OFS. Income Tax Department is trying to gauge whether the capital gains tax were paid on the subsequent sale or not. Income Tax Department sources tells NDTV Profit that about 216 such OFS transactions happened between FY21 and FY24. Is now under examination. Income Tax Department is looking into all those transactions, and the move triggered after these promoters and anchor investors has filed the revised tax returns and not sort of showing, and rather there is a discrepancies and misreporting as far as capital gains taxes are concerned. In fact, the Income Tax Department also somewhere suspect that there is an intent of artificially inflating the cost of acquisition to sort of reduce their tax liability. Meanwhile, CBDT, asked all the field formation across the country to have a special drive on the matter, since there are a lot of companies and it's coming from most cities, and that's why they decided to sort of go ahead with a special drive invoking the Section 55 pertaining to the cost of acquisition on the share sale and on the profit which typically promoters and anchor investor make. Taking cues from that, they're also sourcing data from NSE and BSE, and they have done their own data analytics, and basis of that they are now started sending notices to all these promoters and anchor investors seeking explanation over misreporting of capital gains in their revised return, and somewhere also trying to gauge why there is a confusion on the cost of acquisition. NDTV Profit has reviewed the February 3rd letter of CBDT asking field formation to sort of initiate action and give priority to these OFS happened between these 4 years, and also somewhere sort of directing tax sleuths to take action accordingly. And they have in possession of the name of the companies, the name of the OFS and the shareholders and their promoters, and based on that they are trying to sort of match their revised income tax return, and you will see a lot of such notices will be issued to them in the coming weeks.
Right, Shrimi, stay with us. I'd also like to know that is this routine or did it tip off prompt this probe?
Yeah, as I mentioned, the move triggered following the discrepancy seen in the revised tax filing by these promoters and anchor investor, where they have found some issues with the cost of acquisition, the way they have been calculated and the way they have not sort of paid capital gains tax as anticipated. And somewhere the move also triggered from the fact that in the July budget 2024 there was a clarification with respect to the cost of acquisition and how it should be computed. That was not reflecting there, and the seller in these transactions during the OFS, it was sort of noted that seller anticipated that it is a tax exempt on such transaction, and somewhere there was also confusion with respect to fair market value. So basis of that the move triggered, and at the same time CBDT also got information across the country that these things happening, capital gains tax were not paid appropriately as per the transactions. So that's why the special drive is now being rolled out, and accordingly the income tax department is supposed to take action, and we will see a lot of such notices going to promoters and anchor investors. And remember, these are a lot of such marquee companies. OFS also happened between these 4 fiscal years, and we would see related action in the upcoming week itself.
Thanks, Shrimi, for bringing us those exclusive details there. Now on to an NDTV Profit exclusive. Ola Electric has initiated a second round of layoffs in less than 6 months. This is likely to affect nearly 1,500 employees. Notably, half of these layoffs involve contractual workers. My colleague Tushar is joining us with more details on this. Tushar, can you please provide more details on this development and why this company is under scrutiny?
Good evening, Himakshi. So the Ola Electric story today is in 3 parts. The first part is the layoffs. This is the second round of layoffs in less than 6 months. About 1,400 to 1,500 employees have been affected. About half of these are contractual workers who are hired to man the experience centers that the company had opened in December last year to fix the sales and service related issues that the company was facing in the prior months. Now these have been let go because the sales are not matching up. So this is an added cost for the company at this point of time. Sources tell us that several of these new experience centers are not even recording 1 scooter sold every month. Remember, all of this is being done to shore up profitability of the company, at least on an operational level. In Q3, the company's EBITDA loss ballooned to about 564 crores from about 350 crores in Q2. That was due to this expansion. The aim was to shore up sales. That has not happened. The company is still selling about 25,000 scooters. Founder billionaire Bhavish Aggarwal had said that they need to sell consistently 50,000 scooters every month to achieve operational profitability or break even. The second part of the story is based on the Roadster X motorcycle that the company had launched last month, just before its third quarter earnings on 5th February. The Roadster X is still not roadworthy. Essentially, it has not undergone the process of homologation, which makes it fit for usage on the road. Now, that is important to note because the company was supposed to launch or start deliveries by mid-March. Now, that timeline is unlikely to be met. Third part, we spoke with sources and some investors who indicated that they're sitting on about 50 to 55% loss as far as their investment into the company is concerned. Remember, Ola Electric listed on the stock exchange at 71 rupees, and it's trading at about 54, 55. So there's a substantial erosion in valuation of the company. The investor is now contemplating when or whether to exit the company. So a whole bunch of problems for Ola Electric at this point of time. What will be the way out? Only time will tell.
Absolutely, Tushar. Only time will tell what the future holds for Ola Electric. Now, looking at how the markets fare today, all the topsy-turvy trades culminated in a fairly flat end for Nifty and Sensex. In terms of sectors, media and oil and gas dragged the benchmarks lower with cuts of 1%, give or take. Realty and metal, however, did help in reversing some losses with gains of more than 1%. Anushi is joining us with a roundup of all the action on the D Street today.
Right, Himakshi. So if we see what has happened, it's almost a flat ending that we've seen for where the benchmark indices are concerned, and this is with a negative bias. And again, after 8 sessions of decline that we are looking at, as you've mentioned, that the Nifty Realty and the Nifty Metals are the top gainers in the sector today. In fact, what has happened is Nifty Realty has snapped its 5-day losing streak as well. In terms of where benchmark indices are concerned, BEL and Grasim were the top gainers in Nifty 50 for the day, while in top laggards we had names like Coal India and Reliance emerging up again. Now, the highlight of the day, or rather the move for the day, was the recovery which we saw in the Nifty, in the broader markets as well. In fact, we see Nifty Midcap 150 ending in green, snapping its 5 sessions of losses that we have been seeing. Nifty Small Cap 250, however, there was a strong set of recovery. In fact, it gained about 2.5% from the day's low at close. It still ended with a tinge of red that we are seeing. Some of the stock-specific action, if you want to point that out, in the mid-cap stocks, we have names like investments, Cummins India and Supreme Industries seeing the largest market cap change in the day, and this is on the positive side we are looking at. And in small caps, if we see, I'm pointing out the green ones, the names which have ended higher, as we have seen a significant recovery at the end of the day. So we have something like Autumn Investment and Infra, 2008-32 crore of a change in market cap, along with names like Narayana Hrudayalaya and Medanta, which were in the picture as well. So overall, if we take the markets, there was some signs of recovery in the later part of the day, which because of which Nifty 50 ended in flat, while mid cap 150 ended in green and small cap 250. However, there was a strong recovery. It was still in red.
Right, Anushi. Thanks for that market check. Now, a market driven by liquidity can also experience downturns because of IT. There are very few buyers and most sellers. Some are unable to exit because they lack liquidity to do so. This is what Samit Vartak of Sage One Investments had to say about the current market outlook.
In this kind of a market, which is more driven by liquidity, when it comes down, again, it's because of the liquidity, right? That some people are forced to exit, some just take allocation decisions at these kind of times. And it's an extremely consensus call these days that you allocate to large caps if you want to be in India and get out of mid and small cap kind of space. So when liquidity comes out, good, bad, doesn't matter. Everything falls. It's just a matter of liquidity. And there's so much money which had gone into this space that when things come out, in this kind of times, when there are so many, alarming calls, who is going to be buying at this point? So there are very few buyers, a lot of sellers. Some are not getting out because they probably don't have liquidity to get out, right? So I think these are the times when you get this opportunity. And so I look at it as a cyclical, it's like almost like an annual sale. Or sometimes there is one big sale which happens every 3 years or 2.5, 4 years. That's a very, very common timeline. I don't know what will happen in the next 3 months or 4 months, but I'm pretty sure if you are a good stock picker from a 3-year perspective, there is exciting opportunities, and it will be shocking to me if you can't make money over a 3 to 4 year period, reasonably above average kind of returns from the kind of valuations which are available in some of the select good quality companies.
The adjusted HSBC India manufacturing PMI stood at 56.3 in February, down from 57.7 in January. Pallavi is here in the studios joining us. Pallavi, please take it away and break down these numbers for us.
Right. So, like you mentioned, manufacturing PMI did see some loss in momentum in the month of February, and it actually fell to its lowest since December 2023. So that's a 14-month low. It came in at 56.3 in February from 57.7 in January. Now, to be sure, it remains in expansion mode. A print above 50 indicates expansion. Business conditions were decent across the three monitored subsectors: consumer, intermediate and investment goods. Wherever there was an increase noted, manufacturers said it was largely on the back of sustained improvements in demand, tech investments and the commissioning of new projects. New export orders also saw a rise, as did employment. Input costs did see a rise with a rise in prices of leather, marketing, rubber, telecom. Still, the overall rate of inflation was lower than what it has been the past couple of months. On future prospects as well, firms continue to express optimism for the coming year, with client demand expected to remain positive and supportive of output.
Thanks, Pallavi, for breaking down those numbers for us. Now, India's oldest stock exchange is likely to experience a decrease in trading activity due to the securities market regulator's latest change in the derivative segment. Market regulator SEBI has suggested a new method called a future equivalent for calculating open interest in equity derivatives. This change actually aims to show more accurate price sensitivity and prevent stocks from being manipulated and entering a ban period. My colleague Anushi is joining us to tell us how will it impact the BSE trading volumes. Anushi, over to you.
Right, so we have a couple of brokerages. We've seen strong moves in trade today, not just on BSE, even Angel One, and all of these stocks are down. I'll highlight what Goldman Sachs had to say on this note. They've maintained a neutral reading and they've cut the target price to 4,880 now as compared to 5,650, saying that lowering industry option penetration is something that they are seeing, and SEBI consultation paper is to reduce the undue volatility in the equity markets which are there. Now this move doesn't bode well with something like a BSE which is there, as option trading accounts for around 1/3 of the, in fact around half of the top line of BSE. BSE shares are largely pricing in the risk to these industry volumes which are present, and pricing in risk from the implementation of the proposed volume. So while the final outcome still remains uncertain, as this paper was not expected by the market, they have now reduced the target price to 4,880 versus 5,650 which was there earlier.
Right, Anushi. Thanks for that. Now, Union Commerce and Industry Minister Piyush Goyal is traveling to Washington, D.C. to meet the newly inducted Trump administration. This visit comes amid discussions for a year-end trade deal and an approaching tariff rollout deadline during his visit from March 4th to 6th. So, Piyush Goyal is expected to hold talks with U.S. Trade Representative and U.S. Commerce Secretary. My colleague Rishabh has more details.
What we see coming in from the trade talks between the India and the US, a very crucial move coming in from India. Union Commerce and Industry Minister Piyush Goyal is set to visit Washington. In fact, he is on a visit there. Currently, he will be meeting key trade officials from the US, including the US Trade Representative Jamieson Greer, as well as Commerce Secretary of State of the US, Howard Lutnick. Both these meetings will take place between March 4th and 6th, and talks will revolve around, of course, the tariff concerns that are coming in from the USA. The US is set to impose tariffs, the details of which will be made available starting April. And Goyal's visit is remarkable because he is going right before that deadline. The talks will obviously also talk about the bilateral trade agreement, the BTA, which is sort of being looked at as a mini trade deal between India and the US. These two will be just sort of the defining points of this visit by Goyal. What will also happen, and what we're also likely to see, is that India will skip the retaliatory action. So not a very aggressive stance. It will be not looking at a tit for tat sort of situation, but we will be looking at actually just reducing the number of tariff lines that we have on certain exports that go to the US, as well as cutting duties on a number of product lines, a zero for zero strategy, if you will, and also invite the US to cut down tariffs. And that is basically what an FTA is. It reduces the sort of trade barriers, both tariff and non-tariff, between two countries. So this is what we're expecting from CIMs, the Commerce and Industry Ministers' visit to the US. We will stay tuned to his visit and keep track of all the details coming in.
Right, Rishabh. Thanks for that. Now, as Indian tariffs are set to be implemented on April 2nd and tariffs on Mexico, Canada and China are set to be implemented tomorrow, U.S. Commerce Secretary says that he expects the United States to impose tariffs on Canada and Mexico, but the situation is fluid and President Donald Trump will determine the levels. Trump's proposed tariffs from February include a 25% duty on all imports from Mexico and Canada, a 10% tariff on energy products, and a new 10% tariff on Chinese goods. Tariffs on Canada and Mexico were delayed for a month, but Trump has enacted a new 10% across-the-board tariff on the Chinese products. Now, in a major relief for beer biceps Ranveer Alabadia, the Supreme Court has allowed him to continue making content, but on a condition of strictly not using any abusive and obscene words. The court emphasizes that fundamental rights aren't given freely and also stressed that comedy should be enjoyable for all. Responding to the aftermath of the viral incident at India's Got Latent, the court seeks a regulatory system without censorship and has expanded the scope of the case. I'm now being joined by my colleague Nupur from NDTV to brief us on the latest update.
Well, yes, today the Supreme Court, in a major relief to the YouTuber Ranveer Alabadia, has lifted this restriction that it had earlier imposed on him that he cannot appear in any show. The Supreme Court granted this relief after Alabadia prayed to the court that he has more than 280 employees for whom salaries he has to pay, and he requested that it is a matter of his livelihood, and prayed to the top court that at least this restriction should be removed. So, keeping all this in mind and taking an undertaking from Ranveer Alabadia that he will not further engage in any obscene commentary that he has done, and he will maintain the standards of morality in his shows. He has been allowed to further continue with his own personal podcast and appear in shows. However, the Supreme Court today has also asked the center to in fact come up with draft guidelines when it comes to regulating online content, and has said that there is a need to balance fundamental right to freedom and speech with against the morality of the society. And the Supreme Court, today also came down heavily on YouTuber Samay Raina without naming him. Justice Suryakant, in fact, today remarked that he has gone to Canada and made certain comments about the proceedings, and probably he's not aware about the powers of the court and jurisdictions of the court. And today Supreme Court, really stood by its earlier stance that there has to be limits on the, obscenity in the content, and there has to be, some morality that has to be maintained. While even if it is comedy, it cannot be perverted as it was in India's Got Talent show. So, saying all this, the Supreme Court has asked the center to come up with draft guidelines after consulting all the relevant stakeholders. But the Supreme Court has also said that it does not want to do any censorship, but it wants to make sure that the morality of the society is not compromised and fundamental rights are balanced in that way.
Right, Nupur. Thanks for getting us those details there from the courtroom. Now, working on capturing value segment with its A series, Samsung recently launched 3 new Galaxy A series phones. My colleague Rishabh Bhatnagar spoke to Aditya Babbar, VP MX Business at Samsung India during the launch. Listen in.
It's a fact that tier 2 below is growing faster in the market today, especially the rural is growing the fastest. So there's a lot of new initiative, what have been brought out there is why we feel that it is very, very important to make the device democratized. It's also equally on terms of experience. So what you see today, the experience in front of the tier 2, tier 3 is, back to the number one out there, the best experience of the device. So we have put a lot of devices on demo there. Third, it is also a very important factor of affordability. So all the 12x0 or the new NBFC schemes are making it affordable for people and very easy for them to upgrade.
Aditya, also talk to us now about what sort of market share growth that is Samsung looking at right now. There are a couple of other brands that are doing better in terms of market share. What's your plan to sort of recoup that?
Well, I think 2024 was a great year of learning, and we have really reset ourselves into 3 basic pillars of our growth. One is diversification. So we are bringing a lot of 5G under 10,000. Again, at the core of what we have brought is the Samsung philosophy of no compromise. So we have not compromised with the number of bands which are out there. It comes with 12 bands. It comes with a 25 charge, so you don't have a less charge holder. What we are trying to do at a value segment between 20 to 50, where A26, 36, 56 is getting launched today, is bringing a great combination of design and awesome intelligence. And at the value end of the market, we continue to grow the Galaxy AI with the S25 and S24 series.
Aditya, lastly, talk to us about the sort of overall smartphone market, right? 2024 was flattish. Will 2025 be the same?
Well, if I see our last 3-year trends, the market has been very, very flat. It hovers between 145, 147 million around that trend. So it's a very nominal growth. Most of the analysts puts even 2025 as a very flattish growth. The way the year has started, it is looking like it will be a very, very flattish growth. But what's very encouraging is even last year, the value market grew at upward of 20%. So it's a healthy double digit. And what's very exciting for Samsung is that we grew in value faster than the market. So that's a trend we really want to capitalize on and focus on for the year of 2025. And that's where, you see the A series getting launched. So, I want to talk a bit about A series that, this series have 89 million happy consumers. So there's great news for you today. The A26, 36, 56 is coming. And our target is that how do we do 100 million this this year and have one of the strongest franchise out there in the market.
Viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking
Thanks for tuning in to Talking Point Unfiltered. The idea of this podcast series is to try and get into the minds of our guests and understand how do they think about the current situation, be it business, be it markets, and what are the ramifications over the medium term and not necessarily what will happen tomorrow. Our guest today is Samit Vartak of Sage One. Samit, great having you. Thanks for taking the time out.
Absolutely my pleasure. So I think this is the first podcast I'm doing, so I'm looking forward to it.
Yeah, likewise, Samit. I mean, it's been the first time that we are talking on such a format as well, so really looking forward. So, Samit, there is no better time to talk about the market sentiment than when the market is at its worst, right? Because it probably gives you the best opportunities as well.
Yeah.
How do you see this current market environment? Because the unanimous calls that I get range from how it is prudent to not be invested in India currently. Yeah. If you want to be invested, then look at only the large caps. Don't look at the mid caps and the small caps, and keep a certain percentage of your portfolio in cash. There is almost nobody saying that start hunting actively in the mid cap and the small cap space, or that take an oversized bet out there in that bucket. How do you think about the situation?
Yeah, I mean, it's always good to have too many worries around you. That's where you find value, right? So I think after a long time, at least you're finding exciting opportunities. It's not the universe which has become cheap, But surely, if you're a stock picker, you don't need the universe to be cheap. At least there are so many companies in this kind of a market, which are trading at like 15, 20 times kind of a multiple, which were not available. I mean, so many. What happens is that in this kind of a market, which is more driven by liquidity, when it comes down, again, it's because of the liquidity, right? That some people are forced to exit, some just take allocation decisions at these kind of times. And it's an extremely consensus call these days that you allocate to large caps if you want to be in India and get out of mid and small cap kind of space. So when liquidity comes out, good, bad, doesn't matter. Everything falls. It's just a matter of liquidity. And there's so much money which had gone into this space that when things come out, in this kind of times, when there are so many, alarming calls, who is going to be buying at this point? So there are very few buyers, a lot of sellers. Some are not getting out because they probably don't have liquidity to get out, right? So I think these are the times when you get this opportunity. And so I look at it as a cyclical, it's like almost like an annual sale. Or sometimes there is one big sale which happens every 3 years or the 2.5, 4 years. That's a very, very common timeline when there is a big sale which
is
happens.
That sale, you think?
I think so. This is definitely. Last correction we had started in December 21, and it continued sort of towards 22, probably half of the year, and then 3 years down the line. Again, September 24 is when we had the peak in the market. So we're already there, 5-6 months. And generally, I've seen that the average duration of correction is that 6 to 9 months. Right? And the faster it corrects, the shorter is the duration.
Right.
So this time, I think the speed was pretty slow, but then last 1 month, the speed has just accelerated. Right, so there has been a sharp correction which has happened, and again, I think we need to remind ourselves that you will never get such a big sale unless there are warning signs around you. So I feel happy if there are too many people warning against it. That means that the weak hands can't withstand such warnings. Only the strong hands will withstand these kind of bombardment of warnings, not just from Indian investors, but also what's happening geopolitically. So I don't know what will happen in the next 3 months or 4 months, but I'm pretty sure if you are a good stock picker from a 3-year perspective, there is exciting opportunities, and it will be shocking to me if you can't make money over a 3 to 4 year period, reasonably above average kind of returns from the kind of valuations which are available in some of the select good quality companies, right? And again, I think, I put up one analysis on Twitter, which is comparing large cap, mid caps and small caps, right? And I'm comparing more of large cap and small caps, where I divided the universe into 3 buckets. One is PSU companies, right? Then the private banks, because PSU companies and private banks trade at very different multiples, right? And then you have the rest of the universe, right? Large caps, when they say, large caps are trading at 19 times forward or, 21, 22 times kind of backward looking, is mainly because of the mix of the large caps. 1/3 of the profits in large caps come in from the PSU basket, which trades at 8, 10 times kind of a multiple, right? And then when you look at the private banks, which make up for about 17% more, so 50% total, again, they also trade at that 15, 17 kind of multiple. And then you have rest of the bucket, which is trading today at 40 plus multiple.
Interesting.
These are median valuations of, so then you compare that with the small caps, right? There is very little PSU as well as private bank contribution from these. The both put together probably will be 15%, right? So then you look at the mix, right? And then you have the 85% bucket, which is trading at 30, 32 times kind of multiple compared to 40 plus in the large cap. That's the real comparison. You can't just compare a mix of bucket, which has all quality, but if the low quality is high in a certain bucket, overall you will feel that the valuations are low, but that's not really. I mean, how many portfolios have 33% allocation to PSUs?
So effectively you're saying that if you don't want to buy PSUs and if you don't want to buy private sector banks, then the large caps is probably more expensive than the median small cap.
Absolutely. Just look at all the companies. Just remove those two buckets, which are always cheap. You can't look at them from a P multiple, because for a 10 times P multiple in a PSU can be also expensive.
Right.
When they trade on an average 5 to 6 times multiple.
Now, for a lot of people who may ask listeners and viewers that there should be actionable points in a conversation, I think the last answer gone by is truly the most actionable point. You don't need anything else. You get some of the key points, screen for yourself, do a little bit of research, and you will get the answers yourself. You actually won't need to watch the rest of the show also if you want. But I think, Samit, thank you so much. That was very well explained. Now, I want to get to the mental aspect of it before I also nail it down to whether you find a confluence of all of these factors in the markets currently and what are those pockets maybe. But just one mental aspect that I want to get out here. You would be owning some small caps which would have seen a drawdown in this last 2-3 months, right? Some maybe 20%, some maybe 30, some maybe 50, what have you, right? How do you decide where is it that you get out of? And how do you decide, can I let me stay put? Because when it falls 30, 40, 50%, you are scared obviously about whether the story is gone wrong or is it just a valuation correction or everything is going down. So how do you decide?
Yeah, so I think one of the big mental reset that one needs to do at this point in time is detach yourself from the existing portfolio. Think as if I am restarting, building a portfolio. I have new money, I need to build up a portfolio now. And see what kind of decisions will you take then, right? Unfortunately, what happens is that because of the baggage of, you having taken maybe wrong decisions, or just because of market, fall, things have corrected, you get clouded by a lot of those decision, confusing facts, right? So once you remove that, build your completely new portfolio and then see, is it the same as what you have now? If there is a big difference, just change that. Just make that transition, because after all, your returns going forward will be based on today's valuation, based on today's optimal portfolio. And you need to build the optimal portfolio now without the baggage of having your old portfolio.
But it's an easier said than done thing. Are you able to do it?
I mean, it's just that you need, see, sometimes fund managers do have restrictions of getting out. Sometimes you just can't get out, right? Because by getting out, you probably will have 10% more fall or 15% more fall in the stock, right? So that becomes a hurdle. But for most of the investors, that's not a hurdle at all, right? So it's much easier for, a retail investor to do this adjustment, right? But at any point in time, even as a fund manager, I need to think, my portfolio is what it is, right? There will be some companies which maybe were highly valued. I may not be comfortable. I really love the businesses, but I don't like the valuation. A lot of those companies actually have come back to a very comfortable valuation. So you may have cash or may not have cash. The cash decisions would be very different. You may go for attractive, but I think you need to think about the same thing even here, that you think that whatever you have in your portfolio is an opportunity cost for you, right? You can easily replace that with something that you like, so if something else which is outside of your portfolio is much more attractive, you replace it. This is a time to swap. First of all, if you're in loss, this is a time where you can book losses, save paying taxes, and at the same time get something which is really attractive. So if you're aware of this fact, at least you will consider these factors for decision making, and it would help, because most investors would have lost value in their portfolio. They may not have cash, right? And it's easier for people who were lucky enough to keep cash. But don't bog yourself down with that. Whatever is in your hand, make the best optimal portfolio out of it, and then you'll be shocked. This can continue for sometimes 8 months, 9 months, sometimes a year, 2 years. But when things rebound, you will make up for not only the lost, portfolio value, but even make up really good returns in a matter of 4 or 5 months. It has happened multiple times. I mean, during 2009 fall, small caps had fallen by 70%. And in the next 14 months, the markets were up, the small cap was up 3.5x. That means they recovered entire fall. I mean, such a massive fall. This time it's, the fall is like 1/3 of that.
Yeah, exactly.
Right, 1/3. So it doesn't take much time to recover. But more importantly, make sure that the companies you have are the ones which will recover, because there will be many companies, in your portfolio, which may be a lot of story stocks, which would be much more cyclical, where there was a story and many of the time in the long run do not do well. But, like I had made a presentation of how cyclical companies, in post-COVID, in the next 4 years, on an average, have gone up 10x. Whereas good quality companies have gone up less than 2x during those 4 years. There is a huge gap. Now, if you expect that these cyclical companies will continue to, if they have fallen by 50%, they'll quickly recover, that's like living in a fool's paradise.
So you believe that change will happen now?
That change will happen. But make sure that the portfolio that you have now is made out of companies which are longer term structural stories, where valuation has become really attractive. Forget about the fall in your existing stocks. Some of them will never recover. The breadth of this rise was so large that many of those stocks, I would say, sometimes 70-80% of the stocks will never see the recent highs in many years to come. But if you are just looking for 15-20 stocks, make sure that whatever stocks you have in your portfolio, have that high probability that they will, in 5 years, they'll be much higher than the peak that you saw in the recent past.
And the simplest yardstick is possibility of higher sales growth, right? Because that was one of the key things.
Possibly higher sales growth as well as possibility of sustainable ROE.
Both.
Because cyclical companies will not have sustainable ROEs. And they will have, generally cyclical ROE.
So you would have played cyclical companies from 21 to 24 if you had played, but you are also out of them. You are now going for the sustainable ROE businesses.
Yeah, I mean, see, one-off you can take a tactical opportunity, but majority of your portfolio, generally should not be. It's a high risk, high reward kind of a game. What we look for is high risk adjusted returns. That's more important.
Got it. So where do you find these pockets now, Samit? And by cyclicals, correct me if I'm wrong, but you are therefore effectively ruling out commodity plays or what else gets ruled out? Let's first eliminate that, according to you.
Yeah, see, highly cyclical companies. For example, what I mean by cyclical companies is, let's take, for an example, railways companies. I had put up some analysis, a year back, on some of the PSU companies, railways companies, how they had gone up, and their valuation multiples had multiplied 5x, 10x. Valuation multiples, not stocks. Valuation multiples, right? So these are the companies where what they sell, their replacement cycle is really long. Sometimes 25, 30 years, right? So you will have great growth for 3 years, 4 years, because government is aggressively going for capex, right? So then you will have a huge order book which build up. But who knows? Government can completely swap. They will completely reverse their decision of spending on a railway kind of a play and focus on something else, like suddenly. And then suddenly you will see that the order book has vanished, or it just staying flat, or going down slowly. And then no one wants to pay any valuation to these companies.
But so you are, sorry, just to interrupt here, but in a lot of these companies, the order books are still high. You believe the fortunes ahead will not be a factor of order book execution, but order continuation of order wins.
Exactly. There also has to be growth in order book, right?
Growth in order book also.
What P multiple, see, a lot of these highly cyclical companies generally trade at single digit multiples in the long run. PSUs also trade at single digit multiples because of that uncertainty. Generally they only have one customer. Railways also many times have one customer, and then the product replacement cycle is very long. That makes it more riskier. Plus they have huge fixed cost. So if you, during a bull market, go for too much of an expansion, raise too much of QIP money, when the things slow down, at that time your utilization goes down, fixed costs remain, and your margin just collapse. At that time, people go back, with low margin and low multiple. So the double whammy is huge, right? If your multiples from single digits had gone to as high as 40 times or 50 times, right, and that too at the highest order book or the highest margins, that's one of the most riskiest things that you invest in, because there is a risk to the valuation multiple as well as to the P multiple and as well as the growth. So that's what one needs to be careful. Are your companies, were they the ones where the valuation multiple went up too much? I'm pretty sure they will revert back towards the mean. Are their valuation really away from their long-term mean? Are their margins towards the higher end? Are those based on really, huge order books, but is their product replacement cycle really, really long?
Got it.
If it's short, doesn't matter. Then you can, those are much more resilient businesses. And whether your cost structure and expansion was too high, and are you ready for the slowdown? If the slowdown comes in and you're sitting on a huge cost structure, it becomes pretty risky.
Does the same hold true for defense? The reason I ask is, for example, shipbuilding. we were talking to Garden Reach shipbuilders.
Yeah.
But that management, so the book-to-bill ratio must be maybe 5x or 6x.
Sure.
But while their order book is 24,000 crores, I'm using that as an example, by the way.
Sure.
The management said that they expect that their order backlog or order book by the end of FY26 could be 40,000 crores from 25. And they believe that orders worth 180,000 crores would come in over the next 2-3 years, of which they will get mid-teens to high teens kind of orders. So they expect order inflow.
Okay.
Their valuations have come off because all defense stocks have come down.
Yeah.
And their execution table looks solid. So does defense look similar like railways, or is that slightly different, you reckon?
No.
I'm asking this because a lot of people are invested in defense names.
No. It could be very different. See, again, I would go back to the stock picking. It should be bottoms up. In an rising tide, all the companies in any sector goes up. Number of companies in those sector also go up, right? Unfortunately, 10 years down, if you look at the 10-year, long-term perspective, there will be few winners. There is no question about it.
That's true.
Question is, are you in those? If you're invested in the entire basket, I'm pretty sure that basket is not going to
work.
Not going to deliver. Right?
But so if the tide goes down, Samit, then will a good company also go down, or can a good company shine in a bad sector as well?
In the short run, it will also go down.
Okay.
In the short run, there is no like what happens in the upside, there is very little discrimination because it goes up because of the liquidity. In the short run, liquidity is what will take everything down.
Got it.
And that's where you get the opportunity to pick the right stocks. You look at examples of longer term companies, right? So for example, say APL Apollo, steel cycle has gone nowhere, but in the last 10 years, look at their profit, profit delivery. Look at their debt levels, what has happened. It's independent of the entire sector doing that well. Towards the end, and everyone gets funding and everyone starts doing well. But if you look at the next 10 years, 1 or 2 of those companies will be the winners.
Got it.
There won't be 10 players who would be the winners. So accordingly, you look at, in agrochemical companies like PI Industries, in consumer finance companies like Bajaj Finance or Chola, there will be only 1 or 2 winners. The rest will be below average returns. And that's where you need to make sure whatever you are in are those winners. Think only from that longer term perspective, because most of the companies who went through upside where the promoters were taking advantage of frothy times, they went for multiple QIPs, they really don't have a real genuine long term plan. They are making plans because now they are getting free money almost, and then they are deploying that money for expansion. But every expansion done at below ROE of what the investors, return on investment requirement is destroying value, not growing value.
Right.
Any investment that goes which is above your return on investment, that's the only which adds market value, otherwise destroying market value. But during bad times, until that delivery really happens, there is a big gap of 2-3 years because they're going through capex and people get excited. And they think that it's going to add, as much gross block, their market cap also is going to go up that much. And unfortunately, it doesn't happen. It happens for only 1 or 2 companies, and it happens across many sectors. So there will be multiple winners in this. There will be multiple winners in defense. There will be, in the renewable energy. there will be across a lot of cyclical companies too. But only bottoms up will work.
My final question, Samit, and that is on the futuristic themes, because now we're starting to see them making their presence felt. New age companies, or any few. I don't just mean tech players. I mean anything which is futuristic in nature and coming up. But use that as an example that we now have, or we will now have one tech company or a consumer tech company being a part of the index.
Yeah.
And a lot of people believe that what's happened in the West, wherein the consumer tech essentially became a large portion of the index as well, because the profit pools are growing. So from the futuristic themes, where is it that you are the most constructive? Here, you may have a view which is maybe 5-10 years out.
Yeah. So I'm not that good at picking these futuristic, themes, especially ones where they're not really making good profits, not making reasonable ROE, ROCs. As I said, I would like to pick companies which are high ROE already, where my evaluation whether they are sustainable, are they going to go through that 20% kind of growth, and I need little more certainty. Then I'm pretty sure out of these packs of new age, there will be winners.
But that's not the pond that you're fishing in.
I don't have the ability to pick those right ones.
Okay, so then let me reverse the question, since I mentioned last question. So what would be the top 1 or 2 bets or top 2 or 3 bets in the portfolio? You may not choose to take names, but you could give an indication of what kind of businesses are there, what sectors do they belong in? Because I'm guessing now your portfolio is primed for the next 2-3 years, because you would have made changes, etc. So what are the top overweights?
Sure. So see, there are certain themes where I'm getting bullish again, just because of the valuation correction. There has been a huge time correction which these guys have gone through, and some of the themes which I like, one is secured finance, secured lending. So whether it's gold finance, and again there is one player who has significantly outperformed any other player in this, and where the gold prices have gone up by almost 40%, in rupee terms probably even more. So there is a huge sort of collateral that has developed where you still have the potential to grow. So secured lending, it could also be some of the home finance players which are going at 25%. You can see that their gross NPLs are still at 1%, and the valuations have halved. So there are really good opportunities in maybe the smaller ticket size, home finance companies, where they have pretty good risk evaluation, processes, right? Other area is, which I've been always, bullish on, are things like fabrication pipes, where we do keep on changing the tactical allocation. It went through, at one point we had say allocation of 10% plus. When things slowed down, when the valuations went up, maybe we didn't think it was worth to completely exit it, but to reduce the allocation. So probably we took it to the lower end. But now if you see, there is a huge benefit to these players, mainly because of these patra players, or the scrap converters. The price difference between say HR coil, newly manufactured HR coil, and these converted from scrap is barely 1 or 2 rupees. Right? So there is a big market for these guys to capture from unorganized, because why would anyone want to buy? So a lot of these players may completely go out of business because they don't have too much of sustainable power. They could, if they can't really sell much and make profits, in a year or year and a half they go out of business and generally don't come back. So there is a big market for these guys to capture, even if at a total level there is not much growth. Again, I'm positive on the power finance, I'm positive on the luxury real estate, but these are again not sectoral bets that
these are all bottom up.
These are all completely bottoms up, and that's how the sectors sort of build up. You need to make, because the winners can come in from spaces which may not be at a sector level growing, but it could be that in a tough market sometimes the weaker players just go out of business, and then the strong players still can grow at 20% plus, right? So that's what you want. That it's very difficult to bring in, because sometimes when the sector becomes too profitable, there are a lot of players who want to come into it. So you may get really good sort of feel from a demand side, but then supply can suddenly come up, and it just they destroy the economics of the entire sector. That's what is more important. I think the demand supply gap is most important. Demand is easier to predict, supply is very difficult to predict because you don't know where and how quick the supply will come from. And if you have more confidence about that gap remaining, even if the sector is slow growth, but if someone is taking away more market share, I think it's better to bet on that. Market share gain, I think, is one of the most resilient factor for sustaining ROE as well as resilient growth, because those players tend to grow during ups and down cycles. Whereas if you're just betting on sector play, you are completely riding the bull cycle of that sector. And if you get that bull cycle wrong,
then
if there is too much capex which goes on, it can destroy your returns. You may make money in the short run when things are just evolving, but when things stabilize, at that time you could go through big drawdowns.
Great. Samit Vartak, so good talking to you. Thank you so much for appearing on Talking Point Unfiltered. Really appreciate your time today.
Thank you so much, Neeraj.
Yeah. And viewers, thanks for tuning in.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. We understand, of course, that your money matters. And this show is geared towards speaking about very basic personal finance requirements of every individual. And oftentimes the topics that we discuss on this show come from regular life, from conversations that I have with various people. And one such conversation led me to today's topic, which is a concept called BC or Bishi, as it is called here in Maharashtra. Now, it's not really a formal subject. It is, what it is a group of people get together, usually it's women, and they pool in money. Each person contributes a similar amount, and they draw lots as to who can pull the entire pool towards them. And you might have come across this concept if you've spoken to the people that work with you in your homes, people who help with cooking for you, or maybe even the upkeep of your home. But don't be surprised if your neighbor is also contributing to a BC, because this is something that goes across strata of society. It is something that is called a kitty in certain parts of the country. It's called BC in certain parts of the country. In Maharashtra, as I pointed out, it's called Bishi. Now, what we're going to discuss today is whether or not you can speak to somebody who is currently contributing to such a program. It's not really a program, but something that is a corpus or a pool that is created, and get them into the formal economy, get them into the financial system, and talk to them about why these very concepts are covered in the formal financial system. I'm joined today by Prableen Bajpai, the founder of FinFix Research and Analytics. Prableen, hopefully I've described this in a manner that is understandable to most people. I was curious about it because I didn't know what it meant. I'm sure that you've come across this as well. Your initial thoughts, and there's no real estimate as to how much money is saved through this means, but I would assume that it's a large amount.
Hi, Alex. Absolutely. I think we've just got different names to it, but it's the same system wherein we have this informal system of saving and also credit provision for women because they're able to take out money from there when it is required without actually paying an interest on it. So it's a very interesting network that runs, Alex, across different strata, like you mentioned. BC, it's also called Committee in North India. And different names. Kitty is one name, as we go towards the middle class and upper middle class and higher societies. So different names, but the basic phenomena is the same, that it's sort of rotating. It's an association where, you keep rotating money and your money is getting saved. And without really earning a return on it, you're getting whatever you had contributed from it, at a point when you want. So, for example, if you have a 10-month rotation system and you're contributing 10,000 a month, and you need the money, let's say, in the 5th month, because most of the people you are joined with in that group are known to you, you can always say that, I require money this month, so, I would want my name to be there. And you can get that overall sum of, let's say, if you're 10 of you, so you get that 1 lakh rupee in the 5th month, but you're not paying any interest on it. That's the good part of it. And you keep contributing your share for the remaining months. So it's a medium of saving. It's a medium of getting a credit, and definitely very, very popular with women. And of course, it all runs in a way where it is a parallel economy. It is all in cash, Alex. And I think it has been helpful for women, especially in the lower strata, to have accessibility to funds, to have accessibility to a bigger bulk of money, which is not available to them, at a time when they need it. Okay. So definitely very popular, but it's still part of the informal system, and so much can be done
and so
to
many
bring
interesting,
it into the formal system.
So many interesting talking points from this, right? Because Prableen, you explained it with 10,000 rupees, but I'm sure you came up with a number just so that we could explain it easily. But what I've been told is that the numbers are actually usually much smaller. You're talking about 5,000 rupee kitties or BCs as they're called. And there are, and I was also told, by the way, Prableen, yesterday, that the term BC is what is, it's come about because there are 20 women that used to come together. And therefore it was BC, right? So what I'm trying to get at is, depending on which part of the period you come in on. So if you're lucky and you come in on the 1st month, effectively it's like an interest-free loan which you're repaying over the course of the 20 months. But if you come in later, it's like an investment that you're getting a sum on, right? So it depends on where you fall. What are the parallels that you can draw? I'm pretty sure on the credit side there are not really any parallels, because unless you're borrowing from your employer or somebody that you know, you're not going to get an interest-free loan. But there are parallels on insurance, which you just spoke about. If there is a woman in need, usually the community comes together and says, no, you can take my turn and you can take the money. Or there are investments that you can make, right?
Absolutely, Alex. I think the gains and the interest, the real gains are actually, it's not on the paper, but you're getting money accessibility. That's one advantage. But at the same time, if you look at the formal system, if we, look at the smaller token money, let's say 2,500 rupees, and if we take your example of, 20 women, so it's like a 50,000 corpus. So you get access to that 50,000 corpus probably in the 10th month or the 15th month, as and when your turn comes. If you get it in the 20th month, then you're not earning anything over there. So you're just getting your money back. But if you're getting it, let's say, if you opted for it in the second or the third month, then yes, it's like a interest-free loan that you're getting if you, used it for your son's marriage or for your child's marriage or for some other purpose. But drawing parallels, in the financial system, again, we do have a lot of instruments now with mutual funds starting at 250 rupees to with recurring deposits, with fixed deposits, Alex, where with a small amount of money, starting from 200 to 500, you can do a small recurring deposit. You can go to the bank, put money in the bank, and you can actually earn an interest on it. A small example here, a recurring deposit of, let's say, 10,000, because that's initially what I picked, at even 6.5% at the end of 1 year can give you an interest income of about 4,200, which is not bad. If you're getting a 7% interest, then that same interest amount goes up to 4,600. So here, women, I think just for the ease, for the convenience, because there is no paperwork involved, there is nothing that they really need to do, and it's just a small group where you trust each other and you pool in this money, are doing this. But definitely in terms of looking at it in terms of the returns that they are getting, they can definitely be better off if they are introduced to the financial structure where products like recurring deposits and mutual funds can be highly beneficial for them, especially because this is really a near-term product, Alex. And, this is okay for any short-term needs which they have. But there is nothing that it offers for the medium term or for their long-term goals. And that is where I think financial instruments and savings are so important.
You hit the nail on the head, Prableen, because ultimately, if you're looking at the latest data, you're talking about maybe 5 crore unique investors in the mutual fund space. And yes, you have more women that are participating and have been participating based on the latest data that Amphi shared. Of course, that was as of March 2024, where you're talking about 1 in every 4 investor in the mutual fund space is a woman. But ultimately, what you're talking about is the need for women to go out and say, okay, we're going to create these assets for ourselves, which a lot of people hesitate to do because they've seen this go on. And in fact, the reason we're talking about this, Prableen, is because a colleague of mine said that her mom contributes to a BC, and she helps her mom contribute to a BC to the extent of 5,000 rupees a month. So it's not just a particular strata of society, it goes across the board. You just have seen people do this all along. The hesitancy, and here's where I want you to weigh in, the hesitancy in certain cases, in fact a lot of cases, is that I don't want my partner or I don't want my family to have access to these funds, as a result of which I'm not putting it in a bank account and I'm not putting it in a mutual fund. How do you get around that?
That's really hard, Alex. And I think demonetization actually showed that women have always required access to money. They've always, they are great savers and they've wanted money for themselves. And I think from, that chawal ka dabba to a Louis Vuitton bag, we saw that everybody had cash in their purses because they need it. And probably they need money, they need access to money, which is not really under a scanner, that they really don't want to share it with their family because they want the freedom to be able to spend it the way they want. And this is the difficult part, Alex, that there aren't too many ways, where probably you can convince your spouse, because in a lot of families, the system says that if you need money, you just take it from me. Why do you need your own money, or why do you need to have a account in your name, or let's say I have access to funds. So these are things which are very difficult to get around. But I think more conversations about money, this is not something that can change overnight. The popularity of all these systems has its roots in the simple system that we've had, which is basically a patriarchal system that we've had in the society, where men have been entrusted with the responsibility of managing money. And only when I think people like you and money and our next generation, when we have these conversations, I think girls and women will be a part of the system where they are equally managing money. And I don't think that we'll require so many of these going forward. But I think, again, the responsibility also lies with us. If we can introduce people who are working in our homes, working in our companies, to be able to help them, guide them, with better options for accessibility to a formal system, help them through the processes, create, a slightly easy way for them to access it and manage, and yet keep it under wraps, perhaps in cases where it is required. I think it can still make some difference.
So here's a suggestion. Why don't I ask you this, Praveen, right? Because this was on my mind as well. What if the people that are watching this program take the initiative to maybe help the people that work with them create a bank account, and you now have a micro SIP. You have 250 rupees, or you have a 500 rupee SIP that is anyway available. I know there are a few people in my organization itself that say that if you put a certain amount of money, I will match that. Is that something that you suggest is a good way to go about it? Because that's a sweetener, right? Ultimately, if you're convincing somebody to do something, you put your money where your mouth is and you say that this is what I'm going to do. But if you are doing that, how do you recommend that you start? What is the best avenue if you're talking about maybe an index fund, or are you talking about a large cap actively managed fund? What would your suggestion be as to how you can start that investment journey?
I think, Alex, if I have to do it, I have started doing something like that, you tell them that this is the money that I'm giving you per month. Out of this, you save, let's say, an X amount. Let's say you say that you save 500. And then you incentivize that, okay, another, 500 is what I'll add, but you're not touching this money till the time I tell you. Or, you sort of tell them to not touch it, not sort of redeem it. And the good starting point there can be probably a large cap fund for them. It can be an index fund or a hybrid fund, depending on the goal that the person has. So let's say if a lady has a goal that, maybe 5 years from now, she wants her daughter to be married, or for her own retirement, Alex, especially the household help, they really don't have any pension system. So till the time they're young and active, they're able to work, and after that, they don't. So having some exposure to equity can be so great. And I think if, as people who are employing them, if we can have that contributing mechanism till the time they're working for you, that can be great. And I think a simple index fund, Nifty 50 strategy, or a flexi cap fund, which is large cap biased, can be a good starting point for the long term. And a hybrid fund, a balanced advantage, or a multi-asset fund for the medium term, which is 3 to 5 years horizon. So an SIP there. And other than that, I think, Alex, even a recurring deposit can be really great because, it's risk-free. So initially to get them started with something which is, going on a monthly basis, getting deducted, I think a recurring deposit also a great point. So fixed income in a recurring deposit and little equity exposure through hybrid and a flexi cap / large cap, I think can be great for them.
And simplicity is going to be absolutely key in this case. Now, moving from one end of the spectrum, and ultimately probably in the first conversation that we just had was aimed at women that are coming up in life, if you can call it that, right? Now, I also want to talk about the other end of the spectrum because just recently you had the categorization of specialized investment funds, as it's called, SIF, by the Securities and Exchange Board of India. And when it was talked about in that concept note or consultation paper, it was called a new asset class. And it was supposed to slot between mutual funds on one end and portfolio management services, AIFs, or alternative investment funds, on the other. And the minimum threshold for investment is set at 10 lakh rupees. We talked about it then, but there's some clarity that has come through now. What did you read from the latest categorization? It's a lot of long short funds that are being introduced or will be introduced. How do they work?
So a long short strategy, Alex, let's first explain what's a long strategy. So that means that you're investing, you're buying in a security with the expectation that its price is going to go up and you will eventually redeem it at a profit. So it's like a bullish market. So you hold on to a certain stock or a certain asset and you redeem when it's at profit. Or the opposite of it is the short selling. Now that means that, let's say I'm going to do this, I'm going to indulge into short selling. So I will be, let's say, trading a stock which is for 50 rupees and I borrow 100 shares of it and I sell them for 5,000 rupees. Now the price declines to 25. What I do, I again buy those, the 100 shares for 2,500, and I return those. So I make a profit of 2,500. So short selling will involve borrowing shares and then selling them at a price on the assumption that the price will decline. Allowing me, that means the seller, to buy shares back at the lower price, which I did at 25 rupees, and then return them because I had borrowed those 100 shares. So short selling is profitable only when there is a fall in the stock price. So for example, today I bought it at 50 and then later it falls to 25. So there is a profit there. So now with the new category which we have, SIFs, basically SEBI has introduced this mechanism where a long short strategy can work in the same fund, which means that part of your portfolio will be held for the long term, the regular investing which is done, but up to 25% of it, derivatives can be used and short selling will be allowed. And that of course brings in different combination altogether, because till now mutual funds were allowing derivatives, but that was only for hedging purposes, arbitrage funds, where you had the the square off had to be done, and we didn't have any sort of unhedged exposure short selling. So it's going to be a very interesting and a new combination which has come in. Until now this was only available in AIFs. So from mutual fund now which is being offered with a 10 lakh ticket size, I think people will have access to strategies which has only been available to very, very sophisticated investors. And Alex, this is being done because if you remember the consultation paper also which came, SEBI had said that, a lot of youngsters are getting tempted towards high-risk products which are unregulated with unregistered entities. So, they really wanted to bring in something that, okay, as a retail investor, if you want high risk, we'll give you something which is high risk, but at least it's regulated and it is, nicely governed and monitored by SEBI themselves.
Okay. So I want you to also try and explain why this is considered higher risk than mutual funds. And you explained the fact that unhedged positions are not allowed in mutual funds. You can, to a certain extent, use derivatives to hedge your equity portfolios in mutual funds. But why is this considered riskier than a mutual fund investment?
Right. So till now, Alex, whatever we had, like you said, that, it was, okay, fine, I buy something today. Let's say I buy a HDFC Bank and, with the prospect that I'll sell it in the future. Normal long strategy. And okay, fine, there are market corrections, but it's okay. I'm still holding on to my stock and, I'll wait for it to recover and I'll sell it probably 2 years from now or 6 months from now, whenever it recovers. Now, what happens with short selling now, which is allowed up to 25%, that actually works on, it's like borrowed sort of selling that you're doing. So you're not actually buying something and selling. You borrow those shares, so on a margin, and then you're selling them. So let's say I bought it at 50 rupees, like in my example I told you, and then the price fell to 25 and I made money. But what if the price increased? I still have to repay those 100 shares. So I'll have to, sort of square off I'll have to still settle that total trade which was started. So that is where the risk lies. So short selling is done when you're expecting the price to go down and you're working on borrowed shares. But if the price goes up, then you still have to square it off. So you'll have to, again, undergo a loss and, sort of buy at higher price, settle your trade. And that is where the risk lies. But at the same time, it also can reduce the overall risk of the portfolio, because it's considered that as compared to long only counterparts, long short strategies are actually designed to have lower sensitivity to the equity market movements, and whether it is in terms of beta volatility or the drawdowns, long short have over the longer period of time proven themselves as a very good strategy. But yes, it definitely brings in the risk of the short selling, and that is something that we don't have naked short selling. We don't sell anything which is not even borrowed. That's called naked short selling, Alex. Here it is borrowed and then sold with the expectation that the price will drop in future. So that is the element which brings in the risk into these SIFs.
Okay. Now, I was speaking very soon after this categorization came to light to a mutual fund CEO, Radhika Gupta, and she said that in her estimation, people shouldn't allocate more than 5 to 10% of their liquid corpus or their investment corpus to something like this, which I think is a far cry from what people originally might have thought, because you're talking about people with upwards of 1.5, 2 crores of corpus that can consider maybe putting 10% into something like this at the bare minimum, right? So is that something that you agree with? And what in your estimation should be the approach of people that should be investing in this?
I think, Alex, the percentage allocation would ideally depend on, every investor, it would be different. But definitely for investors, let's say, who are already exploring with the PMS or exploring with the AIF, this also lowers the concentration risk. In a PMS, you're giving 50 lakhs to one entity. In an AIF, you're giving 1 CR to a certain entity. And AIF's category 3 actually offer long-short strategies. So there, all your money, if you're buying, let's say for 1 CR, is with one person. So if your overall portfolio, let's say, is 2.5 CR, and you thought that let me buy an AIF with 1 CR, there is a huge amount of concentration risk there. So with SIFs, I feel that concentration can actually be reduced. So in a way, it can also lower the risk for those who are indulging in AIFs. And that AIF is a very biggish part of their overall portfolio. Because they can have SIFs across, let's say, 2-3 AMCs. They can utilize different strategies, different managers to manage their long-short strategies. And that may actually be beneficial for them. But yes, overall, Alex, like we always say, in markets, for example, 6 months back, the risk appetite of everyone was different. Today, it's different. So I guess everybody will have to wait, see if it actually suits their real risk appetite, if they are okay to withstand losses, if they are okay to see how these products work, how they perform. And if they are comfortable with that, then definitely I think maybe for somebody it can even be 20 to 25%, but it'll depend. But that would be a person who's actually already looking to indulge into PMS or AIFs. Well, because those sophisticated investors. For somebody who has, let's say, a 50 lakh mutual fund portfolio, maybe a 10 lakh is quite a lot already. So 10 lakhs out of the 50 is, as it is, 20% of your portfolio. So I think it will depend on the investor and how savvy are they and how much do they understand of this strategy.
Last thought, and we're speaking, Prableen, at a time when you've seen massive drawdowns in mid-cap and small cap in particular. And I'm only speaking because you had data over the weekend that came in from Amphi, data as of March 2024 that talked about the fact that in your small cap space, over 50% of that assets under management was through SIP book, right? So when you're looking at redemption in small caps, ultimately or redemption in SIPs, ultimately a large part of that is in small caps, and you're seeing that in the market. Any advice that you would have to people right now if they have overexposed themselves to small cap, either lump sum or through SIPs? Should you shift a portion of that now? Already drawdowns have happened. What's your advice?
I think the pain in the small caps, Alex, would continue for some time. So if you still have a 6-7 year horizon, it's okay to continue. Perhaps the monthly allocations can reduce by a bit. Let's say you're putting 20,000 out of the 50,000 into small caps. Maybe you can reduce it to, let's say, 15,000 out of the 50,000. So depending on what your horizon is. If you have that 6 to 7 year horizon, it's okay to continue. But if you don't, if you have a near-term goal, then definitely time to it's okay to sell even in losses and move out. If your horizon, like if your goal is 6 months or a year away, then you shouldn't think. But if you do have the horizon, then you can continue during downturns.
Fantastic. I think that covers quite a bit of ground today. I think, Prableen, we've spoken about a wide gamut of topics, and we ended with your advice to investors in the mutual fund space in the small cap category as well. Thank you so much for joining me today on Your Money Matters. Absolute pleasure speaking with you.
Thanks, Alex.
All right, that brings us to the end of this program, but there's lots more coming up over the course of the day, and I'd encourage you to stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave. which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize.
हेलो एंड वेलकम टू महाकुंभ टेल्स बाय अमीश त्रिपाठी। अभी तक आपने कुंभ की कथाएं अमीश से सुनी। अमीश, अब हम पहुंच चुके हैं मैजिकल एंड मिस्टिकल वर्ल्ड ऑफ अखाड़ाज एंड साधुज। कैसा लग रहा है?
अरे बहुत सुंदर, बहुत सुंदर। दिस इज इन मेनी वेज द हार्ट ऑफ द कुंभ मेला। यही धड़कता दिल कुंभ का यही है, अखाड़े ही हैं और हम उस धड़कते दिल में हैं। आनंद मिल रहा है।
Kumbh is also this mega event. World is looking towards us, Amish, and the scale, the mammoth scale of this organizing this big event. What have we learned and what have we told the world? हम दुनिया को क्या सबक दे रहे हैं इस महाआयोजन से?
सिकता, ये मैं हाल में यूएस में गया था एक कार्यक्रम के लिए। एक इंडिया ग्लोबल फोरम ने ऑर्गेनाइज किया था, एलॉन मस्क से मिले थे हम लोग। कार्यक्रम तो अलग विषय पे हुआ था, बट वी एक्चुअली गॉट टॉकिंग ऑन कुंभ। ही वाज विद अस फॉर एन आवर एंड हाफ। और किसी ने उन्हें बताया कि इमेजिन अ प्लेस वे 450 मिलियन पीपल गैदर, ओके, एंड इज जस्ट 300-400 हेक्टेयर्स, एंड हिज माइंड वाज ब्लोन। He said, what is the population concentration? He said, इतनी ज़्यादा आबादी तो पूरे इतिहास में कभी नहीं मिली होगी, कभी नहीं जुड़ी होगी एक साथ। And the fact that we can organize something of this scale, ये दर्शाता है कि भारत में अभी वो क्षमता है। और ये सिर्फ हम कुंभ मेले की बात नहीं कर रहे हैं, it's been so well organized। आप ये जो काबिलियत है हमारी, you can see it everywhere। पूरा हाईएस्ट ब्रिज हमने बनाया है, वो सी ब्रिज जो बना है मुंबई से कश्मीर में, वो हाईएस्ट ब्रिज बना है। एयरपोर्ट्स इतने बन रहे हैं, मेट्रोज बन रहे हैं। हम दर्शा रहे हैं दैट वी हैव द कैपेबिलिटी टू ऑर्गेनाइज।
वी आर द विश्व गुरुज। व्हाट वी कैन से दैट?
विश्व गुरु तो वो है जो लोगों को रास्ता दिखाता है। हम कह रहे हैं कि हम तो विश्वकर्मा है भाई, हम कर सकते हैं।
Right,
ये अलग काबिलियत है, दैट वी हैव द कैपेबिलिटी टू इम्प्लीमेंट। एंड लुक एट the scale and the cost at which we implement these projects. सैन फ्रांसिस्को LA के बीच यूएस में एक हाई स्पीड रेल बन रहा है। कई दशकों से बन रहा है, 30-40 साल पुराना प्लान है और अभी भी बस 2-3 किलोमीटर बने हैं। एंड देव स्पेंड hundreds of millions of dollars already। अरे उतने बजट में तो हम लोग पता नहीं कितने शहरों के मेट्रो बना देते हैं।
What was special about this year's Kumbh? Was it 144 years? Was it 45 days and 45 crores? How was this Kumbh different from the other Kumbhs which we have seen till now?
I think it's a confluence of various factors. ये हम सबकी ज़िंदगी में सिर्फ एक बार ही आएगा। The planetary alignments were such कि ये वो extra special कुंभ है। तो obviously कई लोग जो शायद कुंभ में ना आते, महाकुंभ में तो आएंगे, क्योंकि ज़िंदगी में ये अवसर दोबारा कभी नहीं मिलेगा। तो so many people I know who actually who weren't even that religious, लेकिन कुंभ में आ रहे हैं एंड कुंभ में आके धर्म से जुड़ रहे हैं वापस। You know, they're getting religious once again। तो that first thing is the opportunity, ठीक है, because of the planetary alignments। Second, हमको दिख रहा है कि भारत की बढ़ती प्रगति एंड दैट राइजिंग सेल्फ कॉन्फिडेंस वंस अगेन। एक ज़माना था जब भारत में कॉन्फिडेंस बहुत कम था। देखिए, हम गरीब थे, वी वर्नट सक्सेसफुल एज अ कंट्री, टू बी ऑनेस्ट। अभी आप सक्सेसफुल नहीं हैं, इनसिक्योर हैं, तो यू विल ऑलवेज बी लुकिंग, भाई जो सक्सेसफुल है उससे हम कुछ सीख लें। लेकिन अभी जो दिखता है, देयर इज अ साइन ऑफ राइजिंग कॉन्फिडेंस। एंड जो कॉन्फिडेंट आदमी है वो अपने जड़ों से जुड़ता है, ही इज़ नॉट एम्बैरेस्ड। आजकल आप देखेंगे कई लोग हैं जिनकी अंग्रेज़ी इतनी अच्छी नहीं है। एक ज़माना होता था 20-25 साल पहले, अगर अंग्रेज़ी अच्छी नहीं होती थी तो बेचारे लोग सहम जाते थे। अभी ठीक है भाई, मैं अपनी भाषा में तो ठीक से बोल रहा हूँ, हिंदी, मराठी, तमिल ठीक से बोल रहा हूँ, अंग्रेज़ी नहीं आती तो क्या हुआ। दैट कॉन्फिडेंस दैट्स देयर, उसके कारण अगेन वी आर गेटिंग कनेक्टेड टू कुंभ। We want to reconnect to our roots.
So we
it's a confluence of various factors.
Amish, you're talking about connection. In one of my previous trips here, this is the place where I met a sannyasi from Ukraine and a sannyasi from Russia, and they were on the same page.
And they were talking to each other.
Yes.
बेर बढ़ाते यूक्रेन रशिया, मेल बढ़ाती कुंभ मेला.
बिल्कुल, बिल्कुल. So, talking about the mystic of Kumbh, you know, we are in Akhara, we are sadhus on both sides where we are walking. क्या ये सबसे बड़ा अट्रैक्शन होता है?
देखिए एक बात तो है, ठीक है, लोग धर्म से जुड़ रहे हैं, जो मजहब और रिलीजन से परे है. ज़्यादातर तो हिंदू हैं ऑब्वियसली, लेकिन दूसरे रिलीजन के लोग भी आ रहे हैं और यहाँ पे सब जो रीति रिवाज है कर रहे हैं. धर्म इज दैट विच बाइंड्स, दैट विच यूनाइट्स. तो दैट इज़ वन एस्पेक्ट. एक और बात है कि this is a reconnection to our ancient roots. We are the only pre-Bronze Age culture that is still alive. कहाँ से युग जो करीब 5000 पहले था, उस युग से जो भी सभ्यताएं थीं at that time, इजिप्ट, मेसोपोटामिया, सब ध्वस्त हो गए, सब मर गए. They are museum pieces. उन सभ्यताओं में से मात्र एक है जो आज भी जीवित है. इंडिया. करेक्ट. आज भी जीवित है. हम जो शिवपंथी हैं, हम लोग श्री रुद्रम जो वी चांट इट, दैट हिम वाज कंपोज्ड 8000 years ago perhaps, 8000 9000 years ago. आज भी हम लोग चांट करते हैं. We follow rituals like the Kumbh Mela that is coming down from
so you saying
thousands of years.
This Kumbh Mela is a symbol of continuity,
symbol of continuity, symbol of continuity. Absolutely. There's one of my favorite writers, Milan Kundera. He had written, I'm paraphrasing, he'd written that the struggle of civilization is the struggle of remembering against forgetting. Because when does a civilization die? When its descendants forget. आज के अगर आप ग्रीस में जाएंगे, वो अपोलो ज़्यूस को भूल गए, उनकी पूजा थोड़ी करते हैं. आप आज के इजिप्ट में जाएंगे, वो अमुन रा की पूजा नहीं करते हैं.
बस परंपरा को कायम रखने में, उसी स्वरूप में जो सदियों से चली आ रही है, एक जनरेशन से दूसरे जनरेशन, we have to give it to our society.
थोड़ी सी तब्दीली होती रहती है, you know, to keep up with the times, लेकिन आत्मा वही पुरानी होती है. In that sense it's perfect. It's not so rigid, इतना rigid कि भाई वो खड़ा ही ना हो, मतलब कुछ भी आंधी आए तो गिर जाए. But it's not so flexible कि कुछ अस्तित्व ही नहीं है. It's an ideal mix of rigidity and flexibility. आत्मा वही पुरानी है, लेकिन हम नई चीजें ऐड करते रहते हैं.
The credit to sustain it and carry it forward, the credit goes to our society, our families,
credit goes to our society,
to us, our country.
हमारा समाज. ये देखिए, मैं लंदन में 4.5 साल रहा हूँ. वहाँ के सोसाइटीज़, वहाँ के फैमिलीज़ कई हद तक डिसफंक्शनल हो गए हैं, बिखर गए हैं. संप्रदाय, कम्युनिटीज़ बिखर गए हैं. मेरा एक दोस्त मुझे एक क्लब में मुझे बताया गया था कि क्लब में जा रहे हैं हम लोग. मैं वहाँ पहुँचा तो एक्चुअली एक चर्च था. चर्च को कन्वर्ट करके क्लब बना दिया है. भाई मैं क्रिश्चियन नहीं हूँ, बट आई वाज ऑफेंडेड कि यार ये क्या कर रहे हो यार. लेकिन इंडिया में ये सब ऐसा नहीं होगा. एंड इट्स प्रूफ दैट सोसाइटी इज़ फंक्शनल. आप कुंभ मेला में आइए, यहाँ पे इतने लोग हैं, स्पेशली जो लोअर क्लासेस, मिडिल क्लासेस के हैं. यू फाइंड एंटायर फैमिली इज कमिंग टुगेदर. परिवार यहाँ पे बिखरे नहीं हैं. माँ बाप बच्चे सब एक साथ आ रहे हैं, एक दूसरे से प्रेम से. हाँ, कभी कभार लड़ाई भी होती है, भाई वो भी तो परिवार ही है. और फैमिली इज डिसफंक्शनल जब आपको अपने भाई बहन से मिलना ही नहीं है, देन इज डिसफंक्शनल. तो द फैमिलीज आर एक्चुअली फंक्शनल आउट हियर. कम्युनिटीज, आप अखाड़ों को देखिए, दे आर एक्चुअली संप्रदाय, दे आर कम्युनिटीज. इट्स ऑल वॉलंटरी, बट इट्स फंक्शनल. इट्स एक्चुअली वर्किंग. इट्स आ सोसाइटी. हमारे समाज ने हमारे संस्कृति को बचाए रखा है. इट्स आ मासेस.
एंड दिस इज द फेयर वेयर वी सी 3 generations, 4 generations coming for that one holy dip.
All together for that one holy dip. And part of the ceremonies is also to connect to our ancestors. तो actually सिर्फ वो 3-4 जनरेशन नहीं, आप सोच सकते हैं आप सैकड़ों पीढ़ियों के साथ एक साथ जुड़ रहे हैं यहाँ पे. Because you connect your ancestors too.
Right. Talking about the society, the country we are in, how is this binding us all? You're saying that this is a reflection of what we are, how we have been, but it also binds us together as a country, this Kumbh Mela?
Absolutely. देखिए, what is any community, any family, any nation? It's essentially about belief and a shared spirit. देखिए, a community is a community if everyone in that community believes they are a community. तो if you stop believing it, जैसा पश्चिमी देशों में हो रहा है, community doesn't exist anymore. अगर 45 करोड़ लोग यहाँ पे आ रहे हैं, वही रीति रिवाज एक दूसरे से, ठीक है, हर संप्रदाय के अलग अलग थोड़े से, there can be some differences in the रीति रिवाज, but the basic thing is the same. You're coming here to celebrate कुंभ मेला. यही लोगों को जोड़ रहा है. एंड यहाँ पे आप देखेंगे सिर्फ अखाड़ों में नहीं, इवन अमंग द मासेस, पीपल फ्रॉम अक्रॉस इंडिया, गुजरात से लेके अरुणाचल प्रदेश तक और कश्मीर से लेके कन्याकुमारी तक, सब यहाँ पे हैं. अलग अलग भाषाएं हैं, सब मिल रहे हैं. और सिर्फ भारतीय ही क्यों, विदेशी भी आ रहे हैं यहाँ पे, इतने विदेशी आ रहे हैं. तो दे आर ऑल्सो कनेक्टिंग. दिस एक्चुअली इज अ perfect vehicle to unite people.
ये वो मेला है, वो महाआयोजन है जहाँ पर हर कोई साथ आता है.
इतने देशों के डिप्लोमेट्स आए, यूरोपियंस, अमेरिकन, अफ्रीकन, एंड दे वोंट नो द ट्रेडिशनल रिचुअल्स. लेकिन वो यहाँ आ रहे हैं, इज्जत से आ रहे हैं, दे आर एक्चुअली टेकिंग पार्ट, दे आर लर्निंग समथिंग, एंड इन दैट सेंस दैट इज समथिंग दैट कैन बी लर्न फ्रॉम द कुंभ मेला.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
देखिए, इस स्तर का ऑर्गेनाइजेशन कभी इतिहास में नहीं हुआ है. 45 करोड़ पीपल गैदरिंग टुगेदर. भाई, इतनी आबादी तो कभी इतिहास में कभी भी एकजुट नहीं हुई.
Amish, we saw the foreign dignitaries visiting Kumbh for their holy dips too, and हमने ये भी पाया कि ये वो जगह है जहाँ आस्था रखने वाले आते हैं. People who have faith, people who want to research, researchers आते हैं, and also people who are like जिनकी जिज्ञासा है, जो जिज्ञासु हैं. तो ये हर तरह के लोग और हर तबके के लोग को अट्रैक्ट करता है ये कुंभ मेला. इसका रेलेवेंस आज के दिन, हम बात कर रहे हैं सदियों की परंपरा हमने कायम रखी है, लेकिन आज के दिन इसका रेलेवेंस क्या है इस मेले का अगर हम देखें?
नहीं, एक तो देखिए, इवन अमंग द डिग्निटरीज एंड द लीडर्स हु कम, आई वुड क्लासिफाई इट इन टू ग्रुप्स. एक तो वो हैं जो धार्मिक संप्रदायों से आ रहे हैं, हिंदू, बुद्धिस्ट, जैन, सिख. तो आपने देखा होगा द किंग ऑफ भूटान वो आए थे, प्रधानमंत्री जी, ऑफ कोर्स किंग ऑफ भूटान को ऑनरेबल चीफ मिनिस्टर योगी जी लेके आए थे, ऑनरेबल प्रधानमंत्री आए थे, होम मिनिस्टर जी आए थे. तो जापान के एम्बेसडर आए थे जो बुद्धिस्ट हैं. जो अगर धार्मिक संप्रदाय के लोग आ रहे हैं, सो दे आर कमिंग विद द ट्रेडिशन, जो यहाँ पे तो आना ही है. यू वुड हैव सीन द वे द जापानीज एम्बेसडर बिहेव वाज लाइक, और इवन द किंग ऑफ भूटान, लाइक ही न्यू द रिचुअल्स कि क्या करना है, क्योंकि वो बुद्धिस्ट हैं. लेकिन व्हाट इज़ गुड इज़ एक्चुअली इवन नॉन धार्मिक रिलीजियस पीपल आर कमिंग. इतने देशों के डिप्लोमेट्स आए, यूरोपियन, Americans or Africans, and they won't know the the traditional rituals. लेकिन वो यहाँ आ रहे हैं, इज्जत से आ रहे हैं, they're actually taking part, they're learning something, and in that sense, that is something that can be learned from the Kumbh Mela. कि देखिए, आप अपने रिलीजन की इज्जत करिए, कोई मना नहीं कर रहा है, इसका भी आनंद लीजिए. It's like an approach of mutual respect. It's not कि मेरे रिलीजन को इज्जत देने के लिए आपको अपने रिलीजन का तिरस्कार करना पड़ेगा या वाइस वर्सा. So that to me is the lesson from the non-dharmic religion foreigners who are coming. And then of course, as you said rightly, it's not just the leaders, it's many academics, many thinkers, because this is a place where you can learn on spirituality, on culture, on so many things, correct?
I met a group of photographers, Amish, who had just come from Switzerland and some parts of Europe to click pictures. And these are the images they capture and go. See a Hatha Yogi who's raised his hand for so many years and doing his Hatha Yoga. ये वो मेला है, वो महाआयोजन है जहाँ पर हर कोई साथ आता है. जैसे आपने सही कहा, across all religions, across all countries, across all languages, people are here just for an experience, even not for a holy dip, maybe for experience, not for your faith, not for your religion, So, and that is what is binding the world, not even a country.
Yeah.
Is that correct?
Most of us have come here for religious reasons, particularly the dharmic religions. But I've seen so many Indians from other religions, जो हिंदू बुद्धिस्ट जैन सिख ना हो, मुसलमान हैं, क्रिश्चियन हैं. मेरे कई मित्र हैं जो ऐसे आए हैं और वो पूरी श्रद्धा के साथ आ रहे हैं. एंड सो दैट इज़ वन एस्पेक्ट. लेकिन कई जो विदेशी हैं, कई फॉरेनर्स हैं, फॉर देम इट कुड जस्ट बी अ कल्चरल एक्सपीरियंस. वो भी ठीक है. मैं प्लेन में मैं 2 महिलाओं से मिला था, दे फ्रॉम ऑस्ट्रेलिया, एंड दे एक्चुअली जस्ट, उनके दिमाग में बस ये था 450 मिलियन पीपल गैदरिंग, वी वांटेड टू कम हियर. लेकिन जब वो आ रहे थे प्लेन में, नोटिस पूरी इज्जत के साथ आ रहे थे, रुद्राक्ष माला पहना था, पढ़ रहे थे इसके बारे में, तो दे वर कमिंग विद रिस्पेक्ट. तो उनका सिर्फ कल्चर नहीं, कुछ मतलब आध्यात्मिक फ़ायदा भी होगा उनका.
So Amish, the Mahakumbh Tales journey has been quite inspiring and gave a new perspective, not even to me but even to our viewers and audience. How did you like this journey?
I absolutely loved it. I was going to come here in any case, but thanks to NDTV, you guys brought me here and made the experience that much richer. Thank you so much, and thanks to all of you for joining us in this program. Om Namah Shivaya.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome, you're watching The Big Question. I'm Tamanna Inamdar. Being a full-time investor in the stock market as a career choice is something that has picked up in the post-COVID era and is growing from strength to strength. It's a trend, in fact, which has grown stronger even as market returns have improved. More and more young people in general are investing in the Indian equity market, which has witnessed a significant demographic shift post-COVID. Nearly 50% of new Demat account holders, for example, are under the age of 30. This is as per the NSE investor data, which says investors under 30 now account for 40% of the total investor base, which was just about 22.9% before the pandemic. In fact, as per a recent survey, 45% of young Indians see stocks as their preferred mode of investment. And now that stock markets are in a slump, the question is about what next. Now, in recent days, there's also been conversation about what the next generation of entrepreneurs is doing, big family businesses, where the next generation is looking more and more at managing their family offices and investments more than anything else. In that sense, making money off money has become the goal. Right now, it's a painful decision that has been made because of what is happening in the markets. Over 450 of Nifty 500 stocks have declined in February. In fact, Nifty has recorded its longest monthly losing streak in 28 years. The index is on its longest losing streak, like I mentioned, since November 1996. Now, in this backdrop, the big question we're asking is, how do you continue to be a careerist in equity investments at a time like this? Is a career in equity investment still a viable option? If you want to continue, what is the kind of mindset that you have to bring to the table? Is it time to maybe dust off your old degrees and go look for a regular job? Or is this something that you can continue to do as a career? To speak on this aspect, I'm joined by Ajay Bagga, market veteran, with us today. I'm also speaking with Nitin Dharmawat. He's CFA and co-founder of Aurum Capital. Niharika Sondhi, founder and director of EdNet Consultants, is with us on the show, and I'm going to be talking to her about career choices. And Dr. Anjali Chhabria, director at Mind Temple, who's a psychiatrist, will be talking to us about the mindset required to stay through, to hold through tough times. So with that context, let me begin the conversation with Mr. Ajay Bagga. Ajay, great to have you on the show as always. And I thought this is an important topic because whether you get this information through stories around you, it is very clear that more and more people have chosen full-time equity investing. They could be graphic designers who've now become full-time investors. It could be people with professions or jobs or even businesses who've decided that they have better returns in equity investing. They are having a hard reality check right now, isn't it?
Yeah, I think, and it will get worse. So I have seen it 4 times, Tamanna, in the last 35 years. The first time was during 1991, during Harshad Mehta time. The second time was the .com from 97 to 2000. Then again from 2005 to 7, we saw this. And now finally, this has been a big surge over the last 4 years post-COVID. There has been very easy access, nearly zero brokerage kind of online accounts with which you can trade. And there has been a gamification of investments. It's become a video game without realizing the ramifications and the consequences. When the market went up, everybody thought it was their own skill set which was contributing to it. And now when we have had a mild correction, people are realizing that they aren't so skillful. So it's nothing new. It happens in every time the markets go up fast and furious. This kind of misjudgment of risk and misjudgment of inherent skill sets happens. People take money out of businesses and start investing. Mr. Uday Kotak spoke about family offices getting into fund management rather than incubating new companies. And we have a cohort of youngsters who are trading, trading for a living. The SEBI data is telling you 99